Here as well, economic slowdown and discretionary spending could impact the demand. So this is the overall view of SWOT analysis of Waterways IPO.
Okay, all right. Thank you so much for that, Mahima. That's all the time we have. Quick market check before we wrap up for the morning, and just look at where the Nifty is. Maybe you can pull up the intraday. There you go, about 0.5% up. We went above 24,000, but that's seeming to be a tough hill to climb. So maybe we'll sustain. That's all the time we have here. So thank you for watching from all of us who are presenting the show and all of us who put it together. But stay tuned. All the action continues on the other side.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industry.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Bitcoin below $59,000 on macro concerns. Australia crypto travel rule coming soon. UK FCA publishes final crypto rule book. And lastly, Trump's crypto income tops $1.2 billion. Now, of course, Bitcoin is below that $59,000 mark on macroeconomic factors. The reasons include leveraged long liquidations and institutional selling pressure at the quarter end. Now, for the crypto investors, price action is likely to normalize on macro developments in the coming sessions. Also, Australia will soon implement stricter rules for crypto transfers as its travel rule comes into effect on Wednesday. For users, this means additional sender and recipient information which may be required for certain crypto transfers, and for exchanges, this becomes a stronger compliance. The Financial Conduct Authority has published its final UK crypto rulebook, setting an October 25, 2027 start date and a formal licensing regime for exchanges, custodians and stablecoin issuers. The framework is set to provide more clarity and give regulatory support for the investors. And lastly, US President Donald Trump reported around $1.2 billion in crypto related income for 2025. According to ethics filings, nearly $550 million came from his ties to World Liberty Financial. This is the crypto platform which is backed by Trump family. And before we wrap, here's a quick check on the crypto prices over the last 24 hours. We see there is a downward pressure coming, especially for Bitcoin and Ethereum. On the other hand, Solana trades flat. Key levels to watch out for would definitely be between $58,000 to $60,000 in the current level marks. Well, now time to take a look at the crypto strategy for the day. Here's what's to keep in mind today. The market outlook is bearish pressure right now. Overall, the risk of sentiment is still there. And if you look technically, the oversold conditions suggest there might be a potential relief rally going ahead. The Bitcoin support levels, that has come down by $1,000 from the last time we checked. Now it ranges between $57,000 to $59,000 per levels. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all in this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
From the order book for FY27?
Yeah, in case if we talk about order books, yes, we have fabulous responses from the Kamega season. The important thing is that now in August we will be coming up with our new store and not store. We are just coming up with a new launch of design because we are working on something really great. So we are really optimistic and we feel that it will be accepted well because
this is excited to bring up a new
collection. It will be
collection. Yes.
So we being called as trendsetters in our community till yet, and I think now we will be coming more expanded.
We'll get global with the same word.
And with that, what are your expansion plans in terms of new units being set up on new product lines? And also you spoke about exports. So where does that go?
We have actually planned a lot of, to begin up, I think we're coming up with the first store of ours in Jaipur. That's going to be approximately 32,000 square feet store. And probably we're expecting it to finish by the end of this year. So that's one B2C thing we're gonna look after for.
We are looking for multiple stores,
B2C
yes. stores to just bring this jewelry to the people where we were not able to show. So more stores all around in different geographical locations will bring this product innovation of ours in front of all the ad users, and I think that will be something.
We have also added a lot of B2C shows, exhibitions, reaching people where the product cannot reach as of now. So we're doing multiple shows now. As far as global is also concerned, we are looking after some good shows globally as well. So we want to begin up with some exhibitions outside, and then we will probably gradually take it further from there. Yes.
So you've primarily been B2B platform, and now you saying that B2C. Yeah. Any plans for going D2C and catching the retailers?
Yeah, obviously, D2C is one of the part of the. I think it's a part of designer jewelry ecosystem.
Yes.
So D2C by itself is very important. We are working on Gen Z jewelry a lot in Kundan Polki now. Right. So that always needs D2C because Gen Z is always an online buyers most of the time. So we find that we will be catching that also.
Right.
All right. And what is the mix of online versus offline as of now, if you would like to tell us?
So basically this jewelry is an art jewelry, and any art cannot be that much. If I talk about the main bridal and artistic pieces, they will be they are always bought by trying them, seeing them, how they look on you and how you look with that piece. So it's very important to see and try the piece in front. So I think onlines are still not workable, but yes, if we talk about that smaller jewelry, Gen Z, yeah, they have that. They have definitions, they have detailings online. They can see that, they can buy that. But for a bridal piece, they will have to come to us to buy.
Oh, so majority is still offline, about 80 to 90%.
Yeah, that's offline. That's offline. Yeah,
all
that's
right.
the specialty of this jewelry. It creates interaction. It creates that happiness to the bride.
We're actually selling story. We're selling an art. So that cannot be sold online like how we want to.
It's an emotional time for a bride to buy her bridal jewelry, getting the guideline from the parents, from the jeweler, who's just going to tell her that which will be the best for her, what's the best of the season, and what's new.
Any future plans for the bridal segment to grow, because it's a very resilient segment for you?
So as I told you just now, that Rambajo is an innovator. So we are innovating, we are blending, we are actually we are bringing together art forms, and we are creating very different line this time. I just shared something with you which will be coming up. We are blending art forms, amalgamating different arts from all over the world, bringing them together, joining them to create an aesthetic piece of Kundan Polki. And that, I think, will make it one of its kind.
Our new collection is going to speak by itself. What the question is exactly.
You can call each piece being a limited edition now.
Yes, exactly.
So, and as the kind of response and awesome support we got from people, I think we are so much excited to go for that.
Yes.
And lastly, that one differentiator, because the jewelry space is getting really crowded now and a lot of new players coming in. What will be that one factor which will sort of sustain you?
I think by itself you've answered by yourself only.
No, but I'll just tell you one more thing.
Many
in fact,
people are coming
it's just about when you create something, you get that feel of creating something. It's like how relaxed are you? How comfortable are you? So by the kind of response and the kind of happiness we are on now, I think we will be creating something fabulous.
So innovation will be the key.
Innovation, absolutely.
That will be the key.
And I think as many people get into the trade, that boosts our energy as well.
Yeah.
We are so happy that people want to go by what we are exactly following. So that's a motivation by itself actually.
We feel blessed.
Yes, exactly.
All right. Thank you so much for speaking to NDTV Profit.
Thank you so much. Thank you.
All right, so So that was, of course, the management of Advait Jewels. A significant listing is what we saw in the case of this particular counter, an uptick of almost 36-37 odd percent. Now it's cooled off a tad bit at that around 30% mark. But let's take a quick look. Of course, you're watching us Profit here at NDTV Profit. I'm Mahima Vachajani, and with me is Puneet Zaveri. And this is a show that gets all your stock-related queries answered. We'll quickly start taking all your stock-related questions. But before we do that, a quick check on the markets. Let's try to pull up the Nifty 50 after a couple of days of pressure on the index. We're now seeing an uptick of around 0.5 odd percent, but we are below the 24,000 levels, holding about the 23,900 odd levels for the Nifty 50. Let's try to pull up the heat map as well to see as to what counters are contributing to that gain. You have Nestle topping that chart, up 2.6%, followed by M&M up 2.5% as well. Adani Ports also up by about 2.4 odd percent, and Eternal also doing fairly well. A lot of consumption names, in fact. You have HUL, Asian Paints also doing fairly well, and auto names also doing well. But on the flip side, IT Pack, yet another bad day for the entire sector. Tech Mahindra, HCL Tech, both down in that range of 2 to 1.5%. Hindalco is seeing no respite since the last so many days on a downtrend. 1.6% of a downtick is what we're seeing today as well. And Dr. Reddy's is also one of the counters that continues to be under pressure. But the Bank Nifty is hovering around the 57,700 levels, an uptick of 0.3 odd percent, so slightly underperforming the Nifty 50. But let's also pull up the sectoral heat map and see as to what sectors are doing at this hour. And you have media topping that chart, up 3%, followed by FMCG and realty doing fairly well. But pharma, metal and IT continue to be under pressure. Let's also pull up the advanced decline ratio and see as to what that ratio is indicating, because the mid cap 150 and small cap 250, at least the small cap 250 is in line with where the benchmarks go, but the mid cap 150 is still underperforming the benchmark, so just up by about 0.16 odd percent. So that's, of course, with regards to where the markets go. But let me welcome in our guests for the day, who are going to be answering all your stock related questions. We are now joined by Amit Goyal, CMT, SEBI RA partner and co-founder at Blue Oak Wealth, and Avinash Gorakshakar, founder and head of research at Avinash Research Mentor Services, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you, and thank you so much for waiting by. The first question that we have is from Ram, who is writing us from Chennai, asking about Kotak Mahindra Bank. He's got around 500 shares at the levels of 368 is what he's purchased. He wants a fundamental view on this one and wants to know as to what should be the way forward for this one. Avinash, I'll come to you on this one, because especially after the announcement of acquiring of the Deutsche Bank, how are you viewing this development coming in? And considering the other fundamentals, would you recommend him to continue to hold?
Yeah, good morning. I think he should continue to hold, because this acquisition, as regards the Deutsche Bank retail, business, it's going to definitely add a lot of muscle, for the company going forward. Maybe the numbers could stack up better, maybe in the, September quarter. But I think clearly the deal has been priced pretty well. I think the markets have also liked the deal. And I think most importantly, in terms of asset quality, in terms of disbursement, I think Kotak Mahindra Bank has always focused on quality, and obviously its asset provisioning has been always prudent. So I think if you can hold on for the next, say, 12 to 18 months, Kotak Bank could definitely give him a decent risk reward. So, in the short term, the stock may remain a little bit of a slow mover. But yes, definitely from a longer term perspective, a lot of value could be made. So continue to hold.
Got the view, and rightly so, Avinash mentioned that it could be a sideways momentum. You've also seen a management change expected in the next couple of quarters as well. Because, of course, the current management doesn't want to extend post the term ending in December. So that will be something to watch. But let's go across to our first caller for today. This is dialing in from Mumbai itself, and Udit has a stock query for us. Udit, good morning. Welcome to the show. What's your query?
Good morning, Puneet. Good morning, Mahima, Avinash ji and the panel. Good morning. My question is the burning question of the day. It's on KPIT Tech.
Okay.
I have 100 shares at 512. Right. Today the shares are down because of the recent guidance, recent announcement by the companies. My question fundamentally is the stock still looks good for adding more at the current level? Number one. Number two, I'm ready to hold on for another 5-6 years. It's not a problem. Although I sit on a profit of 10%, I can still hold on. So Can I add now or just sit tight?
Well, Udit, you're definitely courageous. I'll tell you that, because you've not sold it from that 1300 mark that it's been, falling in. So, pertinent question for you in that sense. But Avinash, KPIT Tech definitely one of the casualties for the day, right? I mean, the IT names are being picked apart one by one. Would you recommend Udit to buy more, or should he just continue holding his shares at 512? What's your opinion?
No, I think Puneet, better to hold on, because see, the numbers which are going to come Q1 are one part, but the commentary which is going to come after the Q1 numbers is going to be very critical. In fact, the management has reiterated that Q2 will be a good quarter. They've given some clarification to the exchange. So I think, most of the damage has been done today. But I think the clear message from the management is that Q1 numbers are not going to be good. And I think it's better that, we wait for the numbers, get a little bit of clarity, because I think this business has become very volatile. And I think the markets, as well as most of the investors, specifically the institutional funds which hold KPIT, would prefer to wait and, get some clarity from the management as to how the runway looks going forward. So I think rather than buying and the falling knife now, it's better to wait for some time. The Q1 numbers will be out very soon, and after which we could take a constructive call whether we should go forward in averaging the stock.
Okay, better to wait for some time with regards to where KPIT Tech goes, down 15% as we speak. But the next one is on Pidilite. Our viewer Prashant wants to know as to what could be a good entry price for this one. Amit, I'll come to you on this one. A very good morning to you. Your view on the charts for Pidilite?
Yeah, good morning, Mahima, and thanks for having me. Pidilite looks good at 1550 levels. It has been in a recent strong momentum on the upside, right from 1270 levels and trading at around 1580. So any dip towards 1550, 1500 levels, 1530 levels would be a good opportunity to pick up on retracement for targets of about 1610, 1650.
Got it. Well, it's now time to start the rapid fire round in this edition of the show. Amit, as well as Avinash, the drill. Keep your answers as short as possible so that we can take as many queries in the next 3 minutes. The first question coming in now, and this one, it's from, actually we've taken this question, so let me take another one. This is from Dr. Lavanya from Iluru, wants to know about Apollo Microsystems. Would you recommend, at this point of time to continue holding this counter, Amit? Fresh buys recommended or no?
Fresh buys recommended at 377 levels for targets of 450.
Okay, the next one that we have is from Manoj Srirangam. He's asking about Meesho, whether he can go ahead and buy this at the current market price from a slightly long-term perspective. Avinash, would you recommend that?
No, I think as of now, avoidable. Wait for the Q1 numbers.
Next one's from Ratish Nair on Motherson. He's been holding shares at 152 odd, asking what's the outlook. We've seen actually, Avinash, guidance being cut in from players in China as well, and you saw all those global companies being corrected. Is it still a good buy?
Yeah, I think, if the investor can hold on for the next, say, 12-18 months, I think one can definitely average at the current.
Okay, Apollo Hospitals or Max Healthcare, which one is a better bet from a 1 to 2 year perspective, Avinash?
I think Apollo definitely deserves a premium multiple, and I think it's one of the largest player in the hospital space, so Apollo Hospitals would be my choice.
Ram from Chennai is holding on to Reliance Industries at 1,400. Should he continue to hold for the next 1 year, Avinash?
Yeah, I think he should hold on.
Okay, Persistent Systems, can I buy at the current rate? Vishwanath Reddy from Andhra Pradesh wants to know. Amit?
I mean, yeah, after this recent fall of 3 sessions back, it looks like a decent buy because it is oversold on multiple levels. So, yeah, buy with a stop loss of 4,245.
Lalita from Chennai wants to know about Forging. She's been holding the shares for the last 2 years at 676. Avinash, would you recommend to average down on Forging right now or just continue holding her existing shares?
No, I think she can average considering the fact that Forging is a very large player to the commercial vehicle segment. So with the series cycle improving, I think definitely good days are ahead.
Okay, Bank of Maharashtra is the other one. Ravi from Sydney bought it at the levels of 65 rupees. He wants to know whether he can sell, continue to hold, book profits. Amit, it's seen a significant run up. Is there more runway left or should he book his profits?
I mean, as long as the momentum is carrying it up, hold on to it with an invalidation or a trailing stop loss of 86 levels.
Brigade Enterprises bought by Biswajit from Kolkata. He's holding shares at almost 644 odd. So he's currently sitting in a loss. He wants to know if he should hold on for the long term, Avinash.
Yeah, I think one should hold on for the next 12 to 18 months.
One of the counters with highest return potential in the mid-cap space is Brigade Enterprises. But moving on, the next one is on Crompton Greaves. Kavita from Australia has bought around 1,000 shares at the levels of 307. She wants to know if this could go back to her buying price or should she book her losses. Amit, your view on this one?
I mean, it's a stock which has not moved up too much. It has given up a lot of its gains. So I would hold on to it. If it crosses 266, then I would exit the stock. Hopefully, it should go back to 310 levels.
Next one's coming on Paytm, bought at 1167 by a viewer Khurshid. He's been holding for the last few months, Avinash, asking if he should continue to do so.
Yeah, I think, now most of the problems have been sorted out. So I think over the next, say, 12-15 months, it's a good hold as of now.
Okay, Thermax is the next one. Priyanka has bought 40 shares at the levels of 3249. She wants to know whether she should book out, continue to hold, and what should be the target. Amit?
Yeah, continue to hold again, similar view here. And if the stock goes below 4,800 or 4,600, that would be my invalidation or TSL level. Continue to hold on to momentum stocks.
The next one coming in now, and this one's on Reddington, bought by Sundar from Chennai at 800. Now he bought 800 shares, but at 150 odd. So he's currently sitting in profits. Can he book out, Avinash, now, or should he wait because the iPhone price have been increased? So I think a revenue impact would be seen, right?
I think he can wait for maybe a couple of quarters and then take a exit call.
Got it. Well, that was the last question of this rapid fire, but we'll take a very short break, come back with a lot more stock-related queries on the other side.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jewelry. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already done so, do start sending in your queries on WhatsApp. But very quick check of the markets right now, because you're seeing again a move on a lot of individual names today. So pull up an MCX reacting on the back of a brokerage note initiation in the morning as well. The stock was trading up 4.5% and continuing to do so. Pull up REITs as well, up 10%. We of course spoke about KPIT Tech with Avinash, that's down 15% and continues to be under pressure. But REITs is the one that I'm talking about. Let's pull up REITs right now on screen, and the move continuing on this counter. You've also seen very surprisingly on a day where tech continues to be under pressure, Hexaware Technologies is actually doing pretty well. Stocks trading up almost 4.5 to 5% now. Hexaware Technologies, yes, there you go, 5.2% up, and also some good moves coming in on a bunch of financial names as well. So continuing to monitor all of those moves, but let's go across to Hyderabad now. Murli is dialing in for a stock-related query. Murli, good morning, welcome to the show. What's your query?
Yeah, good morning, Maima ma'am and Puneet sir, and I really love the NDTV Profit, especially during the pre-market return of Fujbora and Paracher. So my query is on First Source Solutions, FSL. I have 50 shares at 280, currently I'm at loss. Should I continue for another quarter or a year hold on, or should I totally exit?
Well, Murli, firstly, thanks so much for staying tuned in from pre-market, and we of course love having your questions on Ask Profit as well. Let me go across and take this query with Avinash now. Avinash, on First Source, yet another that the IT counter space which has been slightly under pressure. What's your view? Should he continue to hold at 280?
No, I think Puneet, if you can continue to hold for a slightly medium to long term time frame, then I think First Source is a very large BPO, and I think it has a lot of marquee customers. So definitely growth will continue, but at least for the quarter one, we feel that growth could be a little bit of muted and the margins could come under pressure. So I think if he's looking at the near term, then I think there could be some disappointment on the numbers. But yes, from a longer term perspective of say 12 to 18 months, he can continue to hold good structural long term prospects. But in the short term, there could be a lot of volatility.
Okay, all right. So that's the view coming in on First Source Solutions. The next one that we have is on the recent, in fact, today's listing, that is Advait Jewels, and our viewer Puneet Saxena from Ghaziabad has, is kind of watching this one and wants to know if he could take an entry into this one. Avinash, any view on this recently listed one? It had a very high interest from all categories, right? The subscription overall went above that 200 times mark. Plus, it got listed on premium as well. Do you think that after such a heavy listing, it makes sense to kind of enter this one?
No, I think, this company operates in a very niche space. It's a Jaipur-based company. They make jewelry, under the Jadao, segment, and which is a very unique segment. It's handcrafted. And most importantly, if you see the run rate for the company in the last 2 to 3 years, profitability and top line growth has almost doubled. So I think, if an investor wants to buy now, he has to probably wait for the next 12 to 18 months. But yes, I think definitely the story looks interesting, but one needs to take a slightly medium to long term view here.
Got that view, Avinash. The next question coming in now, this is from Saurabh Shah from Mumbai. And viewers, you can also call us for stock-related queries. He's asking about Kaynes Technologies for the long-term perspective. If it's a good time to enter. Avinash, a lot more historical evidence doesn't suggest very strong output, right? Because you have to wait for the next 2 to 3 quarters for the targets management has given. Would you rather wait?
Yeah, I think, Puneet, better to wait, because these kind of companies which are trading at premium valuations, I think any significant kind of a negative surprise, in the coming quarter or maybe ahead would be little negative for the stock. In fact, in the earlier, few months, I think there were a lot of compliance related issues also. It's better to wait, let the quarter one number come out, and I think let the markets get a feel of what is the status on the semiconductor project, because clarity is very important, and I think it's better to wait for Q1 numbers.
Okay, all right. The next one that we have is coming in on Mopin Labs. Now, this is from Pratap, who's writing us from Pune. He's got around 2,000 odd shares that he bought at the levels of 62. Let's try to pull up the charts. There you go. At the levels of 62. So, slight losses is what he's sitting at. But he wants to know from a long-term perspective whether he can continue to hold or what should he do. Avinash, what would you recommend on this one?
No, I think Morphin is a very old player in the medical equipment space, and I think they did very well post-COVID. I think going forward, hopefully, the medical equipment market is growing very rapidly, and I think Morphin is a very well-known brand. So I think if the investor can hold for the next, year or so, I think he can continue to hold.
Next one's coming in on solar industries, and Vijay from Chennai wants to know a short-term view on this counter. Amit has been, rapidly growing through in the last few months, especially. Last couple of years have been strong. Is the momentum expected to continue on the charts?
Yeah, the momentum is expected to continue on the charts. In fact, it is one of our buy calls to our investors with a stop loss of 17,000 odd levels. So one can continue to accumulate at the current levels. It looks like it's primed for a breakout at the current levels.
Okay, the next one that we have is on Gulf Oil Lubricants. Now, this our viewer has bought 100 shares at the levels of 1330 and wants to know as to what should be the next course of action for him or her. Amit, on the charts, what would you recommend?
I mean, it has recently taken support at 900 levels and has come up to 1,060 levels. It looks like it is a sideways kind of a stock with a lot of weakness. So I will keep 1,000 rupee as my trailing stop loss on this level and continue to hold on at current levels.
Got that view, Amit. But the next one coming in is on Nelco. Our viewer has bought these shares at 900 rupees. This is Dulal Mitra from Calcutta. Wants to know if she should continue to hold her 90 shares for the near term. Amit, stocks at 942. What are you looking at in this particular counter for the charts? Because we've seen almost a 30% move just in this year itself. Is it a good time to book out?
I mean, it has given a very sharp move in the last few trading sessions, which has caused the stock to, come up to 940 from a consolidation level of 700, 750 levels. I would keep my trailing stop loss at 880 levels and continue to hold on to this stock because there is some momentum that I can witness here. And hopefully it should, cross 1,000 levels very soon.
Okay, the next one is coming in on car trade. This is from Sabita from Hyderabad, and she wants to know if she can go ahead and invest into this counter right now. She's not mentioned the time period, but Avinash, overall there was a Nomura note also today on car trade which suggested that OLX is something that is going to offer a strong momentum of growth going forward. Would you recommend to make an entry right now? Fundamentally, how are you seeing this counter?
I think they are one of the key players in the online, car retailing business. So I think, here if the investor wants to get in at these levels, it's better that investor, takes a staggered view. I think buy it in a staggered way and take a 2-year view because, valuations are not cheap. I think the stock has risen significantly. So it's a great business, great scalability potential. But I think it's better that you buy it in a staggered manner and keep a 2-year view.
Got that view, Avinash. But let's go across to Pune now. Rohit, who's dialing in for a stock-related query. Rohit, good morning. Welcome to the show. What's your query?
Hi, good morning. Actually, I'm holding Nilkamal Limited at 1390,000 shares.
Okay.
And I'm looking for the view 3 to 5 years. Actually, I'm looking for their, they will expand right into B2B contracts like rigid packaging and technical foam. So I just wanted to know the expert's view.
Got it. Well, of course, Rohit, you have done some research on it, but Avinash, what would you recommend on Nilkamal? Is it good to hold at that 1390 level? Stock slipped a little bit from that. Would you recommend to hold, buy more if it continues to fall more as well?
No, I think, from a long-term structural kind of story, the company is very well positioned. They are basically into plastic furniture, plastic crates, and they have also ordered retail kind of enterprise only for these kind of products. So I think, looking at the kind of trend in crude oil prices, I think raw material, obviously benefits should come for the company possibly from quarter two onwards. And I think it's got a very strong brand franchise. So I think, if you are looking at the next, say, 2 to 3 years, it's always better to, look at accumulating such quality stocks, but keep a long-term view of at least 2 years and above.
Okay, the next one that we have is on Sri Lotus Developers. Utkarsh has bought this at the levels of 176 and he's holding around 6,500 shares in his portfolio. And he wants to know if from a long-term perspective whether he can continue to hold this one or not. I'm talking about Sri Lotus Developers, if you can try to pull that up. Avinash, it's the one counter which, is into luxury and ultra-luxury segment, but would you recommend to play the realty theme via this counter, or should he shift to something else because he is sitting on loss?
No, I think he should hold on, because I remember when the IPO came in Mahima, there was a huge appetite for this stock. I think the promoters are very well established. The order book as well as the inventory is very well laid down. And I think going forward, once the Q1 numbers come out, you could get little bit more clarity on the kind of traction we could expect in the current financial year. So I would say that at least let the Q1 numbers come out and then we can take a call, but don't book a loss immediately.
Got it. Well, the next question, it's coming on Paisa Loa. Viewer has bought these shares at 55. Stock has hit, I think, an upper circuit today on the back of promoter buying. So it's up 20% now. So her question being if she should move out. I think Amit won't get an opportunity today if that up move continues. But just basis of this in the next couple of trading sessions or whenever she gets the opportunity, should she exit or just continue to hold?
I mean, she should hold on to it because we find far and few in between in the current market situation, momentum-based stocks where there is a sharp run-up and that continues. With this upper circuit, it re-validates that there is a lot of momentum in this stock from both fundamental and technical perspective. So hold on to this stock and keep a trailing stop loss of about let's say 63.50, 64. If it crosses that level, then probably take it out. Otherwise, continue to hold on and enjoy the profits.
Enjoy the profits, Amit recommends. But let's go across to our next caller from Hyderabad. Ram is calling in for a stock query. Ram, good morning. What's your query?
Good morning, team. So I do have the query on the Tata Motor PV business, passenger vehicle. Okay. So I do have 4,000 shares at 350 rupees. So I wanted to switch this completely to the M&M. So my M&M also not doing much in 1 year. So I see vehicle that the monthly sales are getting increased, so EV, GST benefits, everything is there. But stock-wise, it is not moving anything. What is the switch is valid? I wanted to switch the PV business to M&M.
And this will be from a fundamental view, right, Ram?
Yeah, fundamental and technically would also help, right? Because both are trading in the same level from 1 year.
You are right, but let me, because the things that you are looking for, of course, are good fundamentals. So let me go across to Avinash there. Avinash, Tata Motors PV, of course, majority coming in from the JLR side. Now they've given some good guidance for the next few years. Are you a believer? Should he switch to M&M? Because I think Maruti is also looking very interesting now, right? I think we have the upgrade from Jefferies also. How are you looking at either of those in terms of a preferred pick in the PV space?
No, I think Tata Motors PV definitely looks interesting. I think despite the fact that the stock has not done anything in the last 1 year, I think clearly, hopefully this year the monsoon is good, the rural demand picks up. Tata Motors passenger PV should be held on for the next 12 to 15 months. Of course, Mahindra & Mahindra is also doing well. It's got a much more diversified mix consisting of tractors, UVs and electric passenger cars. So I think clearly if you want to look at a better risk reward than Tata Motors PV, at the current level, there's hardly any downside. So clearly Tata Motors PV should be held on, although long-term prospects for Mahindra are also equally good.
Okay, all right. The next caller, I think Shubham is calling us from Bengaluru. Shubham, very good morning to you. Go ahead, ask your question.
Yes, good morning. My question is about BEML. I'm holding 22 shares.
Okay.
So like at the price of 2140. I'm holding it from last 2 years, but the stock is not moving. I'm under loss from 2 years. So should I switch to some other stock?
Okay. Okay, Shubham, got your question, and I can see that you have been a patient investor. But Amit, do you think it will at least come back to the levels that he bought for in the near future, or should he exit and book his losses and buy something else?
Yeah, I mean, from 1350 levels, it has decently given a run up, and now it is in a consolidation phase with last few sessions showing some bit of momentum build up on the upside. So I would recommend to hold on to this stock with a trailing stop loss of 1700 levels, because if it breaks the 1700 levels, then we could probably expect it to retest the 1300 levels. So unless it hold on to 1700 levels, hold on to it for possible targets of 21 and 2400 levels.
Got that view, Amit. But the next one, and it's a name we haven't discussed for a while, Shanti Gears is the next question, and Ankit from Mumbai is holding on to these shares at 520 odd. So he's and currently, sitting on a loss. He's asking if he should still continue to hold this particular counter or probably move on. What would you recommend, Avinash? There's a lot of potential, of course, but the size is quite smaller compared to the other auto anchors players. What's your opinion?
I think from a longer term perspective, Shanti Gears is a very niche player in the engineering kind of segment. And I think most importantly, they have a decent order book. So current year, Puneet should be much better. I think 27 should be much better than 26. And hopefully, I think, if the traction and the execution takes place, then I think the investor can expect a decent risk reward. So I wouldn't suggest him to book a loss. It's better that he holds on for the next 12 to 15 months here.
Okay, all right. The next one that we have is on Colgate. Nalini from Ahmedabad has got around 42 shares that she'd bought at the level and average price of 1548. She wants to know if she can go ahead and continue to hold, maybe add more. She's sitting on profits of around 20,000 rupees. Amit, what would you recommend?
Yeah, continue to hold on to this stock with a TSL of 1800 levels, 1820 levels. This stock has started to show some bit of momentum on the upside, and we should expect 2200, 2000 levels fairly soon.
I just want to quickly highlight, the flashes on the bottom of your screen as well for Hyundai, because the sales number has been materially lower than what the expectation were. So I think the numbers that we were working with was almost 61,000 odd. Numbers come in at 51,300, and the estimate there on your screen as well at 62,000. The reason being that one of its units, Mobis, actually had a fire incident in this particular month. So the company has clarified that they faced a production impact of 13,900 units, and that's essentially the difference coming through. Now, the company had already alerted in mid-month that there was an impact expected because Mobis was involved in a fire incident. We didn't know what could be some of the aspects, but they have said that they are taking necessary steps to ensure normalcy at this point of time. They're also arranging automotive parts from alternate source locations because Mobis is one of the biggest suppliers for Hyundai, especially in India at this point of time as well. So it's not very, very easy to move on from production. They had mentioned that since June 22nd, the company has resumed normalcy in production, but that big kicker actually, because you've seen for Maruti, for Mahindra, as well as for Tata Motors, we're expecting a growth of almost 20 to 50%. So given that backdrop, we were expecting a flatter sales growth of 2 to 4% growth for Hyundai, but this is definitely a lower number that we're looking at because this is essentially wiping off any kind of growth that the company was even expecting. We'll of course look at more numbers in detail post Q1. What are they expecting in terms of production being revamped yet again, but something to watch out for on Hyundai as well. But go across and take the next question now, and this one, it's coming in from on Ola Electric. Our viewer Venkat Ramani had actually bought these shares at 75. Wants to know if he should still continue to hold Amit for the next 6 months. At this point of time, Amit, it's been a very volatile counter, right? I think 40 continues to be a level that most traders are watching out for. But should he just continue to hold, wait for maybe a few months? What's your opinion?
Incidentally, it happens to be one of my buy-sell corner recommendations today, which is getting flashed on our screens. So from a short-term momentum, the stop loss for this level, this counter is 40, as you rightly mentioned. And I would, from a momentum perspective, I feel that there is a lot of upward momentum in all the EV related stocks, so EV vehicles, two-wheelers especially. So I see a lot of momentum here with a clear TSL of 40 levels. If it crosses below that, then I would exit. If not, then I'm seeing targets of 50 at least on the short-term basis.
Okay, all right. The next one that we have is from Pradeep Kumar, who's asking about Genus Power. He's bought it at the rate of 315, and he's bought it for the next 6 months. Amit, what is your view on this one? Because we've seen a good volume action coming in, good name of shareholders also kind of buying this counter. What are the charts indicating? Is it a good buy? Continue to hold?
While there has been some recent run-up, but it has been in a consolidation phase for the last 2 months and has seen very strong resistance at 340, 360 levels. One could look to accumulate around 300 to 290 levels for a range target of about 340, 360 levels. It looks like a range-bound stock with buy on the lower levels and sell at the higher levels.
Got that view. Next question, also Amit, sticking with you on Force Motors as well. Jeet from Kolkata has been holding shares at 18,890. He wants a 6-month view on this counter. What would you recommend? What are the levels that you're watching out for?
I mean, it has been a very strong performer in the automotive space, but has been consolidating for some time now. It is at the lower levels of that consolidation range. I would hold on to this stock till my levels of 16,000 gets invalidated. I would look for targets of at least 24,000 odd levels on this counter in the 6 to 12 months time frame.
Okay, the next one that we have is on IEX. Anil from Kerala is holding 150 shares, bought at the levels of 131 and wants to know if he can continue to hold, maybe add more. Avinash, what would you recommend on this one, considering the entire saga of market coupling and everything? Do you think it's still a good hold?
Yeah, I think Mahima, even at these levels, I think good value can be made. Clearly, in the electricity platform business, I think the opportunity to scale up is quite significant. So I would say that, it's better that the investor takes at least a 12 to 18 month view and continues to hold. We expect very strong numbers in the year FY27, which should, actually re-rate the stock.
Very interesting there coming in a view on IEX from Avinash. But viewers, now time for the second round of the rapid fire. Amit as well as Avinash, you know the drill. First question is coming in on Amber Enterprises. Pakshal from Jodhpur is holding shares at 6085. Avinash is asking if he should switch to Dixon instead. But I think since the company is also entering the mobile space, what's your opinion?
No, I think he should continue to hold. He's entered at the right level, and I think he could expect a decent traction in the mobile, business in FY27. So continue to hold.
Okay, the next one that we have is on Jaiswal Neco. Manthan from Ahmedabad is holding 1500 shares, bought at the levels of 40 rupees. Wants to know if he can book profit, continue to hold. Amit, any view on the charts for this one?
I mean, if he had entered at 40, he should have probably exited at 100 or levels. But even at 86, it looks decent. Keep an invalidation level of 80, 81 rupees and continue to hold this stock.
Also, Amit, on Cohance, is it a good bet for the next 6 months? We've seen multiple fundamental changes in terms of the management, but what's your view?
I mean, it has given a reversal from 270, 300 levels. Right now, I would keep an invalidation level of 400 levels. I would be an accumulator at this counter for targets of at least 530, 550 levels.
Okay, the next one is on Tata Power. Is this the right time to buy this one, or any good power or energy stock that I can enter into is what our viewer Veluswamy wants to know. Amit, your view?
Tata Power is weak. I would not want to enter into this stock at the current levels.
Coforge bought at 1418 by Dilip from Kolkata. He's asking Avinash if he should continue to hold. Is it a good time to buy more as well?
Yeah, I think he can continue to hold. I think Q1 numbers would give better clarity, but next 12 to 15 months, I think it is better to hold. He can average at the current level also.
Okay, the next one that we have is coming in from Shankar, who's writing us from Bengaluru, asking about Jyoti Labs. He wants to know if this is a good time to enter. He's planning to buy 500 shares from a 2 months perspective. Amit, would you recommend that?
No, I would not recommend this because the counter is fairly weak. It has been in a downwards trend only. So I would avoid this purely from a technical standpoint.
Okay. Next one, Amit, on Welspun Living. Our viewer is holding shares at 128 for the counter. Should he book out with his 200 shares now?
He can continue to hold on to this stock with invalidation levels or a TSL below 160. The counter is strong.
Okay, the next one that we have is Aurobindo Pharma. Our viewer has bought at the average price of 1530. 28 stocks is what he's holding. Wants to know the technical view on the charts, Amit?
continue to hold. This is a very strong stock, strong sector momentum. Continue to hold with invalidation levels of 1500 levels.
Is Tenneco Clean Air a good long-term investment? Avinash, is what Murthy from Vizag is asking.
Yeah, I think Puneet, this is definitely a good investment at the current level. 12 to 18 months is a time frame where I think the investor should stay invested. It's a monopoly business, and I think a very strong R&D skills also which the company has got. So definitely a worthwhile entry in the portfolio.
Okay, Power Grid viewer Sankar Narayanan is a long-term investor. He's got 100 shares at the levels of 340. Continue to hold. Avinash?
Yeah, I think Power Grid continues to be the largest, transmission player. Definitely, I think with the growing demand for power in the country, Power Grid should benefit. But keep a time frame of 12 to 18 months.
Next one's on JSW Steel. Sagar from Bengaluru wants to enter for the next 2 to 3 years. Avinash, at this price, after the run-up, would you recommend that?
No, I think Puneet, better to wait for a mild correction. I think it would be better to buy on declines, not at the current level.
Okay, the next one is on ONGC. Kiran from Vijayawada is holding 550 shares, bought at the levels of 254. Continue to hold, sell, Amit?
Continue to hold for invalidation levels of 225. If it goes below this, one should exit the stock.
All right, okay. So that brings us to the end of this rapid fire round. Amit as well as Avinash, thank you so much for taking out the time and helping us all answer all those stock related questions. Viewers, let's take a quick look as to how the markets are doing at this hour. Let's try to pull up the Nifty 50. It's cooled off from its day's high point a tad bit, now trading around it's now trading around 0.6% higher. So it did cool off, but it's taken off from there and trading almost at its day's high point. Let's try to pull up the heat map and see as to what has changed there since we last spoke about. Eternal now topping that chart, up 3%. Followed by Adani Ports, up 2.8% as well. Nestle, Mahindra, Asian Paints, HUL also doing fairly well. With regards to the broader end of spectrum, the mid-cap 150 is trading at the same levels of around an uptick of around 0.2%. The small cap 250, however, is doing pretty well, up by about 0.5%. The BSE 500, if we can try to pull that up, because a lot of counters, either on the back of news flow or different announcements coming in, are buzzing. KPIT Tech, of course, on the back of that guidance card. Apar Industries is down 6% as well. Tata Elxsi, Rajesh Exports, something that continues to be under pressure. But on the flip side, you have something like a RITES, which is up 12%. Gujarat Gas, Z Entertainment, that's pulling the Nifty Media up, doing fairly well, and something like an Aditya Birla Real Estate. This is also one of the counters on the small cap list, which has one of the highest return potentials as per the Bloomberg consensus estimate. So this is as to where the markets go. But with that, completely out of time on this edition of Ask Profit. But do stay tuned, because KYC is up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, where I get you very interesting companies, interesting stories, and maybe interesting alpha as well. But today there's also a very interesting company, but try to guess it. I'm sure you'll try to guess it by the end of the hints. It's a Thane-based EPC player. I'll give you more hints. Try to guess it. The stock is up 47% from March lows itself. Third hint I would like to give you, and that is they recently won a 3,500 crore order from Maharashtra state government. Last important one is of course the listing on September 3, 2025, and it's of course backed by market legends Mukul Agarwal and Ashish Kacholia. I'm sure you must be guessing it by now which company I'm talking about. The company in focus is Vikran Engineering, and yes, the company is coming for the second time in KYC after 7 odd months. So we need to see how much of that change has happened since the last time the company came, and why are we calling this company? Of course, the major reason for this is almost a 3,500 crore order coming in. Remember, the overall book is only around 5,000, 6,000 crores without this order. So this becomes very important to start our conversation with. The growth outlook, especially on the data center front, what new things the company is trying, we need to figure that out. Also important questions would be the revenue and the EBITDA outlook for the longer term. The new order win, how much incremental benefit starts coming in, order book guidance across the key verticals. They have 3 to 4 important verticals, which I'll explain you in some time. And also the execution and the raw material costing. Does that hamper the Q1 numbers? We have seen that in the industry. It's happening. Asset light model versus pure. What's the story here? We need to understand that, and the company has of course recently listed, so we need to figure that out as well. Rakesh Markhetkar, he's the CMD at Vikran Engineering. He will be answering all the questions. But let's try to understand about the company. ये company करती क्या है? EPC player, so it's definitely there. They are diversified, play in that, but which segments do they work in? That's what we need to understand. But before we start, EPC means engineering, procurement, construction. This is for the folks who are tracking the sector for the first time. You can note it down and you make it most simplified version for you so that you understand the entire story. Now the areas they work in, there is power, water, rail, electrification, solar EPC and smart metering. I explained you about data center angle also. I'll come to that in some while. They've completed 45 projects across 14 states. And the next important thing is their supply chain. They have of 3,500 plus vendors. They have stressed about the asset light business also, and having their in-house engineering and design facility. Current order book, including this larger order book, stands at 9,000 crore rupees, and that's a big jump coming in from the last time they had put in the exchange filings. Currently active in 16 states with 190 plus projects and store locations are there. So this is the entire story we are getting about the company, but it's backed by large big investors in the market. This includes, of course, Ashish Kacholia and Mukul Agrawal as well. So there's a good backing coming in. The order announcement, that is very much important. This is almost 3,520 crore worth of order coming in. It's an EPC order, but of course solar module supply is also there. Let's get into more details about this order win. This is of course from Maharashtra state government, and there is a revenue potential also at play. We'd like to get in more details about this order. That's there on your screen. The revenue potential, let's look at that number as well. As this is of course spread across the next 25 years. This is the 961 megawatt project which is there. And overall, let's just get in the final numbers and then we move ahead for the other segment as well. This is the number, 550 crores rupees. That's the projected revenue coming in, and it's a very high EBITDA margin product if you are tracking this theme as well. But moving on from the order announcements, let's understand how the segment-wise order book looks like. And largely solar is 49% of that order book coming in. And I had mentioned you that there are other sectors also which the company follows. This includes the power T&D, which is transmission and distribution. There is water and railway, but of course these are on the lower side. This is how the segment looks if you do the order book breakup. But there is also the B2G element here. PSUs and government, I have separated that. That's what the company has given. PSUs have 18% of the order book coming in, and the government, that stands at roughly 31%. But they have stated that the private sector is still the majority, 51% odd. So that's decent kind of exposure, and it's evenly balanced, it seems like. But look at the key clienteles. Who are the key clienteles for it? We have NTPC, Power Grid, Indian Railways and SGV, and these are the key clients which the company has. Of course, they have other clients as well, so that means there is an esteemed client list as well. But what we work for the company, let's talk about that. Data center theme is in focus. That is what the street is looking at. Second important thing is the large order win announcements have started coming in post its listing, so this may augur well for the company. Also, they are moving towards the asset light model which they had mentioned. The street needs some extra time for that, so we'll be focusing on that as well. Also, another important reason is the strong promoter experience, and I'll give you all the history about the promoter and his connections which are there in the ecosystem, and an esteemed client base. These are the reasons why Vikran Engineering, it might work positively, factors playing in for the company. But what may not work, and the industry in which they are in, execution risk will always be there. Of course, there's a little bit of monsoon impact also. FIDI sell-off has been coming in post its IPO coming in, the lock-in expiry coming in. So sell-off is definitely there in the demand-supply issues, and high working capital model is also there at times. If you just see the numbers, you'll understand it. But of course, pros are weighing over cons right now after the last 6 months. What has changed? But what has not changed are the KYC ratings where we judge a company, and a minor adjustment is definitely there, because instead of return ratios, it's good to actually get a company and capture them in the order book because of the inherent nature of the business. Also the usual, so the shareholding pattern, street cred, how much money has been made since IPO or during this period. Remember, the period is quite short, so take things with a pinch of salt. Valuations and outlook is also something which will get the company in. Let's start with the income statement. What's happening here in income statement? Largely 3-year CAGR numbers we have taken, and for a EPC company, this is a pretty decent number. Anything above 15-20% CAGR shows a little bit of stability, and they have actually put their concentration risk, which is there between government and private, on an evenly balanced space. So net, let's just pull out the margins also in the Q4 numbers to show you how things have moved. A little bit of dip is there in the margins, especially in the year-on-year basis, but most of the numbers, overall PAT and even revenue, seems to do a good job. Margins, you see, largely there was an uptick coming in, but now a little bit of, you could say an impact coming in. It's around 14%. We'll try to ask the management what would be the long-term average margins looking like, and is there any hit to be taken in the first quarter or not. But net prima facie, on a long-term basis, it's a strong thumbs up as well. Balance sheet, let's get in that as well. And balance sheet, it has been managed properly. And remember, the higher number of the working capital which was there, that was reduced in the IPO. That's why the proceeds were also taken in, and you can see a decent capitalization is there. Cash flows of almost cash bank balance, is of 220 crore rupees, and it's evenly managed right now also. So balance sheet also seems strong. So I've given a thumbs up. Cash flow, remember the business model is such that there might be lumpiness also, especially if you're having a B2G exposure in this industry. तो कभी पैसा आता है तो कभी पैसा डिले होता है तो कभी प्रोजेक्ट्स ही नहीं आते हैं. These are the problems which are there, and that is why I want to keep this neutral, even though the net cash flows have improved, but we need to give it more time to judge this company and even the business model. So let's take things with a pinch of salt. I'm going to give this just a neutral rating. Order wins, this is important. I've taken that. The work order of all more than 3,500 crore rupees, that is where the street is quite bullish in. But I compared the order books also and the book to bill ratios, how things pan out from FY25 and FY26, and there's a significant jump coming in. Almost 2.5 गुना बढ़ गया है इनका order book पिछले एक साल में, and it's of course growing up. Right now it's roughly 9,000 crore rupees, but these numbers are comparing FY26, FY25, which the company had given to the exchange filings. So net, I'm going to give this a thumbs up as well. But let's talk about shareholding, and my concern comes is on FIs and DIs, the institutional participation which was there IPO ke samay. After that, there seems to be an offloading, of their stake. FIs, no major change, but DIs who had entered at around 13% that has come down to 7%. So a little bit of concern definitely there. But remember, it's still backed by Ashish Kacholia and Mukul Agarwal as well. So this is also a caveat. But net, seeing these two flows, I'm going to give this a thumbs down. But apart from shareholding, let's see street cred, what has happened. Has the company made money for the investors, especially if they're investors from IPO or maybe in the middle? And we see from the IPO in 2026 so far, there has been, a negative returns coming in between 22 to 24%, but the interest is coming back. There is some smart money HNI buying at these lower levels, and you can see from March lows, stock is up almost 50%. This is the amount to look at. So it's kind of, balancing things out, and there might be some value buying at play. So it's a neutral rating I would like to give when it comes to the street cred. Let's pick up how the valuations are functioning, and valuations from the peak has corrected. The lows went as low as 12 times, but then decently for a company like this at a 21 times P, it is pretty decent, and they are going for some important new age sectors also, which includes data center. That's why the bullishness is coming in from the analysts as well. So I'm going to give this a thumbs up when it comes to the valuations. The outlook, that's what we are focusing on. This is the theme which we need to understand and ask the management more and more about their plans, because this theme gives a good premium potential to a company. Important point, cash flow positive. They want to be the cash positive, you could say, by FY27 end. This is very much important for the working capital ratios. FY31 target, the revenue is at roughly 7,500 crore rupees. That's what the management has spoken about. And if you talk about the EBITDA, they are targeting 1,000 crore plus. So this is of course a 5-year planning. Profit margin, the long-term target, that's expected to range between 8 to 9%. So these are the important numbers to look at. And the NOP solar project, that revenue which they have won right now, each year they'll make 550 crore rupees. But actually it's for the entire 25 years, I'm sorry. This is the amount you should be looking at. So outlook remains strong. Let's give you the entire picture about the total KYC ratings which we'll be allocating for this company. Largely, I really like the income statement and balance sheet, and there has been a sharp improvement over the last 7 months of the company, and the order book, that is where the bullishness is coming in the market. Shareholding concern is definitely there as FIs and DIs are reducing their stake. Valuations seem decent, and outlook, especially on data center and new large solar project win, is something which the street is liking it. Let's give you the overall rating. It's on the higher side of the average rating. It comes in at roughly 6 out of 8. But let's do a revision of the last time when the company had come. It came on December 2025. We had given it 3 out of 8. But there is a stark improvement in the company now. It's coming in at 6 out of 8. So Vikran Engineering has actually done really well over the last 7 odd months, and that is the beauty about KYC, where we give you the entire performance of companies getting featured at KYC. But joining us, we'll have the management of the company, Rakesh Markhedkar. He's the CMD of the company, and I'd like to give you some interesting tidbits about him. He has almost 35 years of experience, and he's a turnaround specialist. If you look at it, he had leadership positions in L&T, KI Industries, Bajaj Electricals. So a strong, you could say history and ecosystem presence. He's the first Indian CEO at Primary Power Projects. It's a UK-based EPC company, and education, of course, from BITS Pilani and IIM Bengaluru as well. But this conversation will continue, but shortly after a break. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hello and welcome to KYC. Now we are joined in by Rakesh Markhedkar. He's the CMD at Vikran Engineering. Rakesh, it's always a pleasure to have you with us at NDTV Profit. And from the last time since we spoke around 7 months ago till now, there seems like there's a stark improvement in the company. And also the market is trying to understand the overall model and the moat of the business. But the 3,500 crore order which has come into your arm, the street is talking about it. We wanted to know the important details about it and what kind of incremental benefit starts coming in terms of numbers from this order win.
Thank you. Thank you very much, Sharadji. Thanks for inviting us for this very prestigious show. And I'm really delighted to be tell about this project, 3,500 crore project. We got it from NOPL, Solar Projects Private Limited. This is now, it is our own company. We have got 100% stake in this company. But this project is very, very important. And in fact, this project is going to turn the entire table of Vikran Engineering Limited, because that today our biggest challenge is the negative cash flow. This project is going to bring a huge positive cash flow in by end of this financial year itself, number one. Number two, if out of 969 megawatt projects, so we have taken up these projects very strongly, and a very speedy project execution is in place. I'm very glad to tell, out of 969 megawatt, we have finalized the land for 904 megawatt. Connectivity is finalized for 670 megawatt. 51 locations out of 152 locations we are working, and we are very advanced stage of 165 megawatt project execution. So this is going to give a good revenue jump. This single project is going to give 550 crores annual revenue plus profitability of 450 crore EBITDA margin only from this single project. So this is going to be a game changer for the Vikran Engineering Limited for next 25 years. And with the very the positivity and the project positive cash flow by end of this financial year. And we as we are known for the execution company, we are all set to give complete the momentum of the execution. You can see 1/3 of the location we are executing the project today. So I see this is a very positive move, very strong move for the Vikran Engineering Limited.
Rakesh ji, another question I have is, of course, we know your key business, segments which you are operating in, but data center is something which in the commentary, also in the con call, there was a lot of bullishness. We wanted to understand what are the plans for it, how much work is going on, if you could share something on it, and if any capex plans earmarked for the data center theme.
Fantastic. See, this data center business for the Vikran Engineering, which we are targeting some order book in this financial year itself. Though we have started preparing for the last 6-7 months, and we have chosen the partner E&Y with us. So they will be the full-timer partner for the Vikran Engineering. The objective is to find out the good partner as a technology partner, and then we started developing our teams for the execution in the data center today. And now, so this is very positive signs are coming. We have started getting inquiry on EPC basis. So to start with, we will be starting our EPC projects in data center for next 1.5 years. And later on, we may switch. This is what we strongly planning to be as a developer in the data center, but 2 years down the line, not now. So as far as the capex required for the data center, we have not planned, because our currently what we are deploying our capex of around 1,000 crores, 1,200 crores for the solar projects for this financial year. Whereas for the FY28 onwards, once we are prepared, readily available with the proper the projects, so we'll be focusing for the data center as well.
Fair enough. Rakesh ji, the revenue margin, and if you could share with us the profit margin, long-term outlook, because it's no point asking a short-term question to a EPC company. I want to know the long-term, targets, for your company.
See, if you see the CAGR of Vikran Engineering for last 8 financial year is 35%. CAGR of Vikran Engineering for the last 8 financial year is 42%. If we keep the same thing in mind, without giving too much the detailing and without jumping to the unnecessary expectation, if we maintain that, so our internal assessment, what we call it, FY31 plan, the strategic plan for FY31. So we are targeting 7,500 crore revenue by FY31. This keeping that same ratio in mind.
Order book guidance, just correct me if I'm wrong, I'm adding the NOPL order also. It's around 9,000 crore right now, which I add up from last time, right? So what's the guidance we can expect order book next 1 year, 2 year?
See, a slight correction is there in the order book because what is happening? There's because of the revised contractual restructuring arising from the 100% takeover of that NOPL Solar Limited. The previously we got 600 megawatt, 2,000 crores. 2,200 crores order from the same basket. So now if we overall effective unexecuted order book as of today, 1st of July is 6,800 crore for Vikrant Engineering Limited. This is one. But for the FY27, apart from this, with the total inflow order, what we have planned is the figure is coming the same, that 6,600. Out of that, this 3,500 we got it. So approximately 50% we already booked order for this financial year. Apart from this, around 2,500 to 2,600 crores we are the L1 now, which will get awarded within next 30 to 45 days.
So the entire order book picture is something which the management has spoken about, but there's always an EPC company and the industry will definitely have an execution and a high raw material costing also, seeing what we have seen in the last 5 to 6 months. Anything for Q1 if you could just share? I know you cannot share the numbers with us, but just wanted to understand the execution, how things are happening in the first quarter, and is there a minor hit in the raw material cost or your costing?
Absolutely no. See, the Q1, whatever we planned, we are there. We are just closed yesterday. I may not announce figure, but we are there, what we have planned, better than that. This is one. Second, the execution is the major strength of Vikrant Engineering. And as you know, that June 1st week, we have closed one 400 kV power grid project 3 months ahead of the schedule, for which Vikrant is known for. So execution risk is absolutely no. Coming to the raw material prices, yes, there was some the price hike in the structures because of the zinc prices and because of that war situation. But if we see the overall scenario for as a EPC and the overall scenario, so we will be maintaining our profitability as planned.
Fair enough. You explained about how different you are from your peers. So just wanted to understand, in a very simple layman person, if somebody is watching Vikrant Engineering for the first time, how different your business is with other people. Is there any moat? You have mentioned a little bit about in-house, design is there, or maybe you have a lot of vendors also. So what's the moat against other players of yours?
When we talk about the layman language, chapamari is our strength. What we will, once we get the project, immediately we jump into the execution. The latest example of the recently acquired the projects, within 3 months, we have shown a huge progress. Means the closing the land deal to around 90%, connectivity around 80%, and then commissioning we started. So this itself shows the very strong execution pattern what we are following at Vikrant Engineering Limited.
Fair enough. It's always a pleasure to have you with us, Rakesh ji. And of course, the company has improved over the last 6 to 7 months in our analysis. Best of luck for the future and order wins and Q1 numbers.
Thank you very much, Sharad ji. Very nice talking. Always nice talking to you.
Right. Thank you very much, sir. So that's the management, talking about the order wins, how the business model is changing. And definitely the street is looking much more on the promoter and rather than the business model. That's pretty much interesting as well. But of course, it's a newly listed company. We need to wait more time and judge it. But for interesting stories like this, stay tuned to KYC and yes, keep watching NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura, Har Raste Ka Superstar.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो, पतवारा हुआ रे,
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबां केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to
Benchmarks hover close to day's high. Nifty manages to hold close to 24,000 levels. Real estate, FMCG lead the gains. Metals, IT on the back foot today. Kotak Mahindra Bank will acquire Deutsche Bank, India's retail banking, private banking and wealth management business. The deal, which is worth 282 crore rupees, is expected to be closed by September next year. KPIT Technologies came under heavy selling pressure today after the company flags a weaker than expected June quarter and warned that challenging business conditions could linger. JP Morgan downgrades it to underweight. Shares of Mahindra & Mahindra move higher after the automaker reported better than expected June sales number. Strong performance across its automotive and tractor businesses helped the company comfortably beat the street estimates. Hello and welcome. You tuned into Markets at 12. I'm Nisha Podar and let's take you through the market. And yes, it is looking comfortably gaining when it comes to Nifty 50 at the current moment. And anything above 24,000 levels also gives a huge amount of buoyancy. And the psychological level being tested is giving comfort to the market, 0.6% higher on Nifty 50. Let's also take a look at the internals. What's really adding maximum gains for Nifty 50 today is the big boy Reliance Industries. Apart from that, from the banking space, there is Axis Bank, Mahindra & Mahindra because of the good set of auto numbers, internal Bharti Airtel. So there's a good mix of sectors, but a large part of it is also led by the consumption play in the market, which is adding to the buoyancy. What's on the downside? Well, it's not a good day coming in for the metals, and IT has been a dragger yet again because of the specific impact of KPIT's lower or weaker expected guidance for the future and the business potential. And that's really coming in as a bigger trigger for the overall IT sector, which had anyways been beaten down because of the AI talk and the momentum in the past few trading sessions. So not really helping at this current moment. Larsen & Toubro is also a huge dragger in the market today. So keep an eye out on that one as well. But when we really take a look at the sectoral play, it's the FMCG and the consumption, which is doing well. Apart from that, real estate and Also, auto, with the numbers on the first day of the month, these are the sectors which are really doing well in trade. But on the other hand, metals, IT, as well as pharma, these are the three pockets of weakness really coming in. Let's also do a check on the crude prices. And of course, it's in the green. But Brent near 73 and WTI near 70 is good news. So the way the crude oil prices have been receding after some sort of reconciliation on the war front, this particular bit is adding to the momentum. But remember, the overall thrust on the market in terms of gains are really constricted because of the El Nino impact and discovery of how the monsoons really play out, and therefore the impact on the economy. And those two are the important factors really to look at. But of course, also a key driver when it comes to the economy is also the auto sales numbers. And that is an area to be watched out for very, very closely. And today is the first day of July, and auto sales numbers have been trickling down. In fact, take a look at Mahindra and Mahindra's auto sales numbers also, and they have performed better than what the street expected. And therefore, that particular counter is really a big gainer, over 2% gains when we talk about Mahindra and Mahindra. The total sales have really jumped up by 37% on a year-on-year basis when we talk about the month of June in terms of auto sales. And also remember their EV exposure and the EV challenge that this particular auto company has really taken up. That is also adding to the momentum, with new launches really helping out this particular company. So keep an eye out on M&M and of course the overall scheme of things on how the numbers have really driven. So Mahindra & Mahindra has really been giving a strong, outlook coming in on this one. Let's get chatting with the management of Mahindra & Mahindra on this particular bit. In fact, Nalin Kant Golagunta, who's the Chief Executive Officer of Automotive Division of Mahindra & Mahindra and also Executive Director, joins in. Nalin, first of all, the highlights and the key drivers for better than expected sales that we have seen in June.
Yeah, of course. So very strong month for us overall. If you see 60,393 SUVs, which is a growth of 28% year on year, on a quite a strong month last year, June as well. A couple of drivers, of course, major launches. We've had 7XO on the 9S on the EV space. Both of them have done very well for us. Both put together now has crossed 13,000 for us in volume, which is fantastic for two new products which have come out there as well. But beyond that, I think the critical piece is overall portfolio, if you look at it, and especially on the rural side with Bolero, Scorpio Classic, Scorpio N to some extent, the growth has been quite strong post GST, and that continues to be the case. So we have new launches coming up, which both these launches, which have given strong growth, but on top of it, the existing portfolio has done well for us as well.
Right. Nalin, as far as exports are concerned, the numbers are looking good. What is the scenario looking when it comes to the export propensity of the company, especially with supply chain disruption and the different FTAs and tariff constraints that we have seen?
Yeah, absolutely. So export has been a critical focus for us for the past few quarters, and two major drivers there as well. One is we've had a big commercial vehicle order we got from Indonesia, which we had talked about earlier this calendar year. And that's something we're executing on. It's 35,000 vehicles worth of an order. And on an ongoing basis, every month, we're doing anywhere from 3,000 to 4,000 vehicles of that. So that's totally additional new volume which has come in. But beyond that, the core market, if you look at it, South Africa, for example, where we had 3XO we launched last year, and that continues to do well. So the core markets are doing reasonably well. And on top of it, we have additional volume coming from the LCV order in Indonesia, which is doing quite well.
All right. And when we talk about the electric vehicle space, and that's the growth area coming in for M&M as well, and Delhi policy on EV push, how do you see this? Do you think other states will also follow suit? And how will M&M really exploit this particular opportunity?
Yeah, no, absolutely. So EV has been a big highlight for us, not just for this month, but for the quarter as well. We continue to be the number one EV player from a revenue market share, which is how we track it. But if you step back and look at it, the industry is going through category creation mode in some sense. And every new product which comes into the space is not necessarily cannibalizing new volumes, cannibalizing volumes from existing products. It's adding new volumes for us. So 9S added extra volumes. We were doing monthly about 4,000 and Minus has added about 3,000 every month. And we'll have new launches lined up. By end of this year, we'll have one major launch coming up as well. So that's the way we are looking at giving more choices to the customers. And the good news is the regulatory environment has been very supportive. Not just the state, and of course, Delhi's move has been very welcome. We have several of the states where we have had SOPs given by the state government. Of course, beyond that, the central government has been unstinting in their support for EVs as well. So both of them have come together. But at the end of the day, it's the superior product which wins. Customers are demanding, and the EVs have held their own. Most of the so-called barriers that we have heard about EVs have largely been solved, or people have experienced these vehicles and don't have those issues as well. So it's a mainstream product now. It's a mainstream choice. And we look at it as one more choice we give to customers. We have strong diesel portfolio. We have strong petrol portfolio. And now we have a very strong EV portfolio. And it's for the customer to decide which way to go.
That's right, Nalin. But demand aspect, now that the crude oil prices, after a huge amount of uncertainty, now are coming down. How do you see the larger portfolio really behaving? And has the demand been impacted because of the crude oil price changes?
Yeah, so like you said, it's the onset of monsoon festive pre-stocking we're starting to do as well. So far, the demand has been good. Like I said, we look at key indicators for rural demand, which is our Bolero portfolio, Scorpio Classic and Scorpio N, and they've done quite well for us. And we continue to see walk-ins, and generally walk-ins are a good indication 2 to 3 months before the festive season. This generally results in billing later in the quarter as well. So very strong from that perspective. We haven't seen a major dip in diesel demand going into the West Asia crisis. So, and it seems to have sustained. So overall, we don't have a demand concern at this point in time on that. And like I said, it's a set of choices we are giving to customers. Sometimes we see diesel doing well. Sometimes we see the petrols coming back in strength. With the GST drop, we saw significant growth after having across both to that extent. So right now, we're quite confident. We put out a mid to high teens growth for the year, and we're quite confident of hitting that number.
Right. And what about the impact of the onset of monsoon lower than expected? El Nino impact has also not been discovered as yet. What are you seeing on the ground in terms of demand, and what could be the impact because of lower than expected monsoon in your view?
Yeah, it's honestly, it's speculative at best at this point in time. It's early days of the monsoon. So hard to speculate which way it will go. But on the ground, we don't see much of an indication on SUV growth or even LCV growth at this point in time. Like I said, no indication to tell us that there's going to be a slowdown coming in. I'm not saying it may not happen, but I think for us at least, we don't see any indication at this point in time on the SUVs, on the LCV space.
All right. So many highlights from there in terms of demand and the war getting over and monsoon as well and the new launches for the company. Can you sum up, or what is the outlook for July sales for you?
Yeah, of course. So from a demand perspective, we continue to forecast strong demand for the month. This is also the middle of the year, so like most OEMs will take a small shutdown. So there could be a little bit of a dip in production, but that's planned shutdown we do before festive starts as well. But we see the demand continuing at this point in time for the month. Should be a strong month for us in July as well. And so quite confident at this point in time, our mid to high teens growth that we projected for the year.
All right, Nalinikant, always a pleasure to chat with you, and good set of numbers for sales volume for the month of June. Thank you so much for joining us on NDTV Profit. All right, so that was Mahindra & Mahindra. The stock is elevated, gaining over 2% in trade. But what's not doing well today is the pharma space. And let's focus on Dr. Reddy's, which is under pressure today, more than 1% lost on that particular counter. And remember, Dr. Reddy's is under pressure of competition as it intensifies for DRL as Apotek's first generic semaglutide for weight loss approved by Health Canada. In fact, Hiral is here to break it down for us and the impact on the company. Tell us, Hiral.
Thank you so much for that. So clearly right now what has happened is Apotek's Health Corp That's the company which has got the Canadian approval as well right now. And this is for their semaglutide injection. Now, initially, the expectation was that Dr. Reddy's will have the first mover advantage to some extent. However, the Canadian, authorities have been going very quickly in terms of approvals, and that's the reason why the competition has been increasing, and that is what is creating pressure for this counter. Currently, Apotex, the first generic semaglutide for weight loss, has been approved by Health Canada. On the back of which you have Citi, which has come out with a note, and what they've said is that they will continue to maintain a sell, and they have a target price of 1,070 on the counter. Now, Apotex approval for a generic version of Wegovy in Canada is what they're looking at, and this will intensify competition in the GLP-1 segment as well. Now, this is likely to actually confine Dr. Reddy's opportunity primarily to the diabetes market and not extend it to that, in that fashion to the weight loss market as well. In fact, Dr. Reddy's currently lacks a filing in the weight loss category, so that will be a concerning point there. And the market expectation is that they are factoring in an overly optimistic margin expansion for Dr. Reddy's, which may not happen. So clearly, this is negative because competition is increasing. So pricing could come under pressure, and in turn, the margins could also come under pressure. And that's the reason why the stock is correcting as like the way we see it.
All right, Hiral, thanks so much for breaking it down for us. And of course, GLP-1 opportunity, that is the competitive area for all the pharma companies. But let's talk about IT sector, and that is a dragger also today because of one company's guidance. And we are talking here about KPIT Tech. It's down over 15% in trade and also dragging down the entire IT sector. Now, KPIT Tech is under pressure amid a weak outlook for the upcoming quarter. Jasmeet is here to give us the numbers and what the company has said. Thank you so much, Jasmeet. Take it away.
Well, Nisha, thank you for that. As rightly said, a weak guidance by KPIT is dragging the entire ER&D space down in today's trade. Now, let's quickly understand what has happened. Now, if you look at KPIT as a company, it hit the intraday low in the beginning of first 15 minutes, down about 10% and currently trading at 16% below the price which was closed yesterday. Even yesterday, the stocks were down to 5%. Now, what is happening is the management has guided for a weak revenue growth in the Q1, and they expect on YY basis the revenue dip by 1%. Now, if you look at this figure on QOQ basis, as per our calculation, it shows a downtick of nearly 4.7%, and this marks the first ever downtick in last 6 years. So this is a big news for the company where they're expecting a lower revenue going ahead, and that's why she's not happy about it. And here are the quick reasons why is this happening. Well, the first reason is they are penciling in that the overall slowdown in the European OEMs that's impacting the stock. Further, they also make a note that this was a sudden news for them. They did not have time to realize the overall impact. This has happened as BMW has cut its guidance of profit guidance of FY26 by nearly 3%, and this is overall impacting the KPIT's business, as BMW is one of the largest client of KPIT. Now, in terms of the overall margins and profit impact, they expect the margins and profit to fall furthermore compared to revenue because they did not have a window to do cost optimization, and that can be under pressure. Further, management has also given out its Q2 outlook as clarification, stating that the Q2 will be similar to what's happening in the Q1. So we can expect a weak H1 for the company, but they do remain that the overall fundamentals of the business remain bullish, and they also expect the H2 to be better. And in the Q4, they expect it to have a good sequential growth altogether. So all in all, as of now, we do see the stock under pressure, but even the margin guidance of the company is between 20% by this decrease in the top line, even it might impact the overall guidance of the margin as well. As of now, it's a wait and watch how does the overall Q1 pans out, but the management remains cautious and has guided for lower 1% of revenue growth on YY basis.
All right, Jasmeet, stay on with us. Of course, Maruti's auto sales numbers for the month of June, they were flashing on the screens, and 2 lakh units sold, and it is slightly lower than what the street was expecting at 2.15 lakh units. And those are the figures coming in. It's a growth of 19% when we talk about the June sales numbers on a YOY basis for the month of June for Maruti. And the stock is holding strong with gains of over 1%. A slight bit of profit booking on that level is being seen in the last few minutes. So as the stock really digests these particular numbers and the impact of the sales numbers, of course, the estimate was slightly higher than what has been announced. Jasmeet, over to you on the other stocks that are on your radar to be watched out for, which are buzzing or are news related.
Well, Nisha, I have three stocks in my radar which are buzzing on the back of the positive news. Well, the first one is Paisalo Digital. Well, this stock remains in focus as the promoters increase the stake in the company to 46%. They have nearly added 4% stakes in the Q1 of the company, and that's what the update is, and the stock is up nearly 20% in today's trade. While the next is VA Tech. Now, VATech, this particular company has won a large order from particular industrialist in terms of the overall water works which is happening. And if you consider the company order size, a large order as per company is anywhere between 250 to 600 odd crores, and that is the stock is up nearly 2%. While the last one is RITES. Well, the company has received a project management consulting order, and the order is for nearly 175 odd crores. While the order is done for the infrastructure development, and the stock is buzzing on a similar regards, it's up nearly 14%. So these are the three news buzzing on the back of the positive news flow, and Paisalo being the highest 20% of strong moves.
All right, Jasmeet, thanks so much for getting us the entire list of cracker stocks to watch out for. Let's take it straight across to Feroz Aziz, who's the joint CEO at Anand Rathi Wealth, joining in with his expert take on the market. Feroz, good to have you on NDTV Profit as always. Now, my first question, what is really coming in as a resistance when Nifty 50's rise above or holding on above 24,000 levels is concerned?
Good afternoon, Nisha. I think, of course, there has been some degree of consolidation at 24,000 levels. If you look at last three expiries, incidentally, we have been very close to 24,000, just 100 up and down from that level. This is seldom does it happen that the market consolidates 3 monthly expiries at that level. I'm very, very glad that there is a lot of buoyancy in the market. When you look at a lot of news flow has happened, a lot of money flow has also happened. A lot of stock has changed hands, but the market has found its resistance. I had called out that the market will not fall more than 7, 8, 10%, even when the war broke out in February. And I think that's what has happened. 30th March was the least level for the last financial year. Incidentally, almost the least level, 22,313, and we are about 7, 8% higher. Now, what is the resistance? I think the resistance isn't there from a long-term perspective. From a short-term standpoint, of course, there is some resistance. Of course, this prop traders making it difficult. SEBI has made it difficult for prop traders, and that will actually bring in a lot of stability on expiry day. And that's what I think I'm very, very happy about. Because if you see yesterday's expiry, you see those scandals of 100-point Nifty movements. Those are all induced by algorithms, largely benefiting prop traders. So the expiry day volatility, where you always see on the last expiry day, the market falls, not because of fundamental reasons, because of algorithmic trading, that will become far better, because otherwise you would never get a 100-point Nifty tick twice in the last half an hour.
Right. So, Feroz, I'm trying to break down the several factors which are really impacting the overall market momentum, and especially Nifty 50 as the benchmark number to really track as a yardstick. So, when we look at the war dates from 28th of Feb, it is over 1,000 points of recoup that is yet to be done purely on the basis of the war impact on Nifty 50 numbers. And when we look at the future, crude oil prices are still $10 above or at least $8, $9 above what it was pre-war. But pre-monsoon or during monsoon, lower than expected El Nino impact and the margin impact in the upcoming earnings. These are the factors at play. What's really impacting the market, and how do you see the momentum going forward?
Like you rightly said, the markets are about 1,100 points lower than where they were on the 26th, is I think was the Friday. In fact, Friday market gave away 300-400 points. So in fact, I would count it as 25,500 down to 24,000 currently. It's about 6% down. You're absolutely right. War almost seems to have finished. Crude oil, I think you would have heard me say, data gives you a lot of informed guesses. Like last 13 instances in the last 50 years, crude oil, when it rose 50%, it fell back 28% within a year, except 2 instances, which are not because there was a supply shock. There was a demand recovery, basically COVID and GFC. So it was very easy to predict, of course, very difficult to believe that crude oil had already peaked out. So I think, why is the market not back at the same level? Will it come back to the same level? The answer is yes. Like I have been predicting that FIIs will come back sooner than later, the first 15 days Well, the first 15 days of June, of course, had an FII outflow. After a lot of time, we've got 2 weeks of positive inflow from FIIs on a net basis, which I think is a reasonably positive sign. So if you break down, like you said, Nifty is a great barometer of the market. The top 10 weights of Nifty is 54%. Top 10 weights of Sensex is 64%. That's why you would see, if you check the Sensex return and Nifty return of 6 months, you will see almost a 2.6% divergence. That's because FIIs were selling what they owned. They owned, so far also, they owned 39% of Nifty's free float. And they were selling what they owned. And when they sold what they owned, Nifty, the top 10 stocks underperformed, is why Sensex underperformed Nifty, which never happens. I think that convergence has started happening when the FII monies come back. I think Nifty will do well because the top 10 weights have had a lot of dent because of this outflow, especially private sector banks, because that's 5 out of the 10 Nifty stocks in the top 10 category.
So, Feroz, multi-billion-dollar question: when are FIIs going to make a return, and what will give them the comfort?
I think if you look at FIIs return because they follow passive. It's very easy to predict an FII's return. If you look at MSCI Emerging Market Index, where almost $2 trillion is being, it's a proxy to almost $2 trillion of wealth. So I would say when Korea and Taiwan and Chinese markets don't do well, we'll have more weightage towards India automatically. And that's when FIIs will come back. And that's why you see last 15 days, you're seeing positive moves. Especially in Nifty stocks, you're finding FII purchases, which is also easy to track on a monthly basis using a Bloomberg terminal of a specific feature. So coming back, when do I think? I think by the September review, MSCI reviews every 3 months, February, May, August, and November. I think the August review will give us some more weightage, and there could be some reallocations, especially given how Korea has been behaving over the last fortnight.
Right. And Feroz, when we enter into the earnings season, now July has begun, and in a few days the earnings cycle will also begin. And this is the quarter where a large part of the impact of the war has been seen on the ground, and the full quarter has seen the impact. How are you differentiating between the sectors with knee-jerk reaction, even though the future potential for the next quarter is going to look much more better and recovered, but at least the numbers at the current moment, there could be margin pressure on several sectors. How are you differentiating, and in the short-term play, what's your view?
See, if you like, again, I would take you back to the Nifty argument, which I think is a very, very important argument, because that's what is a barometer of how market is doing for most of us. And that becomes the base on which anybody creates a portfolio to create excess return over it. So if you look at the top 10 stocks, you have IT stocks, 2 FMCG stocks, 4, 5 banks. They have not had an impact. In fact, they've had a benefit. And both these sectors, especially the banking sector and the IT sector, are at their bottoms. When earnings are bad and still the stock can go up, that's when you see a stock bottoming out. That's a huge indication the stock bottoming out. So this time, even if the results might not be stupendous, you will see stocks bottoming out and doing well on bad results. That's because there's a lot which has been factored in. Of course, you were speaking about a stock which gave a warning before its quarter result, and you see that stock down 10-15% today after having fallen 5-7%. I was just logged in a little early and I was hearing you. So point I'm trying to make is results, if you look at all the 4 indices which I track, Nifty, Nifty 100, 150 mid cap and small cap 250, which is what is the mutual fund barometer, I think earnings of more than 10% year on year for the same quarter is possible at an aggregate level.
All right. And also baking in the recovery that is to be seen in the next quarter, that could be the theme of this earnings cycle and the market momentum. Feroz Aziz, always a pleasure to chat with you. Thank you so much for joining. Completely out of time on Markets at 12, but keep it with NDTV Profit. And thank you so much for tuning in.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
सरसों से सरसों.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you're truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Sharad Dubey, who's standing at the Profit Market Pit with all the action. Sharad, good afternoon. Interesting day of trade. You know, you have IT as an index, which is actually at a 5-year low. However, if you look at Nifty 50 as well, strong moves coming in. I mean, the momentum that has started is not really getting over, but it's sustaining. There is some bit of consolidation as well. But it clearly seems to be on an uptrend.
Right. Good afternoon, Hiral. And you're right. It's a good uptrend and it's a start of July series for both Nifty and Nifty Bank. That's a good positive momentum coming in. And of course, the fresher positions are also being added. So you can expect a good up move also. Also, largely no major global triggers are there. Things are going as it's planned, especially on the macro front. The AI trade rallies, that seems to be in a range-bound move as well. But let's look at the key other factors also, which should be important. The small and mid caps, you know, how things are placing. But just the Nifty resistance range, number 24,100 to 2150. That is where the minor range is coming. Nifty Bank, the story remains the same, 58,000 to 58,500. But if you go into much more details, the benchmark indices are outperforming SMIDs. There is some index management also initially, so you need to give more time for this buying coming in the realty and the FMCG pack. But here you had mentioned the IT index. That's at a 5-year low. IT metals are seeing sell-off in the day's trade. But of course, the focus of moving on is on these two macro cues. Rupee weakening, it's near its day's lows, and the June GST and auto sales data as and when they are coming. So we are tracking them. and try to get it much more, feel of the markets going ahead. But of course, now in a week or two, we'll have the earnings also coming in.
Okay, so, interesting moves that we are seeing in terms of markets. Let's quickly look at the heat map in terms of individual sectors to just understand the kind of trend that we are picking up, because the way IT is seeing a sell-off, that is the pain point. Metals is a pain point, and in fact a lot of brokerages are pointing out that in terms of the July series as well, IT and metals will continue to be the pressure point, and that's what our radar should be. Pharma is also under pressure, 0.5% downtake. Media, smart gains there. Real estate continues the uptrend. FMCG is seeing a bounce back after that mild sell-off that we saw in yesterday's session. Likewise, if you talk about the PSU bank index and the private banking index as well, seeing gains of nearly 1% as we speak. But let's look at the watch list. You have Kotak Bank that is in focus, and this is because they bought Deutsche Bank's India retail business. Lots that comes on Kotak Bank's plate from a Deutsche Bank. Adani Ports as well, where the MSC partnership has deepened further. This was news that did come in yesterday. The up move has continued. Nestle HUL, you have Goldman Sachs, which is positive on FMCG growth, and that's the reason why that buzz there. Auto sector in focus as well on the back of the strong sales momentum that we are seeing, especially for the ones where the auto sales data has already been reported, like M&M, Escorts. Cupid in focus, strong Q1 update along with the Hoodco. MCX, you have a Jefferies which has initiated a buy, and that's the reason why that stock is buzzing in trade, along with a Titan where Goldman Sachs has maintained a buy rating as well. Cummins again, along with the WeWork, both of them are in focus on the back of brokerage notes. Pesalo Digital, the promoters have gone ahead and increased stakes, so there is some bit of strength that stock is picking up as well. Viatech Wabag has won a large order, and a Rights as well has got an order win, and both of these counters are in focus. KPIT Tech is the accident of the way, probably because they've come out and said that the first quarter of FY27 is expected to be weak, and your top line in terms of the second quarter is going to be similar to the first quarter. So probably you're looking at a washout in the first half of FY27, and that weakness has translated into Tata Electric and Tata Tech as well, Tata Elxsi, I beg your pardon, and Tata Tech as well, and that's because it's a rub-off effect on the back of the European weakness. Ixigo, strong volumes along with another stock which is City Plus, which is also seeing strong volumes. You have Standard Engineering, which is trading at a 52-week high, along with the Granules India and Aether Energy. GNG Electronics, that's another stock to focus on as well, which is trading at a 52-week high. So lots brewing in trade today. But Sharad, over to you to take the rapid fire with Devin Mehta.
Thanks a lot, Hiral, for that. Good afternoon, Devin. It's always a pleasure to have you with us at NDTV Profit. We'll start our rapid fire round, and the first stock is Adani Ports. MSC partnership announcement. Stock is trending positive. Also, stock almost up 3%. What are the key technical levels looking like here?
Good afternoon. I think Adani Ports has given a strong breakout above 1845. So one should hold this counter with a trading stop loss of 1775. This can further move towards 1950 levels in coming days.
Right. Of course, there's a standard disclaimer also for the company. Next stock, HUL Nestle, FMCG stocks. They are in focus. Out of these two stocks, any kind of a trade is possible here, Devin?
I think Nestle is looking good the way Nestle has given a breakout above its falling supply trend line. I think this can move further towards 1500 levels. So Nestle is a good buy at current levels. In fact, it can be also added on dips near 1430. The strong support is placed at 1385 levels. So 1385 can be the stop loss, and this can move towards 1500 odd levels. So Nestle is looking good. HUL compared to Nestle, I think it has underperformed, and currently trading near 2180 levels. I think it has a resistance around 2220. So one should try to exit this counter around 2220.
Right, Devin, your view on WeWork. Stock has been on a rally, the last 1 month. Expansions are coming in, brokerages are turning bullish. Good time to take some profits off the table?
The stock has moved higher. It has broken its 52 weeks high. In fact, all-time high levels have been breached in this counter. I think one should try to book 50% profit, and rest for the rest quantity one can hold with a stop loss of 645. It has a strong support at 645.
Devin, Vatek Babag has been getting orders recently, and especially last month it was Middle East orders as well. How do you see this stock going, especially on the overall technicals front? Do you see this breakout sustaining going ahead?
Yeah, I think the way stock have already rallied and currently it is slightly consolidating into a range. On the lower side, 1990 is the strong support, whereas on the higher side, 2190. That's the resistance. So I think if any of the level breaches, then we can see some move. So those who are holding a long position, I think 1990 can be the stop loss, and one can hold this stock for short to medium term.
Right, railway related stocks were under correction for a long time, almost 2 to 3 years. But RITES is coming out with a positive news flow, 175 crore order win coming in. Stock is up 15%. Seems like, more buying interest can come in this counter. Do you think so?
Definitely, the way volumes have increased today, the stock has already breached its multiple resistance. One was at 220, the stock has already breached. One was at 231. The stock has also surpassed that level. So I think this rally can continue. The next resistance is placed around 255. So I think this can continue towards 255. One can definitely hold. I think the trailing stop loss can be 220 on closing basis.
Devin, a quick view on Ixigo. Stock has been doing really well. Its volumes have picked up significantly. What's there on the weekly or the monthly charts for this?
I think the stock has given a strong breakout on weekly charts, the way it has moved. Also, if I consider daily charts, it has given a breakout above 200 exponential average, above 197 odd level. So I think this rally will continue towards 222 levels. So one should definitely hold this counter towards 222 levels.
All right, so that's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks?
Thank you so much for that. One order win stock which is trending on Google, which is RITES. And in fact, if you pull up a 1 year or a 6 month chart as well, that will tell you what's happening there. So RITES, that stock is up 15%. And you have Advait Jewels, that's a recent listing which actually listed on the bourses today. 30% up move coming in there. Devin, your views when it comes to a RITES? I know Advait is not something that we'll be able to talk about, but are you seeing further strength when it comes to RITES, or would you say this surge that you're seeing in today's session, which actually we used as an opportunity to book profits?
No, I think one should definitely hold this counter. The way volumes have increased today, I think this can rally towards 255. We already discussed this. So one should definitely hold for the targets of 255 at least.
Okay, so that's with regards to where stocks which are trending on Google. But thank you so much, Devin, for joining in. It's always a pleasure to speak to you as well. But moving on, Kotak Mahindra Bank, that is a stock which is in focus as well. And Sharad has been tracking this deal pretty closely. Sharad, it's interesting to see how quietly they've gone ahead and picked up Deutsche Bank's retail banking, private banking and wealth management business. What does this really do to a Kotak Mahindra Bank, and what are brokerages really saying about it?
Well, largely, Hiral, if you talk about it, this is incrementally positive, or let's say ROE accretive to be more technical. But it's a very small dent in the balance sheet, and brokerages, however, have stated that this deal is good. This helps them get in, affluent clients from Deutsche Bank. Of course, this is the private wealth management and the retail banking division. Both of them comes in. Consideration is roughly 282 odd crore rupees. So definitely, this is a good buy, and all the brokerages also have given a thumbs up. But it might not move the needle, but yes, sentimentally, this is definitely positive. And joining us, with us, we have our fundamental guest, Lancelot D'Souza, as well. Lancelot, just wanted to understand, what does this mean for Kotak Mahindra Bank going ahead? And is this trend going to go ahead for more larger Indian banks as well?
So, while it may be sentiment positive for Kotak Bank, you have to understand that Kotak Bank's market cap is about 3,95,000 crores. And a 282 crore deal in terms of acquisition of customers and acquisition of business really does not change their overall return ratios or the overall valuation of the the bank significantly at this point in time. So if we look at the bank valuations from a more fundamental perspective, we see that the stock is trading at 2 times book at the moment, and there has been a focus on on consolidation in Kotak, as well as in ensuring that there is growth with at a reasonable cost. So you will see return on equity continuing to remain good at around 11-12%. Profit growth also should be between 10 to 15% for Kotak Bank going forward. A lot of the macros are positive for banking, and that should augur well for Kotak going forward. So in terms of valuations, I think while this particular deal does not do anything significant to change the valuation, yes, the overall valuation is reasonable, and it can be looked at, you can accumulate it on declines for a long-term growth story.
But talking about the BFSI space, let's go into the exchanges. Let's pull up the chart for MCX. A good up move coming in this counter as well. The stock is up as well. Jefferies has initiated a buy rating and the target price is 3,600 rupees. And they are, of course, talking about the under penetration in the industry, and that is why the bullishness is coming in. Revenue CAGR of 20% they are expecting, and of course, there's a margin expansion at play as well. Lancelot, just wanted to understand MCX now as the business model and what new growth triggers can actually come in.
So, while MCX has been introducing new different types of contracts and has been largely benefiting from the increase in the metals pack, because most of the metals are traded on MCX in the futures, and specifically the volumes have grown in gold and silver as well, and that has augured well for their growth. But in terms of valuation, it's about 75,000 crore market cap. It's trading at 57 times earnings, and even on a price to book basis, it's about 26 times its price to book. So the risk reward ratios do not make it advisable to buy at these levels, because any medium term or a short term decline in earnings or profitability or growth could result in some re-rating, and the stock could be down significantly from these levels.
Okay. So that's with regards to where MCX goes. Now, the auto sector as a whole is in focus as well on the back of the June data. Hero Moto, let's pull up that one on the screens. The total sales is down around 2%. 5.4 lakh units is what you're looking at. Domestic sales down around 4%, 5 lakh units. Scooter sales have seen an uptick of around 51%, 62,458. is what you're seeing, and your motorcycle sales have gone down 7%. Let's just pull up the intraday chart of Hero Moto and see what the stock is doing. In terms of exports, still a small portion. That stock is slightly taking a hit right now, continues to trade in the positive, but a marginal downtick coming in there. Another companies which have reported, M&M, a good set of numbers because total sales are 37% growth. PV has seen a growth of 28%. That number is above what the street was estimating as well, and that stock seeing gains of around 2.5%. Three-wheeler sales have seen a growth of 63%, and LCV has also seen good growth. If you talk about Maruti Suzuki, the total sales number has come in at 2 lakh, and the estimation was around 2.15, so a mild downtick coming in versus what the street was estimating in terms of a Maruti Suzuki goes on the total sales side. Domestic has seen a growth of around 21%, and your exports have seen a growth of 13% as well. Hyundai, again, total sales at 51,335. That number is also below what the street was estimating. 62,521 was what the street was looking at. That stock, just get me the intraday chart as well. The company has said they've seen a production loss of around 13,900 units, and they're expecting to recover the loss due to fire in the second quarter of FY27. The chart looks really hunky-dory right now, 0.6 to 0.7% higher. And you have Escorts Kubota. Total sales, 13,695 versus 13,629 as the expectation. So pretty much in line with what the street was estimating for Escorts Kubota. The total sales has seen a growth of 19%. They've said that the momentum has remained absolutely positive in the month of June. Deficient monsoon, El Nino, these are the two key monitorables that this industry will be tracking as well. However, the stock is taking a beating at the day's lowest levels, and they're expecting growth to actually moderate in the next couple of quarters. And I think that commentary is what the street is not looking at. However, let's look at what's happened in terms of the tractor business for M&M. Overall, if you have to look at historical trends, the question is, the segment is at the mercy of the monsoon. And historical data is showing you that in years of weak rainfall, the tractor demand trends to soften. My colleague Puneet is standing by to tell us more in terms of the trends that he's picked up with M&M volumes declining in those particular years and what has then happened. Over to you, Puneet.
Well, thank you for that. Well, of course, the latest news being that for the month of June, the sales has been quite strong for the company. But when you look at the historical annual sales data points, 40% of sales for the tractor business for M&M happen in the first 4 months. So the monsoons are really crucial. When you look at the last 6 years of data of rainfall, in only 2 of the last 6 years was the rainfall percentage of long-term average below 100%. So that was in calendar year 21 and calendar year 23. But when you look at the sales data point, now they of course do the sales data point in terms of the financial year aspect. M&M's auto sales largely were flat in both of those years. And when you look at the numbers, here is where it gets interesting, because in both those years when you have, so calendar year 21 will be effectively FY22. This is the green pillar you have to look at. Marginal, very marginal growth compared to FY21. And the last one was in calendar year 23. So you have to look at FY24 numbers. And here is where you see the data. So those 2 years when rainfall was below 100% of long percentage average is where you saw that impact on tractor sales. Last year was at about 108% and you saw very stupendous growth. This was also led by the GST rate cuts in the second half. But this is a very important data point that we've put out. Also in terms of, as you've seen as well, now this data of course talks about the IMD expectations for El Nino. Now June, the expectation of El Nino is weak, but the intensity increases going into September. Now this time around, when you look at the September data, you have to also watch out for last year. Because of the GST rate cuts, a lot of the sales were also incrementally slower in the first half. But the only expectation of El Nino starts from the September time onwards, while for July it's weak to moderate, and a similar one for August as well. What you are now looking out for, more importantly, Nomura has pointed out to monitor the way El Nino is of course progressing. Also watch out for the most important part is expected that for the whole of monsoon, the El Nino impact is expected to be weaker to moderate at this point of time. So hence, more of a back-ended impact. And finally, India has experienced one of its driest Junes. You have to watch out for the auto sales numbers. Some of them we are already seeing a very strong traction coming in, especially on the commercial vehicle and the tractor side of things. But as I mentioned, a very important thing to note is that the 40% of sales happen in the first 4 months. Watch out for impact in July through going forward. The other factor that the projections have largely been at this point of time holding on, but M&M June sales for tractors were slightly lower than estimates as well. So you're seeing already the impact of driest June, and H2 will have that high base effect. But M&M's guidance currently is a mid to single digit growth. Last year it was 20%, but this year, because of the high base of last year, it's something to watch out for.
Okay, so lots to watch out for. Lots actually depends on what the monsoon would do as well. Lancelot, your views in terms of the numbers that have been reported so far in terms of auto sales for the month of June and the trend that you're picking up?
So, Errol, I think when you look at the numbers that have been reported for June as well as the trend that is being picked up, the auto sales have been in line with expectations, because last year we did see a significant bump up and it was supposed to anyway moderate going forward. I think the companies that have a larger exposure to the electric vehicle segment or the hybrid segment, which is which have been doing well, like M&M as well as Maruti, have seen good traction going forward. And now, with the New Delhi government also trying to give some concessions for electric vehicles there, we should see this trend strengthen going forward. So I think given the fact that we are seeing a receding global situation as far as the crude prices are concerned, and the fear of inflation really moderating a bit, notwithstanding the poor monsoon, we would see auto sales continue to remain fairly robust over the next year. And but valuations of stocks have also risen up in anticipation of that. So maybe one needs to wait and look at it. But the trend is good, and we should continue to see benefits from the auto sector going forward.
Right, from auto sector to the IT sector, the conversation goes, and the stock which everybody is talking about is KPIT Tech, a big accident of the day as well. Why it has happened, and are there any other stocks which might get impacted? Joining us, we are having Jasmeet with us. Jasmeet, what's the whole picture?
Well, sure. Thank you for that. Now, as rightly said, the KPIT is sort of an accident for today's morning. If you look at this particular counter, it initially dipped 10% hit the lowest circuit, and further broke the circuit and is down 16%. Now, we look at the commentary by the management. They seem pretty weak for what they expect in the Q1. The management sees a 1% downtick in terms of the overall dollar revenue on YOY basis for Q1 FY27. And why is this? The first main reason is they are seeing a slowdown in the European OEMs, but they also call out that this was quite sudden, and that's what they got to know in the recent weeks, and so they couldn't work on the cost optimization, which will indeed impact their revenues and margins as well going ahead. Now, further, the management expects the same trend to continue in the Q2 as well as it was in the Q1, and further, they expect that the H2 will be a better half year for company compared to the H1. Now, in terms of the overall stock performance, the stock has been having a lot of impact lately. If you look at the stock, it's down nearly 70% from its all-time high, and it's just fallen 50% in the current year itself. Now, in terms of the overall margin guidance, the company does guide a margin range within 20%, but due to this downtick of 1%, it might further impact the margins, and margins might go lower. Now, in terms of the analyst estimate, the current estimate of 1% downtick is below what the analysts were estimating. So further, that's something creating further more pressure on the overall performance. And the key reason why this is happening is the overall global tech players and the car manufacturers are slowing down their investments, and that's leading to cutting down a lot of software-based tech firms. So that's the reason why KPIT Tech is tanking into it. Along with that, we have other OEM players as well, like Tata Tech as well as Tata Elxsi, also falling into it on a similar span given they're into ER&D space.
Right. Thanks a lot, Jasmeet, for that. And Lancelot, the big question is there any value hunting here, or you'll stay away from this space, be it mid-cap or large-cap IT?
So I think the mid cap or the large cap is going to show some amount of downturns further as well, because as many of these companies' results begin to get announced over the next month or so, we will also get an outlook of growth both in revenue as well as in profitability, and that could impact the valuations. But I would think that it's better to wait for a while, because you could see a little lower valuations, and at those levels it would become attractive, because these stocks have already corrected for significantly from their highs. And if you really look at the how the sector is going to play out, I think with the artificial intelligence opportunities also opening out, and many of these companies pivoting their business model, it will take maybe a year or two, but thereafter you will see significant growth coming in. So this probably is a period of accumulation for stocks in the IT sector.
Okay, so that's with regards to KPIT Tech as well. But moving on, Dr. Reddy's, that stock is under pressure because the competition, when you talk about GLP-1 products, is intensifying for the company. Now you have Apotex. Their first generic semaglutide for weight loss has got the approval from Health Canada as well. In fact, Citi has come out with a report, and they've said that they do maintain a sell, and they have a target price of 1,070, so which is a substantial downtick from the current market price, because the stock is trading at levels of around 1,340. What they're saying is this intensifying competition in the generic GLP-1 segment is likely to confine Dr. Reddy's opportunity primarily to the diabetes market, and the company currently lacks a filing in the weight loss category. The market expectations are already factoring in overly optimistic margin expansion as well. However, if the competition intensifies, there is going to be pricing pressure, and that is what is going to put pressure in terms of margins as well. So that's the negative aspect one is watching out for. Lancelot, quick view in terms of Dr. Reddy's on the intensifying, competition in the GLP-1 portfolio.
Yeah, I think competition in that space is intensifying, and we've seen many other companies also enter that space with similar modules. And given that the valuations is currently a little bit on the higher side, I'm not sure how much it will contribute to their bottom line. While sales may definitely see some amount of growth, the bottom line could get impacted a little bit in terms of we may not see the same kind of rise, and hence, given the little expensive valuations, one needs to be a little cautious, since risk reward ratio at this point in time is not favorable for making a large investment at Dr. Reddy's.
That's with regard to Dr. Reddy's as well. The stock has recovered slightly from the day's lows, but the pressure could continue. Thank you, Lancelot, so much for joining in. Always a pleasure to speak to you. But completely out of time. With that, it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. PMark, the mustard specialist since 1933.
सरसों से सरसों.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets.
Benchmarks hover close to day's high. Nifty manages to hold above 24,000. Realty FMCG lead gains. Metals and IT meanwhile on the back foot. Kotak Mahindra Bank will acquire Deutsche Bank India's retail banking, private banking and wealth management businesses. The deal, which is worth about 282 crore rupees, is expected to be closed by September next year. Meanwhile, KPIT Tech is under heavy selling pressure after the company flags a weaker than expected June quarter and warned that challenging business conditions could really linger. JP Morgan downgrades to underweight. On the flip side, shares of Mahindra & Mahindra move higher after the automaker reports better than expected June sales. Strong performance across its automotive and tractor businesses helped the company comfortably beat street estimates. Good afternoon. You're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets right now. And when you talk about Nifty or Sensex, you're looking at both of these indices hovering very close to the record, days high levels. In fact, right now, when you talk about Nifty, it's just about managing to hold on to 24,000 thereabout. And when you talk about Sensex as well, just some bit of strength that you're seeing coming in there. When you talk about strength, let's talk about realty as well, and media, FMCG, consumption, rural and auto indices. Exactly in that order. So some of those indices are doing quite well for themselves right now. Some of those sectors holding up quite well. Realty, media, FMCG, consumption, rural, in that order, holding up quite well, upwards of about 2% gains coming in for realty as well as FMCG right now. But on the flip side, it's actually IT that is bucking the trend. So is metal as well as pharma, and that's why you're seeing a little bit of underperformance coming in an otherwise great day coming in when you talk about the indices as well and the sectors right now. But when you talk about some of the stocks as well that you should be looking out for, something like Eternal stands out. Nestle as well, HUL, Asian Paints, some of those counters are standing out, and M&M on the back of a decent quarter in terms of the sales numbers as well. That stock is doing quite well for itself, about 2% gain coming in on the back of June auto sales, really beating some of those estimates as well. And of course, you do have auto sales numbers that have just yet started to trickle in. We'll get you that check going in terms of the monsoon impact as well, and that's something that we'll be talking about later in the show as well. But before we do that, let's talk about some of the stocks that are on the back foot right now. So something like Tech Mahindra, HCL Tech, some of those counters from the IT pack, in fact, are bucking the trend right now and holding on to declines of about 2.5% right now. So that largely is the kind of picture that you have at hand right now. But when you talk about the entire commodities complex, let's also delve a little deeper before we get you some more insights. And it's actually oil prices that are steady right now. That's after that historic quarterly plunge that you saw coming in when you talk about oil prices. Hormuz shipping flows are showing that steady bit of recovery, and that seems to be capping prices right now. But it's still holding on to a tinge of green. That's Brent and WTI, as you saw just a moment ago. And when you talk about going forward as well, a lot of factors to keep an eye on in terms of the supply glut, and that's also something that we'll be talking about in just a bit. But before we do that, quick look at gold as well. That's also declining for the third straight session as of now, slipped below that $4,000 announced level as well, and that's gold for you this afternoon. When you talk about the factors to watch out for, it's actually the technicals that are standing out aside from the fundamentals factors, because you do have the death cross that is really signaling technical weakness, and that aside from everything that you're looking at in terms of the Fed rate outlook, that is also key to watch. That said and done, let's also get you those insights like we promised. Vandana Bharti, AVP Commodity Research, S&C Global Securities, joins us on the show right now. Vandana, a very good afternoon, and thank you so much for taking time. Pleasure always, as always, speaking to you. It's not a good day coming in for gold, and we'll come to that in just a bit. Just wanted to try and understand what you think about oil prices, and if the supply glut is also worrying to you right now before we get to gold. Vandana, I believe you're muted right now.
Yeah, hi Shreyanshi. If we talk about the supply glut, Iran has exported around 50 million barrel oil to other countries, and gradually the supply side is getting smoother, and it is creating a pressure on the crude oil prices on NYMEX, and we are following the same trend. So yes, we are expecting that the prices in NYMEX should go towards the level of $65 to $62 here in midterm, and in MCX I'm expecting that the prices should take support near 6,200 to 63 kind of dollar, because on spot market, if we consider the Indian crude basket, it is hovering near some $74. So for the time being, the derivative market, the paper market, it has decoupled with the physical market, and it is trading on discount. So there should be a limited downside from here in the paper market, and the physical market that will lead the trend. So the downside is limited, and upside is also limited near the level of $74.
No, absolutely, and thank you so much for getting us that check really going when it comes to prices as well. And then I just wanted to try and understand what you think about gold also going forward, because it seems like the dollar strength seems to be really finally asking gold to pay that price also coming in. What do you think about the stronger dollar right now? Do you think that that's the top factor that you're looking at when it comes to that little bit of weakness that we've seen when you talk about gold?
Yeah, even the US and Iran peace talk and escalation, everything is on back foot right now, and market is eyeing on a dollar index or Treasury yield. And just you talked about the debt trap, Shansi, and if we consider the historical downside from the debt trap level, the convergence level, it is around 7%. So we can expect a fall of 5 to 7% from here in gold prices, and breaking the level of $4,000, it has opened the door for $3,900 to $3,850, and the options concentration is there on the more on the 3,900 or 3,800 kind of strikes. So we are expecting more fall in gold prices. If we consider the MCX prices, obviously it is on premium, and but yes, we are looking towards 1,35,000 to 1,36,000 kind of level in MCX, because the fall should be deeper this side.
No, absolutely. And, thank you so much for picking up that point on death cross as well. That's exactly what I wanted to ask you going forward as well. Do you think that all of these signals that we're getting by the way of technicals in terms of weakness as well, does that really worry you going forward? And what would you be suggesting for somebody who's looking at fresh buys right now? Do you think that they should wait for this sort of technical weakness and fundamental weakness to really settle in?
After like every major correction, gold generally it takes around 2 to 3 months to make a bottom in consolidation. It traps in consolidation for 2 to 3 months. August onwards, the seasonality based demand will be on the card again. So yes, the recent fall, it will open the door for investment, whether it is for jewelry, it is for coin bars or ETF. Right now we have seen a massive outflow from gold and silver ETF, especially from the Northern America side, and with this fall, the institutional buyers, they will be in this counter, and the valuation is really very attractive for gold and silver, and we're expecting that the inflows will come in the month of August.
So August is what you're penciling in terms of your calendar as well. Thank you so much, Vandana, for helping us out with that. Just quickly wanted to try and understand if you think that silver is also going to be moving in tandem with gold as well. Is that what you're penciling in then?
Yes, of course, the silver will follow the trend of gold, but the recovery of silver will be faster than gold this time, and we are looking towards 68-71 kind of level for this time in silver, and ETF buying will be the aggressive point for silver counter, and yes, this recent fall will compensate the whatever we have seen the demand destruction, because the silver was on the top of near $120 to $100. So whatever the demand destruction was happened in the past, it will recover soon.
No, absolutely, and thank you so much, Vandana, for helping us out in terms of understanding the way forward from here on as well. So fresh buys, that's really the outlook coming in. Those are all of the factors that you should be considering at this point. Thank you so much for joining us with that perspective. But moving on then, let's also get you the word coming in terms of another interesting update. And the government, in fact, has clarified that it did not describe the E20 ethanol blending program as an experiment before the Supreme Court, calling such reports incorrect. And you do have the Apex Court that has ordered status quo on ethanol allocation for 2025 to 26. Sentiment may remain weak for some of those ethanol-linked stocks. And against that backdrop, Sharad is here to explain some more.
Well, that's a pretty interesting take. Our government has categorically denied calling the E20 program an experiment in Supreme Court matter. Now, let me give you a perspective. What actually earlier happened, BPCL had contested this earlier order in the Karnataka High Court on the allocation to increase the ethanol for the 25-26. Also, the government stance looking at it, of course, this is from the attorney spokesperson, and they had stated about ethanol blending program being an ongoing experiment. But overall, what's the Supreme Court verdict coming like? That's important, because the transfer petitions which were there, they have been status quo. They have maintained for the supply year 25-26. And if you look at more details, this is actually status quo for the supply allocation to the oil marketing companies by Karnataka High Court. Now, the government has clarified, and this is as per Press Information Bureau, any suggestion that the government has described this program E20, which I'm talking about, before Supreme Court is experiment is totally incorrect, and this does not represent the submissions made on behalf of Union of India. But what's the impact? OMC, it's largely neutral, a little bit of sentimentally negative impact coming in for sugar stocks, Trualt, BCL Industries and Gulshan Polyols. But remember, now the clarification has also come in and the government has denied it. That means the program remains on track.
No, absolutely, and thank you so much for joining us with all of those details. Some of those sugar counters actually are managing to remain quite resilient against this entire backdrop as well. But moving on to another important update as well. 9 years after the rollout of the goods and services tax, the government data is suggesting that lower GST rates are helping expand the tax base as well. And following last year's rate rationalization, average monthly taxable supplies grew about 22.5% in the second half of FY26. Sectors like construction, automobiles, precious metals led the increase when it comes to business activity. At the same time, lower input tax credit balances, let's talk about that as well, because that's really indicating improved cash flow and a more efficient GST system. So that's an entire look in terms of the GST cuts really boosting some of those taxable supplies as well. But moving on, let's talk about Delhi, because that has the city's unveiled an aggressive roadmap coming in for faster EV adoption after the centre really rolled out EV policy 2.0. Danish is joining in with some more details in terms of the national capital's EV policy.
Well, the Delhi government today has notified the EV policy 2.0, and from today itself, the new policy has been kicked in, and this EV policy 2.0 will last till the 31st of March 2030. And we are seeing that the government's main intention is to promote EV usage in the city through providing incentives and as well as giving certain scrappage benefits. So if we look at the incentives that the government is really providing, so the government initially has said that for the first year, there will be a good amount of incentives that the government will be giving for those people that switch from ICE two-wheeler to EV and from ICE three-wheeler to electric three-wheeler. So these are the benefits that these users will get for the next 3 years. But one of the major aspects of this entire policy is the fact that from 1st January 2027, only electric three-wheelers will be registered in the city. No ICE three-wheelers will be registered in Delhi. Besides that, similarly from 2028, only electric two-wheelers will be registered in Delhi. And if we talk about the entire plan that the government has, so the overall outlay of the scheme is of 15,000 crore rupees, and out of which 8,000 crore rupees have been earmarked just to expand the charging infrastructure in the city, and the government aims to have thousands and thousands of these EV charging stations in the city. Very lastly, I would also like to tell you that in the proper details, we are also seeing that the government has made it clear that all the OEMs must be clearly ready with the EV products. There should not be any form of shortages, especially to Delhi city. And in order to give the users some kind of comfort when it comes to charging, every dealership is now supposed to have at least 3 charging points so that users can come to those places and get their cars, recharged.
Absolutely, and thank you so much, Danish, for joining us with all of those details. So there you go. That's the update coming in terms of the EV policy in the national capital. But let's also move on and talk about one stock that is trading under tremendous pressure since this morning, and that's KPIT Tech. A weak outlook seems to be battering the stock in terms of the upcoming quarter. They've come out with some bit of warnings coming in when it comes to the revenue as well, and the decline is something that seems to be really dragging the stock down right now, Jasmeet.
Well, Shreya, thank you for that. As rightly said, KPIT has been in action since morning, and this news comes on the back of that weak Q1 guidance that the management has given in trade yesterday. Now, let's quickly understand what exactly has happened with KPIT. Well, KPIT might snap its 23 quarters of revenue expanding streak after this particular announcement. Now, management expects a 1% YOY revenue downtick in terms of the Q1 FY27 on the back of that weak quarter that has just gone by. Now, in terms of what exactly has happened, we are expecting the Q1 revenue to be between 176.2 million, and this has come after the estimation of reducing 1% from the previous same quarter. Now, if we look at the revenue in terms of quarterly, the estimated revenue downtick on QOQ basis, as we view the IT companies on QOQ, the expected downtick is roughly 4.7%, and that's a huge gap which we are seeing. Now, in terms of the downtick, it's expected to be the first ever revenue drop in last 23 quarters. Let's quickly understand the key trends of revenue, of how the revenue has been doing for this particular counter over last few quarters. Now, if we look at the key trend, the overall QOQ change has been in a mixed shape, given at 0.5% and then we see an uptick of 2.3 in the Q4. But in the Q1, the estimated downtake is roughly 4.7%. Let's quickly understand the key reasons and why we have a weak management commentary. While the first reason, the revenue might get hit due to the slowdown in the European auto OEMs. While the management also calls out that this action is taken by the European OEMs after they have given the profit warnings and the weak outlook on the back of that uncertainty that they're seeing into the markets. And that indeed is impacting KPIT as well, as KPIT is one of the suppliers to those markets. While the company also said that the overall impact which they're seeing has come in last few weeks, and so they did not get enough time to do cost optimization in terms of what can we expect for the revenue and the overall margin. The PAT and overall EBITDA expected to fall much larger on sequentially compared to the revenue fall, given the cost optimization was out of the box. So let's quickly understand what is the outlook from here on, what we are expecting from the management. Well, the management expects that the overall weakness to continue in the Q2 as well, and H1 will be a weak quarter for the company compared to the H2, while they also expect that the overall H2 to have a better overall performance compared to what we had in the H1, and the Q4 performance is something that they're betting on. They expect the Q4 to be sequentially better compared to the other quarters in the coming FY27. Now, in terms of the stock performance, the stock is already down about 65% from the all-time highs, and in this particular year, the stock is down nearly 45 to 50%. So we do see an extended pressure on the particular stock, but still a wait and watch of how is the Q1 patch for the company going ahead.
Absolutely, and it doesn't look like the warning that has really been sounded when it comes to the company as well. That's a little bit worrying, and that seems to be dragging the stock. Thank you so much, Jasmeet, for joining us. With that update also coming in, let's also get you the word coming in from sources that are saying that the government may cut broken rice allocation to boost the E20 blending push as well. The move could reshape ethanol feedstock dynamics going forward as well. Let's get in Rishabh for some more details when it comes to this one.
What we're picking up on this very crucial cabinet update is the fact that the broken rice allocation under the public distribution system or the ration system, that might be changed from about 25 to 10%, so that 15% delta that the government is now getting worth about 90 lakh tons of broken rice, that could now be diverted to ethanol feedstock. And this is, of course, for more and more ethanol blending that the government is introducing, the sort of flex fuels that are coming in, moving away from fossil fuels and more towards sort of domestic reliance on biofuels is what the government's focus is also on. Now, as a result of this 15% broken rice also moving down, there were questions around the food security concerns that would come up, and the government has assured that will remain protected no matter what happens. So that's what we're picking up. The cabinet briefing is at 3 p.m. and we can expect some more announcements then as well.
Absolutely, and thank you so much, Rishabh, for joining us with all of those details as well. So there you go. That's a very interesting update really coming in when it comes to PDS as well in terms of the broken rice, and that is the update coming in terms of the public distribution system. But let's also move on and talk to you about one counter that is in focus right now. It's actually PB Fintech that's up and away in trade, 3.5% thereabout uptake coming in on this particular counter. And in terms of the recent announcement, you do have the board that is cleared two key moves. So a 20 crore sort of infusion coming into the wholly owned subsidiary PBPay as well. That's going to be meeting RBI's payment aggregator net worth norms as well, and planning to set up two financial services entities when it comes to Dubai's DIFC for insurance and reinsurance operations. Let's talk about the first one first. Like I said, 20 crores in the wholly owned subsidiary, and capital infusion is going to be done to comply with some of those RBI norms for net worth criteria for operating as a payment aggregator. Now, the second bit of information is actually them really getting this board approval to be incorporating two financial services arms in Dubai as well. So you're looking at long-term insurance contracts from Dubai International Financial Center as well coming in. That's the second update. The stock is up and away in trade, 3.5% uptick sort of coming in. But speaking of up, let's also keep an eye on the sky, talk about the heavy rainfall that has really disrupted normal life across Mumbai, with the weather department really issuing an orange alert for the city and the neighboring Thane as well. You do have local train services on the harbour line that were affected after an overhead wire snapped early this morning. Juhi Jadhav is bringing us this ground report.
Mumbai is facing heavy rainfall since yesterday. Also today, since morning, it is raining heavily in Mumbai. Right now, I am standing at Nariman Point area, and even here you can see it is pouring. I am in Vidhan Bhavan. The monsoon session is going on, but it is raining heavily also in this area. It is raining heavily, but also the side effects is witnessed by Mumbaikars because the trains are running late. You can see heavy traffic congestions on road, and also many tragedy are taking place in Mumbai because of this heavy rain. But not only for Mumbai, Thane, Palghar and Raigad districts have been alerted with orange alert for monsoon, and today for the entire day it will be pouring this heavily is what is said by the IMD.
No, absolutely, and thank you so much for getting us all of those details. So there you go. Not only is there rainfall right now, but there's also a warning of some more waterworks right now. But when you move on and talk about the impact of this, let's also pencil that in, because Mahindra & Mahindra's tractor business is once again at the mercy of the monsoon. In fact, historical data is showing that in years of weak rainfall, you do have tractor demand that tends to soften, with M&M volumes really declining. Let's go across to Puneet, who's standing by with an update in terms of a deep dive into monsoon and the tractor sales resultant impact.
The latest news being that for the month of June, the sales has been quite strong for the company. But when you look at the historical annual sales data points, 40% of sales for the tractor business for M&M happen in the first 4 months. So the monsoons are really crucial. When you look at the last 6 years of data of rainfall, in only 2 of the last 6 years was the rainfall percentage of long-term average below 100%. So that was in calendar year 21 and calendar year 23. But when you look at the sales data point, now they of course do the sales data point in terms of the financial year aspect. M&M's auto sales largely were flat in both of those years. And when you look at the numbers, here is where it gets interesting, because in both those years when you have, so calendar year 21 will be effectively FY22. This is the green pillar you have to look at. Marginal, very marginal growth compared to FY21. And the last one was in calendar year 23. So you have to look at FY24 numbers. And here is where you see the data. So those 2 years when rainfall was below 100% of long percentage average is where you saw that impact on tractor sales. Last year was at about 108%, and you saw very stupendous growth. This was also led by the GST rate cuts in the second half. But this is a very important data point that we've put out. Also in terms of, as you've seen as well, now this data of course talks about the IMD expectations for El Nino. Now June, the expectation of El Nino is weak, but the intensity increases going into September. Now this time around, when you look at the September data, you have to also watch out for last year. Because of the GST rate cuts, a lot of the sales were also incrementally slower in the first half. But the only expectation of El Nino starts from the September time onwards, while for July it's weak to moderate, and a similar one for August as well. What you are now looking out for, more importantly, Nomura has pointed out to monitor the way El Nino is of course progressing. Also watch out for the most important part is expected that for the whole of monsoon, the El Nino impact is expected to be weaker to moderate at this point of time. So hence more of a back-ended impact. And finally, India has experienced one of its driest Junes. You have to watch out for the auto sales numbers. Some of them we are already seeing a very strong traction coming in, especially on the commercial vehicle and the tractor side of things. But as I mentioned, a very important thing to note is that the 40% of sales happen in the first 4 months. Watch out for impact in July through going forward. The other factor that the projections have largely been at this point of time holding on, but M&M June sales for tractors were slightly lower than estimates as well. So you're seeing already the impact of driest June, and H2 will have that high base effect. But M&M's guidance currently is a mid to single digit growth. Last year it was 20%, but this year, because of the high base of last year, it's something to watch out for.
Another, there you go. So that's the monsoon test really for M&M. But that's all that we could pack for you on the show for now. Thank you so much for tuning in.
India Inc.'s most respected names.
Superstar Stocks of the Day, presented by Tata Azura. Har Raaste Ka Superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। BMark, the mustard specialist since 1933.
बरसों से सरसों
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon, you're watching Small Cap Bazaars on NDTV Profit with me Somit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade, either on the back of price or volume. So let's see what's on the show today. Firstly, we'll be speaking with the management of Enviro Infra. Now, this stock has been buzzing off late. It's up nearly 23% in the last 1 month. What are the key questions that we'll be asking the management is the order inflow growth and how's the outlook looking like when it comes to the order book. Apart from that, we'll be also talking about stocks like Hindustan Composite. Now, the stock was up nearly 17% at one point of time. Its biggest move that we have seen since April to 2026. And this is on the back of the sale of a business unit for nearly 370 odd crore rupees to another listed company called Rane Madras. Apart from that, there is a couple of auto ancillaries that have been buzzing in trade. Bharat Seats and JTAKT. The volumes are quite strong in both the counters. Bharat Seats has been gaining for the last 4th consecutive session, while for JTEKT the volumes are nearly 11 times its 20-day average. And lastly, we'll be speaking about a counter called Confidence Petroleum. Now, the stock has more than doubled in the first half of 2026. In June 2026 itself, despite the spike that we have seen in the share prices, promoter has bought nearly 64 lakh shares from open market. So strong confidence coming in from the promoter side as well. What could be the potential reason behind this is something that we'll try to decode on the show with our colleague and with our fundamental guest as well. Now, if you look at the market, the July series has started on a very positive note. The market's up nearly 150 odd points. We are above the 24,000 level, but finding some difficulty to considerably move above the 24,050, 24,100 level in trade. Nifty Bank Index, that's also up nearly 400 points in trade. And if you look at the sectoral gainers here, as you can see, in 412 points up, Nifty Bank Index again struggling to cross the 58,000 mark here. When it comes to sectoral indices, Nifty Real Estate has been gaining for the second consecutive session, followed by FMCG and banking names as well. On the losing side, if you look at, is the Nifty IT yet again down because of the KPIT howler that came in yesterday post-market. The entire index is down nearly 1.4%. Again, a good day coming in for the small cap names as well. But Mahima, which are the key stocks here?
Right, so Somit, I'll start with the listing that happened today at Advait Jewels, because this is one of the small cap names that's done very well. Did see a listing gain of almost 36-37%, cooled off from that point, but still I think gaining above 30% mark. The other one is Sona Koyo Steering, which is also buzzing in trade today, up by about 14%. You have something like a Bharat Seats, which is also doing fairly well, up by about 12%. Hindustan Composites is the other name, as Somit was also talking about, is up 12%. Something like a Signpost India is also doing fairly well, up 11%. Thirumalai Chemicals up 10% as well. SG Finserv, Fusion Microfinance are also some of the other names that are doing fairly well. But on the flip side, you have the recent listing that happened today again, which is Waterways Leisure, which is down 17% in trade. So listed on a discount, completely opposite to Advait Jewels. You have something like Global Surfaces, which is down 5%. Something like a Ramco Systems, which is also seeing a downtick of around 3.7%. And also names like R Systems, Megamani Organics, IndiCube Spaces that continue to be under pressure, down by about 2% each. So these are, some of the names that are buzzing. And this is, of course, on the back of news flows and volume action that we are seeing. But, let's talk about Enviro Infra, and let's try to pull up the stock and see as to what it's doing in trade today. It's up by 1%, but it'll be interesting to understand as to what's happening with the company. We've always, talked about this as to how water could be the next oil or next gold, right? And to understand as to what, how things are shaping up at the organization, we're joined by Manish Jain, who's the managing director at Enviro Infra Engineers, joining us now. Manish, a very good afternoon to you. Mahima this side. I think my first question to you is with regards to your order book. Your order book right now stands at, that 6,800 crore plus mark, which is almost 5 to 6 times of your FY26 revenue. Just want to understand as to what is the execution visibility of this 6,800 crore order book. And in terms of the growth of this order book, what is the growth that you're looking at for FY27?
Good afternoon, Mahima. This order book of 6,800 crore is getting split into 3 parts. One is the operation and maintenance order book, which is somewhere around 2,000 crores. And then the execution order book, which is divided into water and wastewater segment, and then the renewable segment. The water and wastewater segment order book is 2,700 crore, and the renewable segment order book is 2,100 crore. The execution timeline is in the range of 18 to 24 months. So on a conservative basis, we can expect revenue visibility to the tune of 2,000 crore in the current financial year. Furthermore, there are already a number of projects for which the bids are submitted. Right now, this bid pipeline of the company is in the range of 4,000 crores. And then there are also a number of projects which are again lined up in the water and wastewater treatment segment. So we are basically bidding for this. We would look forward to adding another 2,000 to 2,500 odd crore order book from the wastewater segment itself in the current financial year.
Okay. Sir, if you could just give me some idea about, going forward, how would your order book look like? Would you be focusing more on waste management or the solar EPC projects? Some idea on that front?
The key focus area of the company always is the main parent business of the company, which is water and wastewater segment, and which is also the most exciting segment for the company. The renewable segment which we have started, it is always complementing the business of the parent company. So as such, whenever we discuss about the growth, it will be a growth in the parent segment, and then a complementing with the renewable segment as well. So the entire growth, what we look forward to, first of all, it is from the water and wastewater segment.
Okay, but Mr. Jain, just want to understand, because your percentage of order book that comes from renewable is also rising. The share of revenue so is rising, right, from renewable. So going forward, what will be the mix like between renewable and water and waste management treatment, and where are the margins better? How do you expect the blended margins to be at, let's say, by the end of FY27?
Since there is a exponential growth in the renewable segment, so that is why the order book has gone to such an incremental increase in the renewable segment itself. Along with this, we have gone for the acquisition of a wind EPC company, which is Suyog Urja Limited. So the order book has got increased significantly in the renewable segment. But whenever we give any split in terms of the revenue, so we always give a growth in the water and wastewater segment and then in the renewable segment as well. So presently in the current financial year, we do expect that the water and wastewater treatment segment should contribute somewhere around 1300 to 1350 crore in terms of revenues, and around 650 crores from the renewable segment. So if when we say on a consolidation basis, the PAT margins could be somewhere in the range of 13.5 to 14%. Earlier it used to be 15 to 16%, but on a consolidation basis now it would look to be somewhere in the range of 13.5 to 14%.
So a couple of questions from my side. Firstly, I wanted to check with you. In the first quarter, any delays in execution that you have seen because of the geopolitical issue, any issue that you have faced in sourcing any goods because of which there would have been any delays in execution?
There has been a deferment on the supply side from our side. I will not say there is any delay in the execution, since a number of projects which we won in the month of March and April, now the works have started. Basically, the design phase is going on. So on that front, I will say there has been a slight deferment in terms of procurement of certain materials. Other way around, there is no slowdown at all.
And secondly, I wanted to check with you on working capital. It was on the higher side in FY26. How do you plan to bring it down, and what is your target?
To my expectation, from Q3 and onward, the working capital cycle, it will get eased out significantly. Q2 also, we expect that the things should get settled down.
Mr. Jain, when I was looking at your guidance, you've said that by FY27 end, if I'm not wrong, you do a top line of around 2,000 odd crore. But for FY28, your guidance is anywhere between 2,500 to 2,600 odd crore. Just want to understand, because you're saying you already have an order book of 6,800 crore. You're going to add more of 2,500 crore of order book in FY27. Then why is it that FY28 revenue growth will slow down?
No, that is not going to slow down. Based on the current order book that I do have in hand, based on that we have given a projection that even with this current order book, 2,000 crore is what we will transpire in FY27, and the balance to be replicated in FY28. So that is a very conservative estimate which we are giving just on the basis of the present order book in hand. This revenue growth should increase in FY28, but be on a conservative side. That is why we are projecting that somewhere around 2,800 crore is what is the clear-cut visibility available with us right now.
Okay. And Mr. Jain, what about your capex plans? Any plans that you have for capex in FY27? What is that amount going to look like, and how is that going to be funded?
No heavy capex plans at all.
Okay, all right. And with regards to, the overall metric in terms of renewables, just want to understand that what is the order book growth visibility that you're seeing on this particular part? Because right now, if I'm not wrong, if you take a look at the order book itself, around 30% execution part comes from renewables and around 15% forms part of your operation and management and IPP. So what will that order book growth look like for renewables itself?
Since the present order book, it is 2,100 crore, we would further look forward to adding somewhere in the range of 1,500 to 2,000 crore from the renewable segment as well.
And with regards to, you talked about PAT margins, but wanted to understand with regards to EBITDA margins as well. FY26 is where you ended the operating margins at around 24%. And if I'm not wrong, your guided range is going to be 21 to 22%. That's a downtick from what you've already done. So what is the cause of that? And then in the next, let's say, 3 to 4 years, do you expect margins to recover from here on?
The downside projection in the EBITDA margins is because of the price rise which has happened in the past 3-4 months. Right now, we look forward to prices getting stable as the war has ended. So the things are getting settled. But as a guidance, we have given that level of 21 to 22% EBITDA margin in the water and wastewater treatment segment. In the coming financial years, definitely based on the order book that we may get, because wastewater segment in itself is becoming very exciting and a lot of opportunities in terms of reuse of wastewater, ZLD, desalination, which are coming up. So that way the margin profile can definitely go to the earlier range further. Renewable segment EBITDA margins varies in the range of around 15 to 18%. So at a blended level, we can say we can manage EBITDA margin in the range of somewhere around 20.
On the debt side, I believe it's close to around 422 odd crores or 420 odd crore rupees, a short and long term gross debt. It's nearly 1.5 times, I believe, your EBITDA number. Is that a concern for the company as of now, or you are comfortable with this debt level?
If you see the debt to equity level, so we are hardly 0.34. And that too, our long-term debt, which is in directly paired to any of the assets which we have created in terms of M. So that way we are quite comfortable, and that this debt to equity is not going heavy in the current financial year as well.
All right. Okay, Mr. Jain, thank you so much for helping us answer all those queries. We look forward to speaking to you once your Q1 numbers are out. But thank you so much for taking out the time. With that, let me also welcome in Narendra Solanki, Head Fundamental Research Investment Services at Anandati Shares and Stockbrokers, joining us now. Narendra, you probably heard the management. Any quick take on Enviro Infra?
Yeah, good afternoon. First of all, let me start with disclaimer. We do not have any active recommendation on the stock, but whatever we have heard of the management, I think from the order book perspective, the order book is good, and the sector in which the company operates is a sunrise sector, especially in the current scenario wherein we are seeing monsoon maybe falling short of its expectations. And that scenario, a lot of desalination projects would be focused by various governments. Plus, the industrialization which is happening across our country needs a lot of water treatment plants, desalination projects, STPs, ZLDs, etc. So I think the sector growth would be definitely there, and ultimately it comes down to how the company manages the execution part, how the company manages and keeps working capital in check in order to ensure free cash flow generation. So that would decide the ultimate returns for the investors. So I think if a company manages on that front, then I think the future looks good for both the sector as well as the company.
Okay, that was the view coming in on Enviro Infra. With that, let's slip into a short break and we'll address more small cap stocks on the other side.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में.
PMark, the mustard specialist since 1933.
बरसों से सरसों.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Okay, welcome back. You're watching Small Cap Buzzers here at NDTV Profit. The next counter that we're putting spotlight on is Hindustan Composite. Now, overall, the stock has gained as much as 17%. Its biggest move since April 2026. Cooled off, of course, from its day's high point. But it's in focus on the back of its sale of business for 370 odd crore to Rane Madras. Now, we have Shivam joining by to give us more perspective on how is this news flow positive for the counter. Shiva?
Yes, the stock has been seeing a strong momentum as it has gained around 11% in today's move, which has been the biggest move since April 2026. And as you rightly mentioned, the reason for this strong momentum is that the company will sell the friction business to Rane Limited for around 370 crores. Now, the board has also approved this deal, and it is expected to complete by September 2026. Now, few details of the friction business, if we talk about this includes the manufacturing of friction materials, and these products are being used in automobiles, railway and industrial applications. If we talk about the FY26 turnover, it stands at 315 crore, which is approximately 84% of Hindustan Composites turnover. The key rationale behind this that the company has mentioned is that this sale will aim at embedding value unlocking, and also this will simplify the operations going forward, and which will reduce the business complexity. Apart from that, the proceeds from this deal will be deployed in strategic investments, and this will also help avoid a significant upcoming capex cycle which is required for its friction business, and this is expected to strengthen the balance sheet, and also this will be EPS accretive for the company. In terms of stock performance too, the company is doing pretty well and has recorded positive returns on a time frame of 1 week and 1 month too.
Okay, all right, Shivam, thank you so much for getting us those details on Hindustan Composite. Narendra, any view on this one?
Again, from coverage point of view, we do not have any coverage, but yeah, having read that announcement, I think the company is has sold off its key business, and now I think it will be operating more as an investment vehicle for its shareholders. So maybe it's a short-term reaction of the cash which the company is receiving, but I think medium to long term, it's a very tricky bet, and the company or the management has to actually perform in terms of operating as an investment company. So I think we need to wait and watch.
Okay, so that's the view coming in on Hindustan Composites. The other one is Bharat Seeds. Now, Bharat Seeds and both JTE, KT are in focus, and this is on the back of, auto ancillaries that have seen gains in trade throughout the day today. For Bharat Seeds, it's the 4th consecutive trading session, and for JTE, KT, the volumes are up over 11 times its 20-day average. And we have Puneet joining by to give us more perspective on both of these names as to what's working for them.
Well, thank you for that. So for Bharat Seeds, the momentum continues, the 4th consecutive session as mentioned, and for JTech India also it's 11-time volume increase on its 20-day average. The important part about both companies, as you rightly mentioned, in the auto ancillary space, so Bharat Seeds, a manufacturer of complete seating systems as well as interior components which they manufacture. For JTech India, primarily engaged in the business of manufacturing steering systems as well as other components. Now, when you look at the two companies, now while the momentum is there today, very different in terms of the share price performance for the last 1 year. JTech India up 9%, but Bharat Seeds is almost up 93%. And when you also look at the 5-year picture, very divergent trends yet again. 179% up move for Bharat Seeds, while JTech India, which is of course the larger player between the two, is up 45% in terms of stock price performance, has underperformed the Nifty as well at this point of time. But when you look at the numbers for FY26, now there is a clear divergence here as well. For Bharat Seeds, the revenue growth was almost 51%, coming at close to 1,950 crores. Margins maintained at 5.07%, and profits were also up almost 27% at 42 crore. For JTech India, though, they reported 11% revenue growth, but margin profile is better compared to Bharat Seeds at 7.5%. Profits, though, have been meager, and there has been a couple of key reasons why. Now, it's important to focus because JTech has a lot of market share in the steering systems, but profit growth has been impacted because of higher costs. Now, they mentioned in Q4 that while they got a higher SOP from Maruti Suzuki for Victoris as well as for e-Vitara as well, those are helping the 20% growth also in the export sales that the company did at 66 crores. But gross margins have continued to deteriorate over the last 2 years, and largely for the last year, lower margin products sold into models like Alto as well as Brezza have impacted the performance. So the company has mentioned that they are looking at improving the margin profile going forward, but currently that seems to be a picture, and hence a lot more perspective on Bharat Seeds given that the outperformance has been led also by revenue growth.
Okay, Narendra, any quick view on both of these auto anchs and the entire space as a whole?
Yeah, definitely. Auto ancillaries is a space in which we are very positive on. Right now, we do not have any view on both these stocks, but in terms of ancillary space, we are very positive, and on the stocks like Minda Corporation, Pricol, Uno Minda, ZF Commercial Vehicles. So we believe that auto ancillary is a space wherein we have a sustained long-term momentum of growth, which would be there for the next 3 to 5 years.
Okay, thank you, Narendra. Thank you for joining us and giving us your views on the stock that we discussed on the show today. Well, moving on to our next small cap stock, that's Confidence Petroleum. Now, this stock has doubled in the first half of this calendar year, but despite that, the promoter has not shied away from buying more shares from open market. In the month of June alone, in the last 15 days, in fact, of June, the promoter has bought nearly 64 lakh shares from open market. What does the company do and what's the way forward? Let's get in Jasmeet to understand more.
Well, Samir, thank you for that. It's a quite interesting company, must say. Let's quickly understand what does the company do. Well, the company operates an LPG and CNG solution provider, and what they basically do is they provide end-to-end service across sourcing, bottling, distribution. So they control everything in-house, which helps them to impact and improve the margins and control the overall cost. When you look at the overall performance of the company, I did rightly say the stock is up nearly 80% over last 1 month, and over last 6 months, the stock has rallied nearly 110%, nearly double of what it actually is. And as rightly said, the promoter also bought in the stakes, which shows a positive momentum across the stock, and that's why the stock is rallying even today up nearly 3%. Let's quickly understand about the FY26 figure, and it's an interesting catch here, given that the revenue is up nearly 50%, the strongest growth we have seen for the revenue, but the margins have compressed. Though the top line is growing at a lower cost, that's why the margins are seeing dipping on consecutive quarters. Now, in terms of the overall margin performance, the margin is lowest in last 11 quarters so far. That's what we have understood. And further, if you look at the full year revenue, it's up nearly 50% at 4,700. That's roughly 4,700 crores, while the EBITDA is at 378 crore, up hardly 3%, which shows the overall cost is going way faster for the management. The material cost increase in the previous year has impacted the overall margins. But it's a wait and watch for the Q1 pattern for the company going ahead.
All right. Okay, Jasmeet, thank you so much for getting us those details. With that, viewers, we're completely out of time on this edition of Small Cap Buzzers. But if you have got stock-related queries, then do stay tuned in because Ask Profit to the afternoon edition is up next.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
PMark, the mustard specialist since 1933.
सरसों से सरसों.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
welcome. You're watching Ask Profit, the afternoon edition here at NDTV Profit. I'm Mahima Vatrajani, and with me is Puneet Zaveri, and this is a show that gets all your stock-related queries answered. For viewers who are tuning in, you can either give us a call or send us your queries on the WhatsApp number that will be flashing on your screen up there. And while you do that, let's take a quick look as to how the markets are doing. Well, after the heat that the Nifty saw in the last 3 days, I think it's time that even the index is enjoying the rains that we're seeing in Mumbai today. But it's up 0.6%, almost at its day's high point. With regards to the counters that are doing well on the Nifty 50, you have consumption names that are leading the gains for the Nifty 50 of Eternal, Nestle, Asian Paints, HUL, all doing very well, gaining in that range to 3 to 4% each. You also have some auto names on the back of numbers that are coming in for the auto sales doing well. Something like Mahindra and Mahindra are doing fairly well, up 2%. Both your Adani names doing fairly well, Adani Enterprises as well as Adani Ports. Kotak Mahindra Bank, of course, on the back of the acquisition of Deutsche Bank, also seeing some gain. But on the flip side, it's IT that is pulling, the threads for the Nifty 50, unfortunately. Tech Mahindra, which is down 3%, and this is on the back of the KPIT tech guidance that they've, tried to reduce. HCL Tech also seeing downtick of around 3% Hindalco continues to be under pressure. TCS, Tata Motors, L&T are some of the other names that are also under pressure. Let's try to pull up the Bank Nifty and see as to where the Bank Nifty is trading at right now. I think at its day's high point, if I'm not wrong, 57,900 levels is what we're tracking on the Bank Nifty. You also have the defense pack, which is up by about 0.2%, but I think Realty is really doing well, followed by Media, led by Z Enterprises. You also have FMCG, as we talked about, doing fairly well, and Auto doing well as well. Let's try to pull up the mid cap 150 and the small cap 250. The mid cap 150 is still where it was when we spoke last at around 11:30, just up by about 2%. The small cap 250 is also pretty much where it was, right? Slightly, has seen a downtick from the day's high point. Trading around 0.4% higher, but a lot of action coming in specific names with regards to news flow and volume. So that's, of course, with regards to where the broader end of spectrum goes. Quickly, the BSE 500 before we start taking your questions and see as to where the action really is. KPIT Tech, of course, the one losing the most ground on that BSE 500 chart. Let's quickly try to pull that up if we can, down 15%. But you have names like Apar Industries, Tata Elxsi, IGL, Coforge, Garware Tech, also taking a knock, but RITES on the other side is doing very well. C Infosystems, RHI Magnesita, Delivery, Home First, and AB Realty are some of the other names that are also doing fairly well. So that's, of course, with regards to where the markets go. But to answer all your stock-related questions, we're now joined by Kunal Rambia, who's the founder at The Street, and Neerav Ashar, Head Equity Research Analyst at Latin Manharlal Securities, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. I'll start by taking the first question, which is from Radhakrishna, who's writing us from Kochi, asking about CMPDI, and he's bought this counter at the levels of 154, and he wants to know whether he can continue to hold this one or book out at whatever profits that he's sitting at. Neerav, because I don't think there would be enough data on this one with regards to where charts go. Any view on this particular counter?
Of course, the advice would be to wait for the next quarterly results and the commentary from the company, and then only decide to take a call whether to exit the counter or to continue to hold the same.
All right, the next one that we have is coming in from Sriram Raghuraman, who is writing us from Chennai. This is one of the small cap names that we just took on the small cap buzzers. JTech is the one that he's asking about. 30 shares is what he's bought at the levels of 120 rupees. Wants to know from a slightly long-term perspective, is this a good hold? Kunal, anything on the charts for this one? It's seeing a significant uptick in terms of volumes also in trade today.
Good afternoon. Thanks for having me on the show. So as far as this counter is concerned, it's been broadly into the consolidation phase between 125 to around 175, 180 levels. And it's definitely showing good momentum right now with good volumes also. But I think once it comes out of consolidation, I'll be more keen to see how the breakout shapes up. So yeah, if you're already holding this, hold with the stop loss of 125. The new entry should be taken above 170 or 175 on the closing basis.
Okay, all right. The next one that we have, this is on NTPC Green. Vanita from Mumbai has bought NTPC Green at the levels of 109, and she wants to know if she can continue to hold this one or sell. Neera, your view on this one?
Well, I think it's a good company. They are definitely good financials, good execution. But the stock has been quite a laggard. So I think it's better to shift to some other names like a Suzlon Energy or an Inox Wind.
The next one that we have is coming in on Man Infra. Jevtana from Chennai has bought it at the levels of 158. 3,000 shares is what he or she has bought, and wants to know from because they've been a patient investor from almost a year ago, whether to continue to hold, sell, or maybe average this one. Kunal, what would you recommend?
See, overall, if you look at the last entire year performance, this counter is clearly making lower top, lower bottom formation, and there is not even a single ray of hope. In between, we saw kind of movement, but again, it just fizzled out. So unless this counter goes above 130, 135, I will not look at this counter from the buying point of view. But because our viewer is already holding it, I would say hold, but don't average out. I mean, because your horizon is pretty long. In that case, it's absolutely okay to hold. Revisit the channel once it crosses about 130, 135, take a view, and probably at that time we can think of averaging out. But for now, it's just a hold.
Okay. All right. The next one that we have is on Azad Engineering. Aditya from Jamshedpur is holding 500 shares, bought at the levels of 2,100. He wants to know whether he can buy more of this counter or not. Kunal, I'll stick with you for this one. What is your view on the charts for Azad Engineering?
It's a clear thumbs up on this counter. See, this counter showed the first breakout above 1975 to 2000 levels, consolidated really well, making sideways consolidation formation like a flag formation. So with the stop of 1975, one can definitely add more onto it. If he's looking out for the momentum, then he should wait for the breakout of 2200. But I think at present level, the risk reward ratio is favorable and the breakout already has happened in the month of May. So yeah, it's a thumbs up. Add with the stop loss of 1975.
Right. Okay. The next one is on Vatek Wabag. Our viewer wants a 3-year view on this one. This is Christopher, who's writing us from Chandigarh. He's bought 700 odd shares at the levels of 1539. Neera, what would you recommend on Vatek Wabag?
The clear-cut advice is to hold and to also accumulate if there is a dip in the stock.
Already sitting on profits of 3 lakh rupees. So no partial profit booking, right? Continue to hold.
No, not at all.
Okay.
We should hold.
Okay, but I must appreciate the fact that, Christopher, you've bought it at attractive levels and sitting on significant amount of profits. The next one is from Karthik, who wants to know the right time to buy Zaggle prepaid, and he wants to know if this is the right time or should he wait for a while. I mean, Kunal, I just want to know, is there even going to be a right time to maybe enter this counter?
Yeah, you honestly look at the chart for the very first time itself after seeing the screener. Yeah. So yes, I mean, this counter has come down significantly from the extreme highs of 600 and now consolidating near the lows. But the consolidation should not be the reason for us to buy, right? So the first support which I can see on the chart is 195, though it is holding on to those levels, but there is no momentum as of now. So I would avoid this counter for now. If at all he wants to buy, then this can be a good level because risk reward ratio is extremely favorable. But I would advise to buy above 120, 225, 230 when the momentum picks up. Avoid for now.
Okay, all right. So that's the view coming in on Zaggle. I think we've got Kalyan who's calling us from Chennai. Kalyan, a very good afternoon to you. Go ahead, ask your question.
Good afternoon. So I'm holding some 150 shares of HEG, bought at the rate of 650. Actually, I bought for a short term.
Okay.
Just want to know whether I can hold, sell, or I can add on something to that one.
Sorry, what is the time horizon that you're looking at, Kalyan?
Almost 3 to 4 months.
3 to 4 months. Okay, then I'll take this up with Kunal. Kunal, what's your view on the charts for HEG? He's sitting on loss of over 18,000 rupees.
See, if I look at the last 3 to 4 years performance, this counter is clearly making higher top, higher bottom formation. In the recent correction, though it has come down from 680 to 700 levels to as low as 520 levels, but this present level is very attractive. So yes, this is a level to, in fact, buy a little more. The stop loss in this case will be 505 on the closing basis, and the targets can be 600 levels. So yeah, it's a clear thumbs up on this counter.
Okay, all right. The next one that we have is on Godrej Properties. Navpreet from Jaipur is holding around 164 shares, bought at the levels of 1911 rupees, and wants to know whether to hold or sell this one. Nirav, not just on Godrej Properties, just want to understand because for real estate, we've seen a pickup from the low point, but we've also seen volatility when it comes to the entire index, right? If you were to play this theme, do you think this is the right time to play the theme first of all? And would Godrej Properties be your pick, or if you have any other pick in the space?
Well, I think the corporate-based real estate players, whether it is Godrej Properties or whether it is Raybund or whether it is AB Realty, continue to rule quite strongly. So I think I would hang around over there and also look for some emerging players like Mahindra Lifespaces, which have got very aggressive expansion plans in the near future.
Okay, all right. The next one that we have is on Gillette India. Shaunak Kulkarni from Mumbai bought Gillette India at the levels of 7693. He's holding around 100 odd shares and wants to know if he can, he's bought it today is what he's saying, and wants to know if he can continue to hold this or sell. Kunal, what would you recommend on the charts?
Since July 2024, this counter has consistently taken support near 7,500 levels, which is almost near, just a month ago's bottom. And this level is good from the long-term point of view. But again, if our viewer is willing to book in the short term, then we should be moving on to momentum-based counters and not such counters. But yeah, from the positional point of view, these levels are very attractive to accumulate, and the upside targets can be 8,600 to 8,700.
Okay, all right. The next one that we have is coming in, and this is on HCL Tech. Our viewer says that he's bought HCL Tech since the levels of 1,400 rupees and wants to know whether he can maybe buy on dips or exit this one. Nirav, the entire pack, of course, is taking a knock today, but HCL Tech is something which did gain significantly on the back of that Sarvam AI announcement that they made. Do you think that's the right strategy to approach HCL Tech, or should you stay away completely from IT names?
I think it's advisable to stay away completely from IT names, at least for the time being, till we have some clarity, and to move on to some sunrise sector like textile sector or the defense sector, etc.
Okay, all right. The next one that we have is coming in, and this is on Suzlon. Rajkishore Singh is holding, is that correct, 31,000 shares of Suzlon Energy at the levels of 59 rupees, and he wants to know whether he can continue to hold this one or not. I think Nirav has already said that his pick would be Suzlon Energy in the space, but I mean, Kunal, such a huge quantity and sitting on significant amount of loss, what would you recommend?
See, because the view is assumed to be on the shorter term, if I look at the last 3 to 4 months performance, this counter is clearly making higher top, higher bottom formation, and the recent bottom was at around 56 rupees. So I think with that particular level as a stop loss, one can definitely one should hold on to this position. On the weekly chart, this counter has not done much in the last entire year. So this is more on a higher side of it. By any chance, if we see some kind of correction near 51, 52, I think that can give us a good comfort from the risk reward point of view. So from short term point of view, hold with the stop loss of 56. And from mid-term perspective, I think this you should take an exit and wait for some kind of correction to buy.
So that's the view coming in on Suzlon. The next one that we have is on Ola Electric. Aarti from Bengaluru wants to know if this is the right time to buy the counter. Kunal, I'll stick with you for this one. What do you think? Are the charts attractive enough right now?
Absolutely. Clearly making higher top, higher bottom formation right from the bottom of April. And now this counter has shown again good momentum since yesterday, right? So yeah, it's a clear buy with the stop loss of 41.5, and the upside targets can be 55 to 60 levels.
Okay. All right. The next one that we have is coming in on Trent. Lalita from Bengaluru says she bought 10 shares of Trent at the level of 2,900. So she is sitting on profit. So she's been a smart investor. Not sure if she's taken it in this cycle or not. But Nirav, for Trent, what would you recommend? I mean, if it's, taken off significantly from the days from the lows that it's seen overall, not just the day one, but it's still very far away from the highs that it has seen, right? So what would you recommend for an investor who has stayed invested in Trent?
So it's been a roller coaster ride as far as Trent is concerned, but I think the recent AGM, the aggressive expansion plans which have been highlighted for the next few years, the plans of setting up around 200 to 250 Zudio stores per annum and adding around 50 West Side stores per annum, I think augurs well. So it's a hold.
Got that view, Nirav. But the next question now coming in, and this one's on Sandur Magnes. Our viewer is holding shares at 207 odd, and he's holding roughly 3,000 shares of this counter. So bought it recently. Anirudh wants to know if he should continue to hold this. Kunal, would you recommend that at this point of time, looking at the charts?
Hi, Punit. So overall trend has been pretty much sideways, not much on the momentum front. So I think with the stop loss of 200 levels, one can definitely hold on to it for now. But if the counter crosses about 220, 225, I think it will pick up the momentum and then the targets can be 260. So keep this broader formation in mind and hold with the stop loss of 200 for now.
Okay, all right. The next one that we have is on Apar Industries. This is from Francis, who is writing us from Kundapura. He is holding at the levels of holding since the levels of 8,000 rupees. Is not given the quantity, but for sure sitting on significant amount of profits. Nirav, what would you recommend on something like an Apar Industries?
Continue to hold because of strong expansion prospects.
Got it. Well, the next question is from Priyanka Asher from Mumbai, and hopefully Priyanka didn't catch on to the Mumbai rains because it's been devastating today across the city. It's come to an hold, but she is holding on to Torrent Power at 300. She bought 300 shares at 1,432. Asking if it's still a good hold at this point of time for the long term. Nirav, good afternoon. What would you recommend on Torrent Power? It's been one of the key counters, but is it still good to hold?
Well, good afternoon. And I think the power story is a structural story, and it's going to play out at least till 2035. So I think any quality stock is definitely a hold, irrespective of the valuations.
All right, so that's the view on Torrent Power, but it's time for a rapid fire round. Kunal and Nirav, you both know the drill. Try to keep your answers as short as possible. The first one that we have is from Shekhar, who's writing us from Shahjahanpur. He's holding 300 shares of Tata Chemicals, bought at the levels of 810. What's the view like, Kunal, on the charts?
It's an exit as of now.
Next one's from Benny from Chennai on TCS. He's been holding at 2,219, and I hope he didn't buy it in the falling knife. But Nirav, should he still continue to hold this counter?
No, exit.
The next one's on Tata Steel. Ramesh from Bengaluru is holding 70 shares, bought at the levels of 208. Wants to know if he can continue to hold this one or not. Nirav, what would you recommend?
Hold.
Next one's coming in from Hyderabad. Kiran Kumar is holding on to Genus Power at 335. Nirav, should she hold her 279 shares?
Hold.
Okay. The next one that we have is on ITC. Our viewer Murliram from Chennai wants to know if this is the right time to aggregate some shares. He already has 300 shares, bought at the levels of 175. Would you recommend that, Kunal?
Absolutely, it's a buy.
Also on Vikram Engineering, Kunal, is it a good buy for the next 3 months is what Divya is asking.
Yeah, it can be thought of, it can be accumulated near 72, 73 levels.
Okay, the next one is on ITC Hotels. 1,000 shares, bought at the levels of 166. Shankar from Bengaluru wants to know if he can add 500 more shares and any target on this one. Would you recommend that, Nirav?
Definitely yes.
Praveen from Chennai wants a long-term view on ONGC, but Nirav, would you recommend that because of the volatility that we've seen, or should you look at a better pick? What's your opinion?
Well, I think it's advisable to stay away from upstream oil companies for the time being and maybe concentrate on downstream oil companies because they would likely to look better.
Okay, all right. Rubicon Research is the other one. Sumana from Dubai wants to know if this is the right time to make an entry and what could be the short-term target. Kunal?
The counter is at the extreme peak level. Wait for the correction near 1200 and think of buying them.
Harsha Engineering bought at 330 by Mahesh Babu from Hyderabad. He's asking if he should still continue to hold. Nirav, been in that range for the last 2 to 3 years, right? In that 400 odd zone. Should she exit now?
It's advisable to exit.
Okay, the next one is on Himadri Chemicals. Our viewer has bought 1,500 shares. This is from Prakesh, who's writing us from Kerala. He's bought 1,500 shares at the levels of 656. The short-term target on this one, Kunal?
I'll be scared because the counter has hit the highs of October 2024. It's an exit as
Cummins bought at 5714 by Dilip. He wants to know if he should continue to hold. We've seen actually, Nirav, a very strong move coming in on the Kirloskar brothers stocks as well. Kirloskar Oil also a key competitor. Is there any pressure there, or should he continue to hold, Cummins?
No, he should continue to hold.
Okay, the next one is from Gautam, who's writing us from USA. He's asking about a view on either Federal Bank or AB Capital. Which one is a better bet for the next 1.5 years? Nirav, what would your pick be?
I think AB Capital would be a better bet.
Idea Forge bought at 955 by Kapoor. Kunal wants to know if he should continue to hold on or sell out.
It's a clear hold.
Okay, Finolex Industries, our viewer Vishwanatha Reddy wants to know if this is a good hold. It's trading at around 174 rupees. Kunal, what would you recommend?
Just sideways consolidation, take an exit.
The next one coming in now on Bank of Baroda, bought at 275 by a viewer. He wants a 6-month view, Kunal. Should he continue to hold?
More or less sideways consolidation, switch to Federal Bank or somewhere where the momentum is. Exit Bank of Baroda.
Okay, just a shout out because Vishwanath Reddy had bought Finolex Industries at 9 rupees and now it's trading at 174. So kudos to that. The next one is on Petronet and this is from Krishna, who's writing us from Mysore. Wants to know whether this is a good buy at the current market price. Neera, would you recommend that for Petronet LNG?
Definitely yes.
Alright, okay. That brings us to the end of this rapid fire round as well as Ask Profit. Kunal and Neerav, thank you so much for taking out the time and helping us answer all of those queries. We've done 87 queries combining morning show as well as this afternoon show. But viewers, completely out of time, like I said, on this edition of Ask Profit. But do stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
सरसों से सरसों.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Nadia. Well, we're having fun this afternoon, aren't we?
Absolutely.
It's raining outside. It's great atmosphere. It's perfect for pakora.
Is it good to be inside?
Yeah, it's great to be inside. I love sitting inside and looking at everybody else getting drenched in Mumbai's monsoon.
And having the pakoras
yes,
inside.
Yes, there you go. See? But 0.7%, you'll take this. You started off a little wobbly and then you built on that. I think this is healthy to see after 2 days of consolidation, which feels like much longer.
Absolutely. You know, the July series, I would say, has started on a strong footing. This is the indication. And I think all the data points are actually pointing out that the breadth of the rally, if you have to look at July as a month, is going to be in the broader markets. And that is evident from what's happening in terms of today's session as well.
The advanced decline ratio is actually pretty healthy. We should pull up the mid cap and the small cap indices as well, and then we'll go into some of the details. It's not too much, right? The broader markets, the breadth might be good, but at the mid cap index level, it's not significant gains. We've come off quite substantially from that initial spike that you saw.
Correct. So it's mainly your breadth that is pointing out to the kind of gains that could come in from the broader markets. Though the advanced decline ratio gap is narrowing to some extent, but still your advances are ruling as compared to your declines to some extent. Just look at the heat map in terms of Nifty 50, and that will also tell you what's happening, because
certain large caps are doing well.
I mean, a lot of them. I mean, you just name it. Eternal, Nestle, HUL. You know what's happened is yesterday you did see some bit of profit booking in terms of your FMCG names, and they've all come back with a strong, on a strong note today. Adani Enterprises Ports also very strong. You have M&M, Maruti, both of these counters which are reacting to your auto sales numbers. What is interesting to me right now is that we're all talking about El Nino impact, a deficit that could be coming in as well, and how would this really augur when it comes to auto ancillaries or even for that matter auto companies. But I don't see that impact coming in here.
No, it's not coming in, and certainly I think the volume data for the month of June helps, right? Because if you look at a Mahindra & Mahindra, the fact that the passenger vehicle segment has done so much better than expected with that 28% growth in the month of June, and a lot of people on the ground also pointing to robust demand. That's good.
In fact,
just to make the point, pull up the heat map for the Nifty 50 itself, right? Because you're seeing consumption as a basket that is doing particularly well. Hiral pointed out Nestle and HUL. The concern really for these companies, Hiral, was will they be able to pass on the increases in input? And now when those pressures on the inputs are actually falling just a tad bit, like you're hearing.
Yes.
You're actually seeing the benefit of that coming through, because you saw Ridhima, a colleague, had a story just a short while back about grammage in Maggi, right? And Maggi accounts for 25% of the revenue of Nestle. On the other end, though, what is not working is the IT pack.
Absolute pain point. You're at a 6-year low in terms of the IT index. I don't know if anyone really imagined this kind of an impact with regards to IT. Tech Mahindra, HCL Tech, TCS, Infosys, name all of them under pressure.
Was it the KPIT impact?
No, I don't think so. It's the KPIT impact that has got it to a 6-year low as well, because the quantum in terms of
the latest selling
cuts. No, because see, KPIT is more of a European auto impact that you're seeing. KPIT is having an impact with regards to Tata Elxsi, Tata Tech. Those are the companies where this has a rub-off effect. But in terms of IT as a whole, I think there is a structural gap that's coming in terms of the entire space. It's only Oracle Financial, and I think we know the reasons why Oracle Financial is also up in trade, because of the kind of business it is in versus what the traditional IT companies do. But however, they were persistent, which is marginally holding up to gains of
it's also lost in the recent past, right?
Absolutely. Let's just look at the sectoral heat map as well, because that will also tell you a few things there. Real estate, continuing to see the kind of gains. Consumption we spoke about, auto we spoke about. I want to look at Bank Nifty and PSU banking space as well. Not bad. 0.8% to almost a 0.9% kind of gain. So it
keeping
is
pace with the benchmark.
Exactly. The major downtick is IT metals. In fact, I was just reading a Daulat report which was saying that the downtick that could come in the month of July also, the pressure point is mainly going to be IT as well as metals, because that's where the sell-off could continue. So I think these are two indices where investors need to keep their eye on if they're invested there.
The only thing is, and in a sense this is good from the benchmark perspective, the fact is that it's dropped now to an 8% weightage, so those frontline IT companies losing further ground will have a limited impact.
You know, the question I have now in mind is, between metals and IT, is there an opportunity to bottom fish? You know, that should be the answer that investors should get at this hour.
But in the meanwhile, you should check the fundamentals.
Yeah, and very quickly, if you have to look at the markets as well, 2-day losing streak is what we've actually snapped. A positive start to the July series that we mentioned about as well is what you're looking at. Moving from there on, if you have to look at Nifty and Bank Nifty, what's happening is they're actually struggling to cross those decisive levels. 24,100, which is on the Nifty 50, going up to 24,200, and the failure to cross these levels is indicating that the sellers are remaining active at higher levels. So the moment you cross that, you're seeing that pressure coming in, and that's where the slide comes in. The support, however, is locked in at 23,900 and 23,800 as well on Nifty 50. Now, if this cracks, the derivative cushion shifts much lower. Then you're looking at 23,400 to almost 23,300 on Nifty 50. Moving on to Bank Nifty, since I think 2 or 3 weeks, the structure is absolutely constructive when you talk about Bank Nifty as well, because the index is continuing to trade above your long-term averages. Resistance 58,000 to 58,100, and your support, which is coming in at 57,500 to 57,400. However, analysts are of the opinion that the structure in terms of Bank Nifty is much stronger as compared to Nifty 50 as well. And to actually get those details, let's get in. Sachin Janardhan Sarvade, AVP Derivatives Retail Research at IDBI Capital, as well as we have Nishchal Maheshwari joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Sachin, let me take the levels from you first. I mean, good amount of strength that's coming in terms of Nifty as well as Bank Nifty. Broader markets, pretty much subtle, but they are not on the downtick right now. If you have to analyze Nifty and see what's happening with Bank Nifty, what are the key levels you're watching out for, and when do you see that decisive upside coming in? Because 24,100 is something which Nifty is not really able to surpass on a decisive basis.
So thank you for calling me. Currently, the PCR for Nifty is healthy, wherein it is currently at 1.2 and above levels, which is a healthy recommendation basically. But only thing is, if we are closing about 24,200 levels on a closing basis, only then we can see a decisive move above that levels, and then we can see, in case if we are closing about 24,200, then we can see 24,400 and 500 levels, but the upside is limited. Furthermore, on the downside as well, 23,800 is a good support levels. If you are closing below that, then the downside levels are 23,400 and 500 levels.
Okay, quickly, individual stocks that you're liking?
So individual stocks, currently only the uptrending stocks which I am currently seeing. In that we can see from a Nifty 500 universe, Aether Energy is a very good stock. Misho I like, so these two stocks we can buy it.
Got it. Okay, for Misho, what is the stop loss and target that you have?
So for Misho, the stop loss will be 174 levels. The target is 205 and 215 levels on the upside.
Nishchal, coming to you, and the conversation that we were having earlier, Hiral and I, when we started the program, which is the two sectors that are underperforming today, and they have in the recent past, IT and metal. But IT's underperformance goes much further back, and for various reasons that are well documented. The question is, and a lot of people will ask this, Nishchal, when do you decide that the proposition on the value is worth considering, or is this a value trap because there are structural issues at play here?
Good afternoon to you and your viewers. Basically, I think the second point of your argument is more apt out here. There is a structural issue out there, and that needs to get sorted. I think at the moment, if I really look at it, the market is discounting, saying this industry and the larger companies are going to be doing a negative maybe 1 to 3% kind of a number, basically, as far as growth is concerned in the current year. But you really don't know, basically, whether it's going to be 1 to 3% and how long will that remain. So that's why I think there is a huge amount of uncertainty. And I think at best, this sector is unavoidable.
Metals, sorry, just to complete that point, metals, you're seeing, Nishal, the underlying commodity prices cool off in the recent past. That has to do with the dissipation of the tension in the West Asia conflict, as well as the way that the dollar is moving in the recent past, right?
So I think metals has run quite a bit, basically. I think once you take away profits as far as metals is concerned, both precious and semi-precious, I think basically even the metal rally seems to be over for me, basically, at the moment.
Okay, so that's with regards to Nifty metals. 30% is the kind of surge that you've seen in the last 1 year, and a 1% downtake. And I'm sure from the highs, you will see some bit of profit booking that will continue, because your metals on the LME also are seeing that kind of downtake from aluminium, zinc, lead, gold, silver. All of them have been on that downtrend in the last couple of days. But moving on, let's just quickly pull up Tata Motors PV. I think they've just reported the June numbers right now. You've seen that spike which has come in and then cooled off. We're still seeing cuts of around 0.4%. The expectation was around for 56,390. That was the number that you were looking at. The total PV sales have gone up 69%. 63,000 is what the number is with on a year-on-year basis. So clearly the numbers have beat street estimates as well. In terms of EV sales, 183% jump. 14,800 is what you're looking at in terms of where EV data goes. If you have to look at month on month, you were expecting a decline of around 5 to 6% as well. So we're going to look at that number closely. But clearly the numbers have beat street estimates as we speak. Nishchal, any view in terms of the auto sales data that has come in specifically right now with Tata Motors PV? The number is above what the street was estimating. EV has seen a growth of 183%. 14,800 is the number that you're looking at.
Very heartening, basically. I think that EV number is really heartening to see growth coming back as far as EV is concerned. Now we have to see, basically, given that the Gulf situation has got sorted, whether these EV sales continue or not. So I think that is one thing which needs to be watched out. As far as I think Tata Motors is concerned, their domestic continues to do well for them. They have got their act together as far as domestic is concerned. It is the international piece, basically, which worries. And there they are facing challenges, both in the largest market of theirs, in the US as well as in China. And I think that's what the market keeps them, a market is worried about.
Got it. Okay, all right. So that's the view on Tata Motors PV. You'll see that data trickling in over the course of the day. Quite a few companies already have released that information, and we'll try and wrap that up for you. But in the meanwhile, let's go to our stock of the day, which the team has selected as WeWork. And it is in sharp focus after a stunning 57% rally since March. The stock is up as much as 5% in trade today as well. The question is, how long will this momentum go and what's driving it? The management, of course, is...
The question is, Alex, in the last 3 months, however, the stock has been in terms of performance. But when you look at the 3-month chart, 58% is not bad.
No, of course it isn't. The question is, what's fueling that? And does that continue going forward? What's the room or what's the margin for error? Let's go across to Puneet to find out. Puneet, when a stock has gone up as much as this one has, then the Q1 numbers will be watched with magnifying glasses personified, right?
Well, most certainly.
Any negative over there, you know what's going to happen.
Well, most certainly, and it's been a dream run for the company because was around that 550 odd zone before that correction happened in the March lows, and then a very stupendous run, as you guys mentioned as well. So there has been a very strong performance. Yesterday, of course, the company held its analyst meet, so a lot of feedback and guidance coming through as well. And I want to start exactly with that because the management continues to maintain a very strong view. And hence they are targeting a 20% growth in terms of revenue outlook to continue in the near to medium term. They're also targeting roughly 1.5 lakh seats, of course, because it's a co-working space, million square feet as a unit to track. Also, the number of seat additions for WeWork is something to track as well. Currently, they are at roughly around 13.2 lakh seats, and that continues to and contributes to revenue. JM Financial is estimating that to jump to 18.2 lakhs in just the next couple of years, and hence that momentum is continuing as well. when you also look at, the higher ROC business is via, the operating leverage of the company from these seat additions. But the managed business is something that's, taking shape as well. Now, this basically, co-working, basically the co-working branded seats of the company, that is the higher margin business. Managed business is the second key vertical that the company operates. What you can do is go on the app, book yourself a seat, and hence this is something, flex working spaces is something that's getting developed now as well. This will companies catering to both large enterprises as well as to GCCs as well. And the managed business also offers these customized solution to enterprises who are currently smaller, but as they add headcount, you will get that benefit also. I just want to talk about the managed business also because the company is expected to tap its existing co-working user base as well, and hence you will see a lot more additions coming through is what they're expecting. But when you look at the financial numbers also, FY26 the company's revenue is roughly around 2,400 odd crores. The Bloomberg estimate currently is at 3,600 crores, so a 50% revenue jump in a couple of years. JM Financial is also forecasting that similar number, 22% CAGR over the next couple of years, with a strong EBITDA margin profile, and their target price is actually 850. So that question, if further room upside, JM Financial thinks to has 15 times EV by EBITDA. ICICI actually has a bigger target price of 937. So even substantial upside from here. They are targeting a 29% EBITDA growth, a 23% EBITDA CAGR in terms of revenue. So overall, the momentum has been strong because since the IPO, there wasn't too much movement in stock price performance. But over the last 2 to 3 months, you're seeing a lot more reaction coming through on WeWork.
Got it. Thanks so much, Puneet, for that detailed update that you shared with us. Nishchal, a question for you on WeWork. What is your opinion on this projection of 20+% compounded annual growth rate in EBITDA? The company has been expanding its capacity as well. The most recent development, of course, was the addition of capacity in Singapore. And they've now, if I remember correctly, the number is 76,000 square feet is what they have and 1,500 seats. So they've been building out their capacity and the prospects look good, at least on the face of it.
So I do not cover WeWork, but as a space, I can tell you basically there has been very good takeoff as far as the space is concerned. The sharing space, I think not this company alone, there are 2 more listed companies. Basically, all of them have been guiding very, very strong numbers. And my interactions with them basically give me this thing basically that I think a 20% number is not a very aggressive number which WeWork is putting out. And most likely it will be achieved. But given that I have not covered this company, so wouldn't be able to say that. But I'm saying as a space, looks very positive to me.
Okay, so WeWork. Sachin, anything on the charts if you have to look at a WeWork or if you have to look at Office, SmartWorks, any of those stocks excite you?
So WeWork actually has given a good breakout levels, and what we can see the above targets are 786 and around 908 levels, which are at least 10 to 20% upside from current market price. On the charts, the support levels are around 658 and 638 levels. So if in case we are getting some kind of a profit booking as well, so that will be a good levels to add.
Right, it's nearly a quarter to 3, and you know what that means. It's time to go across to my colleague Somit Sarkar to find out what he's hearing in the chatter from the dealing rooms in Heard on the Street. Somit, good afternoon. What are you picking up?
Good afternoon, Alex. A host of stocks that have been in focus. Starting off with Avenue Supermarts. Now, there are sell flows on the large HNI desk. The stock is down 3%. The buzz on the street, in fact, some disappointment regarding the store addition is one of the reasons why the stock was down in trade at least around 3% at one point of time. For Shilpa Medicare, there are sell flows as one of the key drug approvals that was expected by the street has been delayed, and that's the reason the stock is down nearly 4% in trade. For HUL, there are buy flows on institutional desks. Dealers are indicating that both foreign and domestic institutions have been accumulating this counter in trade and delivery volumes could be on the higher side. Paytm and PG Electroplus, both these counters are gaining in trade. Paytm is up 4% and PG Electroplus is up nearly 3% in trade. And dealers are expecting strong Q1 numbers, and that is one of the reasons why both the counters are perking up in trade. When it comes to central mine planning, a week back we did indicate that there were some sell flows that were expected and the stock was under pressure for the last 1 week, but now dealers are indicating that the selling is largely over here, and a prominent large HNI has been accumulating this counter in trade today. And lastly, when it comes to DDEV Plastics, there's a buzz of a potential merger and acquisition activity that could happen here. Dealers indicate that the company is on the block for sale, and they have given mandate to bankers. So keep an eye out for DDEV Plastics soon as well.
Very interesting list. Thanks so much, Somit, for that. CMPDIL, by the way, we spoke with the management just a short while back, a couple of days back. That interview should be available on our social media platforms. I'd encourage you to check that out. The stock is up at the high point of the day, up about 6.3%. And we were talking at the start of India Market Close about the likes of HUL as well as Nestle, both of those stocks buzzing in trade today. So, initial question for you, HUL up about 3%, but it's not like it's done a whole lot over the last year or so. So, the question really is that if the worst is over from the perspective of the pressure of input costs, then should you look at these FMCG companies and consider adding at these levels?
I think so. Basically, they are good trading bets. So there were two things that have happened basically out there. One was obviously the input costs after this war. I think the current quarter numbers is not going to be great because they have suffered during the quarter. But going ahead, I think the input costs have all come down. So I think that will be a relief. The second thing has been the issue about the rainfall. And I think in the last 2 or 3 days after what kind of rainfall we have seen, I think the deficits are already down of June. So that's what the relief I think the market is looking at. FMCG stocks have not gone anywhere. I think they are a good play. Valuations also seem to be interesting. Looking from a historical perspective, not otherwise basically on a standalone basis. So looks an interesting trading play to me.
Okay. You know, one thing I want to add over here is it's not only your HULs or ITCs. Look at a Colgate, pull up a Britannia, pull up Eternal, pull up Swiggy. Look at all of these stocks. The entire consumption basket has been on a front footing in today's session. In fact, this is a 12-month chart of Swiggy. Just look at the intraday chart. 3% upside on this. Eternal as well as the top gaining stock in terms of Nifty 50 today. Any counters, I mean, you talk about the FMCG index as a basket is up in trade. Sachin, on the charts, do you like any of these names? Do you see further momentum picking up? Because probably with the way the monsoons are starting to pan out right now, the alerts that we're picking up from SkyMed and IMD as well are indicating it's nearing. And if it continues in the way we are seeing monsoons arrive right now, I think it can turn the tables onto a positive side.
So comparatively, what we can see from an FMCG point of view, only two stocks which are good on my radar is Nestle, one is, and the second is DMart. So only these two, I think the trend momentum is good. Rest all the trend for the stocks are down. So what we can see is whenever we see some kind of a bull rally, so it actually uses as a profit booking, and it can be a bull trap as well. So I think to avoid the downtrend stocks and go with the Nestle and DMart.
Okay, but today you are seeing a DMart which is under pressure. So are you seeing an opportunity to buy then?
Yes, because it has actually taken a good support levels and has recovered from the lows, and overall the trend for the stock is up only. So what we have seen from the lows, it has taken a good support levels with volumes. So it is a good opportunity to add basically.
Okay, all right. The stock hasn't really done too much. It's seen fits and starts, but it's not really managed to sustain a considered up move. Let's talk about a stock that has been under tremendous pressure in trade today. It's broken all of those levels consistently. At the start of trade, of course, it got stuck at 10% and then that circuit opened down. KPIT Tech is what we're talking about. And pull up the intraday chart. It's currently trading with cuts of 16.5%. And that's because the company was forthright and came through with a guidance that said that things are not looking necessarily very good. Just me joining in to tell you about the key numbers and why the street is so negative at this stage. Why is this coming through, Jasmeet?
Well, Alex, thank you for that. As rightly said, the stock did open with a negative bias of down 10% and broke that circuit as well, and currently down 16%. While this comes in after the management has given the weak outlook for Q1 FY27, where they expect a 1% of currency downtick on revenue downtick on YY basis. Now, while they have given this reason due to the weakness in the overall European OEMs, and they're seeing the business slowing down, which is impacting company directly. Now, we have also estimated in terms of the overall revenue impact, which we might see in the Q1, and the estimated revenue in dollar terms for Q1 could be at $176 odd million, which is a roughly downtick of 4.7% on QOQ basis. As we look at IT on the QOQ, which gives a better image, it shows a downtick of nearly 4.7%. With this, it also marks its first quarter where it will be seeing a degrowth when you look at the over last 6 years. So first quarter in last 24 quarters see the actual degrowth, and that's what the street is not liking. Let's quickly understand why the slowdown on European OEMs. Well, recently during the July 15th, BMW, one of the biggest clients of KPIT Tech, had come out and given its guidance where they had cut the profit guidance for FY26 from earlier 3 to 6% to 1 to 3%, and the reason of cut was the overall slowdown. So that indeed has impacted the company and also slowed down company's business altogether. Now, talking about the margins and the profit performance, while the company does make a note that this all implications have happened in the later weeks, so there is no room for cost optimization, and they expect the margins and the profit to fall far more compared to the revenue on sequential basis. Now, in terms of the overall analyst estimation, that estimated the fall could be around 1.2%, but the fall is greater than what was expected, and that becomes a key concern. Lastly, on the outlook front, the management remains confident that the H2 of FY27 will be good compared to the current quarter, and they expect the Q2 also to have similar impact what was in the Q1. So it's a wait and watch of how does the H2 pans out, and the Q1 results are awaited in the month, so let's see how that goes.
Okay, lots to watch out for. Thank you so much for that, But along with this, you have the entire index, which is under pressure. We are already at a 6-year low on the IT index. What's interesting is in terms of Infosys, yesterday's session, it actually went below the 1,000 mark for the first time in 5 to 6 years. So there are, it seems, structural issues. I mean, and how should one call this is anyone's guess. But let me get in Kunal Bajaj, Equity Research Analyst at Choice Institutional Equities. We'll talk about KPIT and then at this as a sector as a whole. Kunal, good afternoon. Hiral on this side. I mean, you've looked at, KPIT, the guidance cut that has come in for the first quarter. What is interesting is that they've also mentioned that the second quarter will be very similar to the first quarter, which is telling you that probably the first half of FY27 is going to be a washout. What do you make of this announcement and the kind of rub-off effect it could have?
Yeah, thank you for having me. Obviously, KPIT, the Q1 guidance as well as now today's Q2 guidance as well is way below expectations. We were expecting around 3% on a YOY decline, but I guess this is more than that. Sorry, on a QOQ decline, it is more than that. So we expect this downturn is because firstly, in last quarter, the company has mentioned that there were a couple of deal ramp downs that has happened. And now with European OEMs also giving commentaries around weakness in terms of EV as well as IC engines. So now they are on a wait and watch mode in terms of CapEx, which they are trying to do. So now we see that going forward across ER&D companies, not just KPIT, but other ER&D companies, let's say be it Tata Elxsi, be it LTTS as well to an extent, we have seen that all of these companies are giving a very subdued growth guidance for H1 FY27 specifically. All of them are expecting H2 to be better than H1, but we expect FY27 as a whole to be a gradual year as compared to what we were expecting earlier.
Kunal, if you were to extrapolate this to different companies, and quite a few stocks are bearing the brunt of selling on account of this, right? Your Tata Technology, your Tata Elxsi, and a couple of others as well. What does this mean for them?
Yeah. So what we see that KPIT specifically is mostly around automotive, while other ER&D packs, let's say Tata Elxsi, which is around 40% automotive, Tata Tech is also 80% automotive. So what we see that most of the weakness is across board. So let's say BMW, Volkswagen, all of these tier 1 OEMs have specifically said that they are trying to have a wait and watch mode, firstly, in terms of any CapEx. So firstly, they have moved a lot of CapEx into EV side. Now with Chinese OEMs, they are not trying to give the competition to Chinese OEMs in terms of technology, know-how, as well as pricing. So thus, they kind of is stuck between where to make capex investments for. So now, what we see that they will wait and watch for the next 1 or 2 quarters in order to see the macroeconomic certainty as well. Because what we see that earlier there were tariff issues. Now we see that macro uncertainty, war issues. So thus, clients are not spending; they are delaying their spend. So this is why it's a rub-on effect on the R&D companies going forward, and thus we see the revenue growth guidance cut, which most of these companies are mentioning.
Okay, so Kunal, that's with regards to where KPIT Tech goes. Now, let's look at IT as a sector. I'm just looking at Infosys. Yesterday, it went below the 1,000 mark for the first time, I think, since September 2020. The stock has fallen nearly 40% in 2026 so far versus the IT index, which is down 31%. So clearly underperformed the index as a whole as well. And this kind of a fall came in 2008 when the index fell some 37%. I mean, most of the stocks at that point in time. What is this actually telling you for the sector as a whole right now? And are you seeing any opportunities or green shoots in terms of buying right now at lower levels? Or do you think the structural issue is so big that no one knows where to go?
Yeah, this is the question of the hour. So what we see, and what I've also said in the previous shows as well. So we see a strong revenue deflationary impact due to AI productivity. And we were expecting around 3 to 4% of revenue deflationary impact due to AI productivity. But now what we can see that the decline is mostly on the front that the deflationary impact is on the upper end of 3 to 4%. That is why we see there has been a strong downturn in all of the stock on a YTD basis. Most of these companies are down 30-35%. And what we see, Infosys, obviously you mentioned that it is a 5 or 6 year low. Now going forward, what we see that any uptick also will not sustain, because we see this is a structural change until unless we see AI-led services revenue kind of replenish the deflationary impact. In the next 2 to 3 years, we can see some underperformance in IT as a whole.
Okay, so underperformance in IT is something that could continue as well. But thank you so much for joining in, and always a pleasure to speak to you on this one. A quick question, Sachin, with you on the charts. What are IT stocks looking like?
So on a long-term basis, I have checked all the 3 timeframes, basically on a daily, weekly and monthly timeframes. It is not looking good. The structure has completely changed. Wherein earlier it was making a higher high and a higher low pattern. In all the 3 time frames, it is making lower high and lower low pattern. So this is actually very scary, mainly because even if I want to tell the lower targets, I cannot, because it is looking very scary. Only thing is in IT, Oracle Finance is looking good because the structure on all the 3 time frames is looking good. But barring Oracle Finance, none of the stocks are qualifying for that.
Sachin, we can just sense those tremors as well with what you're telling us, because absolutely, fundamentally, technically, there is just no conviction on either sides right now when it comes to IT. But that's the way it is. Thank you so much for joining in, Sachin and Nichal. Always a pleasure to speak to you. We'll quickly slip onto a short break. On the other side, we'll get you your top buy today and sell tomorrow picks as well. Stay tuned, and a check in terms of what's happening with the Indian rupee.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving, and so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Welcome back. You're watching India Market Close, and we're sitting comfortably at 24,022. We're holding above the 24,000 mark, and another half an hour or so to go. And it would be a good sign to hold above that level. The broader markets not doing as well, but well, they're okay, with gains of about 1/3% for the mid-cap index and about 0.5% or so for the small-cap index, and the breadth is holding. The one thing that's a little bit of a niggling issue today, though, is the way that the rupee is performing. And pull up the USD INR and you'll see that there's a pretty sharp depreciation of as much as 50 paise, and that means that the rupee is now trading below the 95 mark versus the dollar for the first time in 3 weeks. Abhishek Goenka, India Forex and Asset Management, joining us right now to tell us why this might be occurring. Abhishek, first of all, good afternoon. Thanks so much for taking the time. And a lot of things were working as tailwinds on the macro front for India, right? You had the fact that the war situation was easing out, crude oil prices have come off very sharply, and various other supply chain issues are also getting resolved. So why this slide in the rupee? I think you're on mute.
Hi, Alex. Good afternoon.
Hi.
Thanks for having me. Well, I think it's more of a range-bound movement. There has been some demand from banks, what we hear today. But broadly, I think all the fundamentals which have shifted in the last few days for the oil prices on the flows front, which is expected to be $50-70 billion. I don't think that there is anything to panic in the rupee. I think there will be some demand which we hear from the banks, but otherwise everything is fine. The equity markets are also decent today. So I think it's a sell-on rallies market. Lately, some pressure could also happen because of the US 10-year and 2-year moving up a little bit. I think that's also putting some pressure, but otherwise I don't think that it's a structural move on the upside. I think the US dollar is going to get sold going forward.
So a significant spurt in the volatility though. So is there evidence, Abhishek, from what you're hearing about possible central bank intervention to control that in a sense? One, two, where do you see fair value and where do you see the rupee settling in the near to medium term?
So our house view is that now the depreciation of the rupee which happened, that depreciation is done. So now whatever rallies we get, we are using this as an opportunity to cover dollars for our export clients. In terms of fair value, I think time and again what we have seen internally is that whenever a rupee sees such a huge depreciation like what we saw this time, most likely in the next 2 years, that excess depreciation gets mean reverted. What I mean is that if the market is, say, depreciated by around 12%, then in that case, an average depreciation of 3-4% happens. So most likely, the rupee is going to mean revert this year and maybe next year, and find a fair value of around 93 to a dollar going forward. So I think the fair value should be 92.5, 93. There would be buying happening because RBI also wants to build up reserves. So there will be buying happening around that levels, but I do not think that we are going to see year-on-year appreciation in the US dollar going forward. And I think the fair value should be close to 92.5, 93.
Got it. Abhishek, thanks so much for that quick view and pleasure speaking with you as always.
Thank you. Thank you, Alex.
All right, we're joined now by Shivangi Sarda, who's analyst equity derivatives and technical at Motilal Oswal, as well as Sudeep Bandyopadhyay, who is a market expert. Thank you so much to the both of you for taking the time. I will start with you, Shivangi. We're looking decent at this moment, at least when you look at both the benchmark Nifty 50 and the Nifty Bank. Do we hold above that 24,000? If we do, what are the prospects in the near term and what is the call on the Nifty Bank? I think you're on mute.
Very good afternoon, Alex. Thank you for having me. We've seen that July series have actually kicked off quite well, and we've seen that ahead we're holding about 24,000 levels, which had actually become a psychological barrier in the previous session. Bulls and bears were having a tug of war in the June series, but the kind of rollover, which has been 80% onto July, has been quite significant with the OI addition on the long side as well. So overall, July perspective is looking quite positive. Even seasonality-wise, we've seen that 8 out of 10 years have been quite significant and positive, with an average return of around about 3.1%. So overall, we're expecting Nifty to move in a positive direction with the next up move towards 24,200 and 24,400 levels, with an immediate support at 23,850 levels and slightly positional level 23,700 marks would be important to watch out. Talking about Bank Nifty, of course, we've seen that private names are kind of holding the strength in this one, but the NBFCs have also started contributing, and this one's quite remarkable. Bank Nifty is comfortable above 58,000 levels, and we're also, tad bit closing above the same, which indicates that the strength is likely to continue for the next coming few sessions. And we're expecting 58,750 immediately, and then 59,000 slightly positional for Bank Nifty, with a support of 57,750 zones. And focus would be on the NBFC and private name.
Okay, NBFC's private names is what is on your radar. And usually I was just looking at some data where your Nifty has delivered positive returns in 18 out of the 25 instances if you have to look at the month of July. And it's translated into almost a 72% success rate. Average return is around 2.2% for Nifty 50 as well. But yes, there is a caveat where all your surrounding factors need to come in as well and align. When you talk about your crude prices, when you talk about what's happening to the rupee, as well as the geopolitical concerns. Shivangi, in this backdrop, what would your top picks be? Because the setup structurally is much stronger as compared to, in terms of Bank Nifty versus Nifty 50 right now.
Absolutely, Hirar. In line with the data point, we've seen that Bank Nifty has quite significantly improved, and good amount of short covering can be seen leading here. Of course, my focus would be on some of the NBFC and private names, but on my radar is Axis Bank on the banking space, which is moving quite well. This one's getting ready for a good up move. We're expecting the next targets to be around about 1400 levels immediately for Axis Bank. And the second pick on my radar is HAL, which is seeing a good amount of base formation here. Short covering trigger will, drive this stock in this series. We've seen a good retracement level being respected here, and the stock is getting ready for another, 4 to 5 odd percent immediately. So we're looking at HAL for the next targets of around about 4600 levels and 4350 as a support.
Got it. Okay, Sudeep, question to you first on strategy before we get into any individual stocks, which is, are you going to keep the powder dry for the next couple of weeks, or would you advise that that should be the case? And look at the numbers that come through in the first quarter to see the extent of damage, if at all, and to see if there's a possibility of an upside because of a surprise positively, or would you deploy right now in anticipation in certain pockets where you're pretty confident that things will likely be better than expected?
Well, Alex, it will be a mixed kind of a strategy. I think what you mentioned towards the end, certain pockets we are reasonably confident and we would prefer deployment sooner than later, whereas definitely some amount of liquidity needs to be retained. Considering the volatility we have been witnessing in the market, the monsoon is still a little iffy and uncertain. First quarter results are not expected to be anything great. The geopolitical situation has improved, but we can't say we are out of the woods. So considering all this and considering the nature of the current US administration, which keeps bringing surprises, which kind of rattles the world order, I think it's better to keep some cash in hand.
Got it. I think everybody sitting in Mumbai will be looking outside and saying there's nothing iffy about the monsoon. And the only thing that they would wonder is if you can export the monsoon from here to the various other places where there isn't enough rain, then we'd be completely okay. But what are those areas where you're comfortable, Sudeep? And name a few sectors that you're absolutely certain, or companies where you're absolutely certain that things will get better or are better this moment.
I'm very confident on pharma. I think last time when we discussed, I mentioned this as well. I think this is one sector which is to a great extent sheltered from the geopolitical challenges, the tariff-related tantrums, and even monsoon-related worries. Indian pharma, I strongly believe, is at a place where Indian IP was 20 years back, at the cusp of a massive scale-up and growth. One bunch of companies, which are the frontline companies, they are getting into a different league. Look at Sun Pharma, 70% of its revenue is going to come from branded and patented products post the Organon acquisition. They are moving into a different league. We have to understand and admit that. Similarly, I think the kind of a similar trajectory will be followed by, let's say, Lupin, Glenmark, Wockhardt, Cipla, Dr. Reddy's. All these companies will be moving towards that direction. The CDMO players have their own tailwind behind them, with China Plus One very clearly being the preferred mode for US and European manufacturers. Indian CDMO players will keep getting orders, and their business will be robust going forward. The third segment, which is domestic pharma, which is growing at about 25% CAGR, they also will continue to attract a lot of money, and things will start moving in the positive direction. The fourth angle to the entire pharma healthcare piece, hospitals. We are bullish on hospitals as well. I think the opportunity is humongous. The consolidation happening pretty fast. A lot of private equity money is moving in. And I think companies like Apollo Hospital, undisputed leaders, performance continuously improving, scope for significant growth in the offering. So, this is one sector which definitely fits in with what you are asking. The second, I will just take a minute and mention, is that private banks, I think the leading private banks are quoting at a very reasonable valuation compared to the overall market, compared to multiple other sectors. And the margin of error is very limited there. So whether you look at an ICICI bank or even HDFC bank, I think the downside is much. The chance of a downside or the downward risk is much lower than the upside potential.
Okay, so interesting names there, Sudeep. I would want to talk to you about IT as well a little later on, and metals as a space. But before that, despite a cut in ATF prices, air flyers may still not get any relief in fare cost. Sources are saying that immediate fare relief for passengers is unlikely. Danish is here with more details. Danish, what are you picking up so far?
Well, that's correct. While the airline industry has welcomed the new ATF prices, and by that I mean that the OMCs have cut ATF prices by ₹5 a litre, and the final prices of ATF per litre is right now at ₹110 per litre. But if we look at this from an overall point of view, whenever airlines uplift ATF in the aircraft, they always buy the ATF in a kiloliter percentage form. But if we look at that particular figure, right now the ATF per kiloliter is costing around 1.10 lakh rupees, and this is on an average. But if we compare this with the pre-war levels, at that time the ATF prices were hovering around somewhere between 1 lakh to 1.04 lakh per kiloliter. So because of this, since the ATF prices are still on the higher end and it hasn't come down from the pre-war levels, hence sources are telling us that the airlines will still wait and watch, and they will not pass on the immediate relief that they have been that they just received from the OMCs, but they will take a little bit of more time to factor in all the other possibilities that how can they bring their cost down. So all if we see, if passengers feel that because of the ATF is coming down, their overall ticket rates could come down as well, but it doesn't seem so at the moment, as the airlines will still take a lot of time to really pass on these benefits to the passengers.
Got it. Okay. All right. Let's stick with the exclusive stories then. And sources telling NDTV Profit that OMCs are unlikely to cut petrol and diesel prices immediately despite softer crude. Sesha has more on this report.
Right, despite softer global crude prices, consumers may have to wait a little longer for any cut in petrol and diesel rates. That's because sources tell us that OMCs are unlikely to reduce retail fuel prices immediately, as they are still recovering losses from the West Asia conflict. In May alone, OMCs reported cumulative losses of nearly ₹1,000 crore a day, with under recoveries currently estimated at about 500 to 600 crore a day. Refineries are also processing high-cost crude purchased when prices had surged over $100 a barrel. This expensive inventory is also expected to last another 1 to 2 months, is what we are given to understand. Companies, in meantime, are also waiting for more clarity on the global crude price outlook before taking a call. According to S&P Global Energy, crude prices could climb to $80 to $90 a barrel in the second half of 2026, that is this year, as oil inventories continue to shrink globally after the supply disruptions linked to the West Asia conflict. Analysts also say that normalization of supplies could take up to a quarter or two. Meanwhile, Naira Energy, which is a private player, has announced a ₹5 per litre cut in petrol prices and ₹3 per litre cut in diesel prices. However, state-run OMCs are not expected to match these reductions anytime soon.
Thank you for that. So reduction in prices not on the cards, because everyone was expecting that because Naira has gone ahead and reduced prices, there is a potential that OMCs will be forced to, but does not seem to be the case. Sudeep, your views when it comes to oil marketing companies, because now that crude has come off substantially, we are at pre-war levels. How are you expecting the impact when it comes to marketing margins of the companies and as an investment opportunity now?
Well, I think for some time they will not reduce, because if you recollect, crude prices went up sharply, but the prices at the pump level didn't go up for a very long time. So there was a bit of under recovery for a period of time, and I think the government also will allow them to recoup that part of, at least a part of that loss before they go ahead and reduce the rates. That's as far as the price scenario is concerned. As far as oil marketing companies are concerned, I think HPCL, BPCL, they're good companies, but I normally avoid. I think there are too many variables which keep changing, including when they can or will be allowed to make prices market linked. We had a situation of massive under recovery for a very long time, which persisted and kind of led to a massive dent in their P&L, which probably we'll get to see in the first quarter numbers when they come up with. And I think this keeps happening periodically. So I will prefer to avoid oil marketing companies. As and when appropriate, we do keep looking at oil exploring companies like ONGC and look at opportunities there, but not the marketing companies, which are completely dependent on multiple factors, including the government's kind of diktats.
Got it, yeah. Okay, so that's a view on oil marketing companies and the fact that you could well see fuel prices stay the same for a while. Paisalo Digital is a stock that we're focused on as well, and the stock has surged quite considerably. It's currently at that upper circuit as the promoter is increasing the stake in the company. Sharad is joining in to tell us why this is likely taking place and what the other drivers for the stock could be in the near term.
Definitely, Paisalo Digital has made a lot of paisa for its investors, it seems. But is the upside capped? That's the key question. But before that, I'm going to give you 5 key reasons why the stock is rallying in the day. It's almost an upper circuit. Our promoters have increased their stake. And that is where a full-fledged press release has come. More details, the company's launched its 3-year roadmap. We'll come to that. The third one is, importantly, the HNI buying is coming in high volumes. And last trading session also, there was a good buying. Recently, their share pledge release has happened, which is, of course, a positive news flow. And lastly, the cost of borrowing has reduced for the company after its recent ECB bond issuance. And this is like a raw material for a company like them. But let's go into the more details about this and the promoter stake, how it has actually gone up. From FY19, it was 26% and gradual climbing happening. And right now, it's at around 47% stake when it comes to the overall promoter stake. Increase the FY26 numbers, all of them, be total income, PAT, AUM, all of them going up. You can see that on the screen. The numbers are pretty strong in the 4th quarter as well. And now that brings us to the 3-year roadmap. What is something to be targeted? The doubling of AUM, total income and PAT. And of course, this is something which the management had stated. AI-powered lending, that's what they are talking about. And lastly, I'd like to mention the distribution expansion, which they are going ahead with. I did a little bit of research on the stock tracking. From March lows, the stock has already more than doubled, but still from its lifetime high levels, it's down 23%. But when it comes to the valuations, it's quite high actually. It's 3.6 times price to book ratio. So of course, the valuations are not comfortable at all. Remember, there are macro and sector related risks as well. And also, there's a lack of analyst coverage and the valuations are too expensive. Maybe the upside, maybe a potential capping can be there in this, but as of now, it's at upper circuit at 20%.
Okay, so that's with regards to Paisalo Digital as we speak. Thank you, Sharad, for that. Shivangi, 20% upper circuit right now, but if anyone gets an opportunity tomorrow to look at a Paisalo Digital, would you be advising a buy or book profits?
Now, we've seen a good amount of surge today, and after a consolidation of a pretty long time, and the volumes have been quite, muted from the last 15 odd trading sessions. So a surge here in only today's session is creating, some bit of, data mismatch here. But overall, we've seen that if it holds above these levels, above today's high, then we could attempt to again buy and ride the momentum. But strictly maintaining a stop loss would be recommended here.
Got it. Quick question to Sudeep as well on Paisalo. If you've looked at the company, the stock is up 123% over the last 1 year. What would you do? 1, if you hold it. 2, if you don't.
Well, I don't think if I don't hold, I will buy the stock at this stage. I think if I have to really buy in this space, there are other available options. If I'm holding the share, maybe I'll look at opportunity for booking profit.
Okay, so that's with regards to where Paisalo Digital goes. You know, the other aspect I want to talk about is where RBI has tightened the funding norms for prop desks, raising costs, cutting trading capacity, and likely impacting the margin volumes or the market volumes as well. This is something which was announced earlier, becomes effective today, which is the 1st of July, and that is why we're doing a refresher where Sharad is joining us with all the details. Sharad, for our viewers, a refresher of what this would mean, and would there be any impact?
Well, yes, definitely there is going to be impact, be it traders or institutions. But let me just give you a revision of that. From today onwards, which is July 1st, RBI has implemented stringent funding norms for both prop desks as well as brokers. Now, interestingly, one important fact I would like to put is prop desks are giving almost 50% of contribution to the total equity options turnover segment in NSE. And to put that in perspective, these bank guarantees will come with a collateral with almost 50% of backing coming in cash. Now, what's the impact? First is, of course, the cost of funding expected to rise for the traders. The effective trading capacity, that will shrink from almost 1.7 times to 0.85 times. That's what the traders are talking about. Cash futures arbitrage, index arbitrage, and options market making will face much tighter profit margins. But remember, the foreign HFTs won't be affected because of their GIFT City exposure. But for institutions also, there is an impact. It's a negative impact for prop desks, broking counters, and of course the market makers. Largely, most of them are in the unlisted space. But looking at BSE, 12 to 15% of trading volumes can be impacted. And for NSE, this can range between 10 to 15%. This is just the first day. But of course, we'll try to get the data and give you the entire picture of how much volume impact has come in for the exchanges.
Thank you so much for that, Sharad. Sudeep, any view on this? You're talking about a 10 to 15% of trading impact when it comes to NSE, as Sharad was just mentioning. As the rules become effective today, how are you looking at it?
Well, definitely, this will have initially some impact on the volumes and the profitability, etc., as far as domestic participants are concerned. Of course, the foreign participants will not be affected, as a lot of them are coming through the GIFT City and otherwise. So the capability of executing trades, the volumes, everything gets affected. I'm not sure whether it is very fair to the domestic investors. And at least for some time, this will have a negative impact on exchange volumes.
All right. On that note, Shivangi as well as Sudeep, thank you so much for taking the time today. Pleasure having you on the program as always. We're just below the 24,000 mark as we draw to a close today. And frankly, even the advanced decline ratio, the market breadth, has worsened a tad, but we'll come to that in just a bit. But 0.5% gains for the Nifty 50. The Nifty Bank holds with gains of 0.75%. And I think there's strength across both public and private sector banks
Absolutely.
today.
Let's just pull up the intraday charts of Nifty 50, Bank Nifty and the PSU banking space to tell you what Alex is actually pointing to. Nifty 50 as well. I mean, you've come off the highs of the day, but 0.5% up move. You know, the question, this is the problem. We're not able to hold on to that 24,100 and the 24,000 mark. And that's what is the concerning area in terms of the overall breadth. Let's just pull up the intraday chart of Bank Nifty as well.
Yeah,
there you go.
holding.
It's holding on with good amount of gains, and the PSU Bank Index as well. If we can have that chart on the screens too. I mean, similar kind of charts, right? So good moves coming in on both the sides over there. I think let's look at the advanced decline ratio, as Alex was just pointing out.
It's closed. It's closed just a tad bit towards the end.
It's narrowed slightly further. So there is a little bit of worsening that's happening there, where declines are increasing to some extent, is what Alex is also trying to point towards. But a 1500 on the advance, not a bad number. It's your broader markets as well. Though, if you see NSE 500 or BSE 500 in terms of components, Alex, see the kind of names that are coming in there.
Yeah, there are quite a few interesting ones. We've actually pointed to a few of these before the start of trade as well. RHI Magnesita is something that we looked at. But by the way, the entire consumption basket looking incredible today. So pull up the components of the FMCG index or the consumption index, whichever you choose, and you'll see quite a few of those names doing particularly well. Okay, so we've looked at FMCG. Dabur right on top there, Colgate, Nestle, one of the components of the Nifty 50. and HUL up about 3% or so. So it's a day, I think, for consumption and specifically FMCG today.
Absolutely. Day, I think, at the day's highest levels. You know, on one side you have the consumption basket, on the other side you have the Nifty IT index, which is at a 6-year low. Very quickly, let's look at the heat map on Nifty 50 as well, and then we look at the sectoral indices with the broader markets before we wrap up. There you go. I mean, it's held on. Eternal, Adani Enterprises, Asian Paints. Adani Ports seems to have come off slightly from the highs. No, there you go. Still 2% up move coming in there. You have SBI Life also seeing some smart moves. On the lower side, HCL Tech Mahindra, TCS. Metal names also. Hindalco, Tata Steel trading under pressure. Dr. Reddy's on the back of competition in GLP-1 is taking a beating today.
And Tata Motors PV, interestingly, after it had those numbers come through, and I think pretty decent numbers on the EV front as well, but then it has succumbed to quite a bit of selling towards the end of the session and now trading with cuts of about 1.2%.
Just quickly, the mid cap and the small cap index, we'll just quickly brush through that to see what's happened there. Yeah. There you go.
Not too much action.
No, not too much action from the time we started off in the last 1 hour. Pretty much even Stevens there.
And we've held on the small cap index as well. So all told, it's a pretty decent day of trade, particularly for the large cap index and for some of those stocks, ending the day with gains of over 3%. But I think there's also a story with regard to the rupee and the fact that it slid. Let's see whether we carry this tomorrow and the strength in the index continues, because tomorrow, remember, is the Sensex expiry as well. We have to end this program, but from Hiral, myself, and the team that put the show together, thank you so much for watching. Stay tuned, and a lot more coming up on NDTV Profit.
Co-powered by CoinSwitch.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Bitcoin below $59,000 mark on macro concerns. Australia crypto travel rule coming soon. UK FCA publishes final crypto rule book. And Trump's crypto income tops $1.2 billion. Well, those were the top crypto headlines at this hour. How should you navigate crypto and spot the next big trend? How should you keep track of the sentiment at the moment? Let's hear that from Vimal Sagar. He's the co-founder and CEO at CoinSwitch. Well, Vimal, recent ETF outflows have weighed down the Bitcoin.
This has put pressure on the price. Naturally, now people are asking, are big investors losing interest on Bitcoin? But if you look closely, the real story is quite different. Let me explain first why these flows are so important. They show us what the long-term money is doing. Not the small traders, but the serious institutional investor. So this gives us one of the clearest picture on how the market is really feeling. Now, let's say when the money is flowing in, it means institutions are getting comfortable with Bitcoin, and when money flows out, it usually means that they are being a little more careful or simply rebalancing their portfolios. But one more thing, we cannot look at these numbers in isolations. These investors are also watching interest rate, liquidity, and how much risk and exposure they want to take in one particular asset. Here is also a very important point to call out. A lot of this money is not leaving the market completely. It is moving into AI and semiconductor stocks. These companies are showing strong earning and strong growth. So the investors are simply trying to chase this opportunity for now. In fact, since April, US semiconductor funds have attracted more than $20 billion, even as money has moved out from Bitcoin. But let us look at the actual number. US Bitcoin ETFs saw around $4.4 billion outflow over last 13 days. This sounds like a big number in isolation, but remember, these funds are still holding close to $80 billion in assets. So these investors are actually not running away from Bitcoin. They are just being cautious and waiting for the right opportunity to invest in further. If we talk about the reason for this, The main reason is the US economy. The US Federal Reserve looks like to keep the same interest, the higher interest rate for longer period of time. And when the interest rates are higher, the asset like Bitcoin, where you won't get any yield, become less attractive for the investors. So they simply try to stay away for a time being. So if we talk about the bottom line, these outflows are actually not a sign that institutions are turning against Bitcoin. They are just being cautious, being careful for the moment. And when situation become better, they will again come back and invest in Bitcoin again, like how we seen in past.
Well, that's what Vimal is talking about when there is a pressure coming in the ETF flows, what's happening to the Bitcoin prices. That's a very interesting take. But of course, let's also hear out what he had to say about what happens to the retail investors then.
Yes. For retail investor, the key is not to treat weekly ETF flows as buy or sell signals. Instead, focus on the broader trend and invest in line with your long-term financial goals. Diversifying your portfolio and investing consistently over time helps reduce timing risk and is generally a more effective strategy than reacting to short-term market movement or headlines.
Well, thanks a lot, Vimal, for that. Now, as we wrap, remember, you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook,
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that gets you a snapshot in terms of everything that has happened thus far in the trading session as well. But before we do that, let's take a very quick look at the markets then. Dalal Street ended firmly higher in trade today as positive bias was seen in the benchmarks. Nifty ended around the key 24,000 level, while Sensex also saw healthy 400-point rally also coming in. When you talk about broader markets, you're looking at them also gaining in tandem with the key indices, with both small and mid caps really ending the day with modest gains as well. Moving on then, let's talk about realty that remained the standout performer alongside FMCG and the auto pack. So that's even as IT and metal stocks, by the way, see continued selling and pharma slips on profit booking. Moving on then, let's talk about Morgan Stanley that has maintained its overweight rating on Bharti Airtel and sees nearly 34% upside coming in from some of the current levels. Now, the brokerage believes that Airtel is well positioned to benefit from tariff hikes, rising data usage, as well as continued growth when it comes to home broadband business. It also expects the company, in fact, to deliver healthy earnings growth over the next few years. The bullish stance comes despite recent volatility in telecom counters. Moving on then, let's talk about RITES, and that really rallied sharply, as you can see on your screens as well. About 14% rally coming in after the company really secured a new infrastructure consultancy contract, and it's worth about 175 crore rupees. Now, when you talk about this particular counter, it's gained as investors really cheered this particular order and a sharp jump in trading volumes as well. But let's talk about this particular project as well. And this really strengthens order book coming in for the company, reinforces its position in the engineering and infrastructure consultancy space as well. And the order is expected to improve revenue visibility as well in the coming quarters. Moving on then, let's talk about KPIT Tech on the flip side that plunged after the company warned of a weaker than expected first quarter. As you can see on your screens, 17% knock really coming in. It's really a gash that you're looking at when you talk about this particular counter, and they're expecting revenue to decline and margins to come under pressure as well. So that's something that's really gotten a reaction out of Dalal Street as well. So you do have a little bit of a weaker demand sentiment that you're looking at from European automotive customers as well that the company has flagged. Aside from that, the disappointing outlook has triggered sharp cuts in earnings estimates and brokerage. Moving on then, let's talk about global brokerages, Bernstein and Macquarie, that have reshuffled their India portfolios as geopolitical tensions in West Asia ease. Now, you do have Bernstein their India portfolios as geopolitical tensions in West Asia ease. Now, you do have Bernstein that has exited ICICI Bank and IndusInd Bank while adding Axis Bank, citing improving asset quality and better credit cost outlook as well. Both brokerages, in fact, have also adjusted some of their sector allocations to really reflect changing macro conditions and valuation trends. So that's something that they're looking at in terms of those two brokerages. The portfolio changes are signaling a little bit of a shift in strategy as well, rather than just a change in their broader view on Indian equities. Moving on then, let's talk about oil marketing companies that have reduced the price of 19 kg commercial LPG cylinders by close to 183 rupees. And that's from today itself, offering relief to restaurants, hotels and other commercial users. So the price cut is coming in as global fuel supply stabilize following easing tensions in West Asia. However, there is no change when you talk about the pricing of domestic LPG cylinders. So that's something that you're looking at by the way of updates. Lower fuel costs are expected to reduce operating expenses for commercial establishments, and that is the key headline that you're picking up here. Moving on then, let's talk about Paisalo Digital that has reported a sharp increase in promoter shareholding during the June quarter. When you talk about this particular counter, about a 20% uptick thereabout coming in for this stock, and the promoter group stake has been risen by about 4.97 percentage points to 46.72%, and that's through open market purchases. But let's talk about this continued increase in promoter ownership as well, because it's being viewed as a sign of confidence really in the company's long-term growth strategy. So following the announcement, you do have the shares that hit the 20% upper circuit and closed very close to that level as well. Moving on then, let's talk about Bartek Babak that has secured a large international order from the city of Vienna for the expansion of a water work project in Austria. The contract, classified in the 250 crore to 600 crore rupee range, strengthens the company's presence when it comes to the European water infrastructure as well. And you do have Babak that's going to be executing the complete technology package for the project, which is scheduled for commissioning by 2030. Moving on then, let's get to the word coming in from brokerages that have largely, in fact, welcomed Kotak Mahindra Bank's acquisition of Deutsche Bank's India's private banking business as well. So you do have analysts really believing that when you talk about this particular deal, it's going to be strengthening Kotak's wealth management franchise, along with that really expand its high net worth customer base. However, they've also flagged integration and client retention as the key execution risks here. Moving on then, let's talk about Advait Jewels that made a strong stock market debut, listing at a 37% premium over its IPO price on the NSE. The shares opened at somewhere close to 188 rupees, and that's against the issue price of 138 rupees, really reflecting robust investor demand. And the listing is following an IPO that was subscribed over 212 times, mind you, across investor categories. So the company really is planning to use the IPO proceeds to fund growth as well as reduce debt going forward. Moving on then, let's talk about NAC Packaging's 439 crore rupee IPO that is open for subscription as well, and it's going to be closing on July 3rd. So that's really the date that you're marking on your calendars. The issue has attracted healthy investor interest on the first day, supported by a rise in the grey market premium. Now, when you talk about this particular IPO, it's comprising a fresh issue, along with that an offer for sale, with proceeds from the fresh issue earmarked really for business expansion. Moving on then, let's talk to you about some business news. Now, Indigo has introduced a new light fare option for travelers looking for lower ticket prices. So this is some good news for you if you're looking to travel light and looking to pay less for that. So the entry-level fare is designed for passengers traveling only with cabin baggage and who prefer paying only for additional services that they choose. The new fare is going to be available across domestic and international non-stop routes. In fact, it can be booked for one-way, round-trip and multi-city journeys for both adults and children. Moving on, then let's talk about UPI transactions that moderated in the month of June after hitting record highs in the month of May. Now, the total transaction value declined 3% on a month-on-month basis. So you're looking at somewhere close to 28 lakh crore rupees in terms of transactions, while transaction volumes also fell about 2% to 22.72 billion. In fact, despite the sequential dip, you're looking at both value and volumes really remaining sharply higher more than a year ago. The slowdown largely is reflecting a high base after May's record performance, with daily transaction activity really continuing to stay robust. Moving on then, let's talk about the US government that has reversed its decision to restrict exports of Anthropic's most advanced AI models. The company is saying that access to Claude, Fable 5 and Mythos 5 is going to be restored after the Commerce Department lifted the ban. The restrictions were imposed last month, mind you, over national security concerns, but Washington is saying that Anthropic has now agreed to enhance risk monitoring, closer coordination with authorities as well, and reporting of malicious activity, while the government retains the right to reimpose these curbs if needed. Moving on then, let's talk about Amazon that is facing legal action in Australia over its decision to introduce advertisements on Prime Video. The country's consumer watchdog alleges the tech giant used unfair contract terms by requiring subscribers to pay an additional fee to continue enjoying an ad-free experience. The regulator is saying that more than 1 million annual subscribers were affected between 2023 and 2025. Amazon is saying that it's reviewing the case while maintaining that it cooperated with the investigation and remains focused on its customers. Moving on then, let's talk about Microsoft that is reportedly preparing another round of layoffs, and that's as per reports with job cuts affecting less than 2.5% of its global workforce. In fact, reports are stating the announcement could come as early as next week, and the move is coming in as the companies across the tech, media and financial sectors really continue to tighten costs while simultaneously also ramping up investments when it comes to AI infrastructure. The latest cuts highlight how the AI boom is really reshaping corporate spending priorities and workforce strategies across the industry. Moving on then, let's talk about motorists that have some relief at the fuel pump now. Private fuel retailer Naira Energy has reduced petrol prices by 5 rupees a litre and diesel prices by 3 rupees a litre across its retail network. And this is effective from today. The price cut follows a sharp decline in global crude oil prices as geopolitical tensions in the Middle East ease, and you do have concerns over supply disruptions that have subsided. Since then, the move could offer some relief coming into consumers amid softer energy prices. On to some national news then. The Uttar Pradesh government has extended by 15 days the tenure of the special investigation team probing alleged misuse of donations meant for the Ram temple in Ayodhya. And the 3-member SIT constituted last month had submitted a preliminary report that led to the registration of an FIR. 8 people have been named in the case so far. The extension is expected to really help investigators examine the financial trail and gather further evidence before submitting their final report. Moving on then, India has taken another step towards strengthening its indigenous defense capabilities. IIT Delhi, in collaboration with the Defense Research and Development Organization or DRDO, has developed a tactical aerostat capable of carrying payloads to altitudes of up to 20 kilometers. The high altitude platform is designed to enhance surveillance and also communication capabilities. That's something that you're looking at. So it really offers a cost-effective solution for defense operations. The development underlines India's continued push for homegrown defense technology and greater self-reliance when it comes to strategic systems as well. Moving on then, let's talk about heavy rainfall that has disrupted normal life across Mumbai, with the weather department in fact issuing an orange alert coming in for the city and neighbouring Thane. Local train services on the Harbour Line were also affected after an overhead wire really snapped early this morning as well. And you're looking at that alert really changing to the red alert as well. And that's an update that you have in terms of rain as well. Watch out for the situation as it evolves. Moving on then, let's talk about diplomacy remaining the preferred path. Tensions between the US and Iran are far from over. Delegations from both sides are holding separate talks with Qatari mediators in Doha, though it remains unclear when direct negotiations will really be beginning as well. And Iran is saying that it will never compromise on its rights in the Strait of Hormuz, while the release of $6 billion in frozen Iranian assets is emerging as a key issue as well. Tehran has also warned that while it is pursuing dialogue, it is fully prepared to respond if the talks fail. Moving on then, a major legal setback for US President Donald Trump's immigration agenda. Now, the US Supreme Court has ruled that children born in the United States are citizens at birth, even if their parents are in the country unlawfully or temporarily. In a 6-3 decision, the court has said that the 14th Amendment clearly guarantees birthright citizenship as well, and rejecting Trump's attempt to curb the 150-year-old policy through an executive order. The ruling preserves a long-standing constitutional protection and is being hailed by some of the civil rights groups as well as a significant victory. Moving on then, let's talk about US President Trump's latest financial disclosures as well that show just how central crypto has become to his wealth as well. Ethics filings reveal that Trump reported more than $1.4 billion in income from his family's digital asset ventures during 2025. Now, the bulk of that really came from World Liberty Financial. That's the crypto platform that's co-founded by Trump and his sons, which generated nearly $800 million for his companies. The disclosures show more than $520 million came from token sales, while over $250 million was earned from selling interests in the business, underscoring how crypto has really emerged as a major source of the US president's income. Moving on closer to home, then India and Japan are set to take the strategic partnership a step further. And you do have Japanese Prime Minister Sanae Takaichi arriving in the national capital today on her first official visit to India. Tomorrow, she's going to be holding the 16th India-Japan Annual Summit with PM Modi, where the two leaders are expected to review cooperation across trade, investment, defense, technology, and economic security. With both countries, in fact, set to mark 75 years of diplomatic relations in 2027, this visit is expected to reinforce a partnership that has become central to the Indo-Pacific strategic landscape as well. Moving on then, let's talk about tensions between Afghanistan and Pakistan that are escalating sharply. The Taliban says that it has launched airstrikes inside Pakistani territory days after Pakistan carried out deadly air attacks in eastern Afghanistan. Islamabad, meanwhile, is saying that its forces intercepted 4 drones over Balochistan, adding to concerns of a widening military confrontation. And the latest exchange is really marking a fresh escalation coming in months of cross-border tensions, raising fears of further instability in the region. Onto the world of sports now. Mexico ended a 40-year FIFA World Cup knockout stage drought with a 2-0 victory over Ecuador to really book a place in the round of 16. France also advanced comfortably, beating Sweden 3-0 with a dominant display led by Kylian Mbappe as well. And you do have Mexico that's going to now be facing the winner of England versus DR Congo as well, while France has set up a last 16 clash against Paraguay. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Market ends higher at 24,106 mark. Benchmarks and broader indices move higher as Brent eases below the $72 a barrel mark. All eyes on the US-Iran talks scheduled to be held on Wednesday. India marks 9 years of GST, celebrates ambitious economic reforms journey. India's GST collections rise 13.9% year-on-year in June. Fresh government data suggests that lower tax rates helped expand the tax base. ATF prices reduced by 5 rupees per litre as crude softens, but industry sources suggest consumers may have to wait for airfare relief as ATF prices remain above pre-war levels. Even OMCs are unlikely to cut petrol diesel prices immediately despite crude falling. The price of commercial LPG cylinders has been cut by 183 rupees 50 paise as war eases. New prices effective from today, marking the first cut in commercial cylinder rates this year. Union Cabinet approves 2 major infrastructure projects, including 6-lane Dwarka Tunnel and a 4-lane access controlled highway in UP, aimed at improving connectivity and easing traffic congestion. Japanese Prime Minister Sanae Takaichi brings her first official India visit, aiming to deepen strategic ties with PM Modi, boost economic security, cooperation, and strengthen business partnerships amid wider evolving geopolitics across the Indo-Pacific region. US removes sanctions on 4 Indian firms from its specifically designated national list. The move comes nearly 2 years after they were sanctioned over allegations of supporting Russia's military-industrial base. Incessant rains batter Mumbai, traffic crawls across key stretches, waterlogged roads choke the city. IMD sounds red alert for Mumbai and Thane as disruptions mount and chaos grips commuters. Anthropic enters the healthcare industry with an AI drug discovery program. Anthropic aims to start the program focused on neglected diseases. Welcome. This is Profit 360 on NDTV Profit, and I'm your host Gargi Shetty. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. For our top story today, the government is set to examine WhatsApp's upcoming usernames feature amid concerns that it could be misused for fraud and impersonation. Now, the feature allows users to connect using a unique username instead of sharing their phone number. My colleague Rishabh has now more details on why the center is taking a closer look. Over to you, Rishabh.
Absolutely. What we've picked up with regards to the WhatsApp's new feature called usernames. This is essentially a feature that lets you message people even without your phone number. So if you want to connect with someone, you can simply have their username and then talk to them. The concern that the government has with this is that there's fear of impersonation and a lot of fraud, given the fact that anyone can reserve any sort of a username for themselves. For example, if someone is to reserve the username for Delhi police or any other high-ranking official and misuse that possibly for fraud, that is a concern that the government has brought up. What the officials are also telling us is the fact that they are looking into the legality of it all, and if there is any sort of a discrepancy found, any way found to sort of move against this feature, then a legal notice or a letter could be sent to Meta and WhatsApp as well. That's what we're picking up on this latest feature. This this feature is an upcoming feature. It has not come into play yet. It might come into play later this year, but that is something that the government is keeping its eyes peeled on. They are looking into the possible legal mechanisms to block this feature as well. That's what we're picking up.
Right, Rishabh, thanks for that. I'm sure all of us have our eyes peeled on what's going to come out of this. Now, moving on to the markets, D Street has ended firmly higher in trade today as positive bias was seen in the benchmarks. Nifty ended around the key 24,000 level, while Sensex also saw a healthy 400 points rally. Broader markets also gained in tandem with the key indices, with both small and mid caps ending the day with modest gains. Jasmeet now joins us for a complete market roundup. Over to you, Jasmeet.
Well, a strong day for markets today. Nifty 50 ends in green and gains about 0.5% in today's trade. In terms of top gainers, we have stocks like Eternal and Adani Enterprise gaining the most. When we look at Eternal, it gained about 6%, while Adani Enterprise saw an uptick of nearly 3.5%. In terms of broader market, while that underperforms the benchmark in today's trade, Nifty Midcap 150 ends in green and gains about 0.2%. In terms of top gainers in Midcap 150, we have stocks like Hexaware Technology and 197 Communication on the top gainers in midcap space. And in terms of the movement that they have seen across the market is Hexaware gained about 7%, while 197 Communication has gained about 5.5%. In terms of the small cap, even that ends close to green, while it's almost up 0.5%. In terms of top gainer, we have RITES gaining about 13%. In terms of the sectorial trend, all sectors end in green today's trade, but barring Nifty Pharma, Nifty Metal and Nifty IT. So we see a mixed set of sectors trend in today's trade, while Nifty IT becomes the top loser. Now, in terms of the Nifty Realty, the top gaining sector, which gained about 3.5%. Aditya Birla and Godrej Properties are top gainers in Nifty Realty, both gained about 5%. In terms of top losing sector, that's Nifty IT, which is down about 2%. In terms of top losers, in Nifty IT, we have stocks like Coforge down about 6.5%, while HCL Tech is also down about 3.5%. In terms of the key trends that we saw across sectors today, while Nifty Realty, Nifty Oil and Gas, Nifty Defense up for a second consecutive day, while Nifty FMCG, Nifty PSU Bank, Nifty Financial Services, Nifty Bank snaps its 2 days of losing streak and gain in today's trade. And Nifty Auto becomes the sector which is up for the second consecutive day, while Nifty Pharma snaps its 2 days of gaining streak and ends in red in today's trade.
Right, thanks for that, Jasmeet. In fact, earlier today, we also spoke to Dinshaw Irani of Helios Capital about where he's seeing the best growth opportunities in the market. He shares why mid-caps and small caps continue to stand out and why portfolios are increasingly shifting towards these segments. Let's listen to what he had to say.
You're seeing a lot of excitement in the mid and small cap space, and that's what we've been doing. We've been, in fact, actively shifting our portfolio to mid and small caps. In my PMS, we've been very proactive. It's the large caps are down to 43%. In my flexi cap, I think we'll be at 58% at the end of the month. I mean, the June quarter, month. It'll be down to 58% large cap. So basically, what we are doing is trying to chase growth, and that is only coming in the mid cap and the small cap space, and that's where we are. I think this excitement is going to be there.
9 years after the rollout of the goods and services tax, government data suggests that lower GST rates are helping expand the tax base. Now, following last year's rate rationalization, average monthly taxable supplies grew 22.5% in the second half of FY26. Sectors such as construction, automobiles, and precious metals led the increase in business activity. At the same time, lower input tax credit balances indicate improved cash flow and a more efficient GST system. And now moving on, despite a cut in ATF prices, air flyers may still not get any relief in fare costs. Sources say immediate fare relief for passengers is unlikely. Danish is now here with more details on this.
Well, that's correct. The passengers believe that after the ATF prices have been cut, even that will translate into lower ticket prices. It doesn't seem the case as of now. Our sources have told NDTV Profit that while it is a welcome move that the OMCs have cut the ATF prices by ₹5, and now the ATF prices per litre in India on an average is ₹110 per litre. But if we calculate this in a kilolitre format, then we can clearly see that even right now, 1 kilolitre of ATF is over 1.10 lakh rupees. and this particular price is much higher than the pre-war levels. If we talk about the pre-war levels, at that time the ATF prices on an average were hovering between 1 lakh to 1.04 lakh rupees, but then we saw a sudden surge, and because of that sudden surge, the airlines ran into losses. So as of now, the airlines will not cut the ticket prices, and they are on a wait and watch mode as of now. But sources are telling us that in the next few days or next few weeks, if there is another ATF price revision, or if there is sudden drop in the global crude oil prices and the Saudi crack coming down, then we can definitely expect the airlines to think about something or the other. But as of now, the airlines don't intend to pass on the benefit of lower ticket prices to the passengers.
And just stay with us, Danish. We know that Delhi has unveiled an aggressive roadmap for faster EV adoption after the centre rolled out the EV Policy 2.0. So just tell us exactly what this policy is about and what benefits is it going to pass.
Well, the Delhi government today has officially published the new EV policy, which is called the Delhi EV Policy 2.0, and it will last till the 31st of March 2030. And in the next 4 years, the government's main intention is to have more and more EVs running on the road. And for this, the government will give incentives as well as certain scrappage benefits. So if certain people that want to trade in their old ICE three-wheeler, then they will have to buy a electric three-wheeler, and then only they'll get that subsidy, as well as they will get some more benefits. But if you look at from the enforcement point of view, the Delhi government had made it very much clear that from 1st January 2027, only electric three-wheelers will be registered in Delhi, and similarly from 2028, only electric two-wheelers can be registered in Delhi. And as far as the four-wheelers are concerned, for the first 1 lakh vehicles, the Delhi government will be giving subsidy up to 1 lakh rupees, but it is only for the first 1 lakh people that are willing to trade in their old ICE vehicle for an EV. On the other hand, the government also has very aggressive plans when it comes to expand the charging infrastructure in the city, and the government aims to have thousands and thousands of such charging points across the city. And for this, while the overall outlay of the scheme is 15,000 crore rupees, but 8,000 crore rupees have specially been earmarked for expanding the infrastructure. Besides this, in the Gazette notification, the Delhi government has also made it clear that OEMs have to ensure that a consistent supply of EVs towards Delhi is maintained, and there is no form of shortage. And in order to curb the range anxiety that usually users have, for that the government has also directed that at every dealership there should be at least 3 charging points, in which 2 should be for two-wheelers and three-wheelers, and 1 should be dedicated for the cars. So all in all, if we see, the Delhi government has set its side clear, and it believes that from 27-28, at least 95% of the new vehicles that will be being registered in Delhi, they will be electric.
Right. Thanks for breaking that down for us, Danish. But fewer sources are telling NDTV Profit that OMCs are unlikely to cut petrol and diesel prices immediately despite the softer crude. Sasa is now here with more details.
Right, despite softer global crude prices, consumers may have to wait a little longer for any cut in petrol and diesel rates. That's because sources tell us that OMCs are unlikely to reduce retail fuel prices immediately, as they are still recovering losses from the West Asia conflict. In May alone, OMCs reported cumulative losses of nearly rupees 1,000 crore a day, with under recoveries currently estimated at about 500 to 600 crore a day. Refineries are also processing high-cost crude purchased when prices had surged over $100 a barrel. This expensive inventory is also expected to last another 1 to 2 months, is what we are given to understand. Companies, in meantime, are also waiting for more clarity on the global crude price outlook before taking a call. According to S&P Global Energy, crude prices could climb to $80 to $90 a barrel in the second half of 2026, that is this year, as oil inventories continue to shrink globally after the supply disruptions linked to the West Asia conflict. Analysts also say that normalization of supplies could take up to a quarter or 2. Meanwhile, Naira Energy, which is a private player, has announced a 5 rupees per litre cut in petrol prices and 3 rupees per litre cut in diesel prices. However, state-run OMCs are not expected to match these reductions anytime soon.
Right, thanks for that, Sasa. But staying on the fuel impact, commercial cooking gas has become cheaper from today, offering much needed relief to restaurants, hotels, and other businesses. Now, oil marketing companies have reduced the price of a 19 kg commercial LPG cylinder by 183 rupees, marking the first cut this year after months of steep hikes triggered by supply disruptions and geopolitical tensions in West Asia. Now, in Delhi, the price has come down to 2,930 rupees per cylinder from 3,113 rupees. The reduction follows signs of easing fuel supply concerns after the Iran conflict. However, an important note is that there's still no relief for households as the price of the 14.2 kg domestic LPG cylinder remains unchanged. The government has clarified that it did not describe the E20 ethanol blending program as an experiment before the Supreme Court, calling such reports incorrect. The Apex Court has ordered status quo on ethanol allocation for 2025-26. Sentiment may remain weak for ethanol-linked sugar stocks. Sharad is here with more details.
Well, that's a pretty interesting take. Our government has categorically denied calling the E20 program an experiment in Supreme Court matter. Now, let me give you a perspective. What actually earlier happened, BPCL had contested this earlier order in the Karnataka High Court on the allocation to increase the ethanol for the 25-26. Also, the government stance looking at it, of course, this is from the attorney spokesperson, and they had stated about ethanol blending program being an ongoing experiment. But overall, what's the Supreme Court verdict coming like? That's important because the transfer petitions which were there, they have been status quo. They have maintained for the supply year 25-26. And if you look at more details, this is actually status quo for the supply allocation to the oil marketing companies by Karnataka High Court. Now, the government has clarified, and this is as per Press Information Bureau, any suggestion that the government has described this program E20, which I'm talking about, before Supreme Court is experiment is totally incorrect, and this does not represent the submissions made on behalf of Union of India. But what's the impact? OMC, it's largely neutral, a little bit of sentimentally negative impact coming in for sugar stocks, Trualt, BCL Industries and Gulshan Polyols. But remember, now the clarification has also come in and the government has denied it. That means the program remains on track.
Right, and staying with the ethanol push, sources say the government may cut broken rice allocation. The move could reshape ethanol feedstock dynamics going ahead. Let's get Rishabh in for more details.
Right. What we're picking up on this very crucial cabinet update is the fact that the broken rice allocation under the public distribution system or the ration system, that might be changed from about 25 to 10%, so that 15% delta that the government is now getting worth about 90 lakh tons of broken rice, that could now be diverted to ethanol feedstock. And this is, of course, for more and more ethanol blending that the government is introducing the sort of flex fuels that are coming in, moving away from fossil fuels and more towards sort of domestic reliance on biofuels is what the government's focus is also on. Now, as a result of this 15% broken rice also moving down, there were questions around the food security concerns that would come up, and the government has assured that will remain protected no matter what happens. So that's what we're picking up. The cabinet briefing is at 3 p.m. and we can expect some more announcements then as well.
Mahindra & Mahindra's tractor business is once again at the mercy of the monsoon. Historical data shows that in years of weak rainfall, tractor demand tends to soften, with M&M volumes declining. Let's go across to Puneet now for a deep dive into monsoon and tractor sales impact.
The latest news being that for the month of June, the sales has been quite strong for the company. But when you look at the historical annual sales data points, 40% of sales for the tractor business for M&M happen in the first 4 months. So the monsoons are really crucial. When you look at the last 6 years of data of rainfall, in only 2 of the last 6 years was the rainfall percentage of long-term average below 100%. So that was in calendar year 21 and calendar year 23. But when you look at the sales data point, now they of course do the sales data point in terms of the financial year aspect. M&M's auto sales largely were flat in both of those years. And when you look at the numbers, here is where it gets interesting, because in both those years when you have, so calendar year 21 will be effectively FY22. This is the green pillar you have to look at. Very marginal growth compared to FY21. And the last one was in calendar year 23. So you have to look at FY24 numbers. And here is where you see the data. So those 2 years when rainfall was below 100% of long percentage average is where you saw that impact on tractor sales. Last year was at about 108%, and you saw very stupendous growth. This was also led by the GST rate cuts in the second half. But this is a very important data point that we've put out. Also in terms of, as you've seen as well, now this data of course talks about the IMD expectations for El Nino. Now June, the expectation of El Nino is weak, but the intensity increases going into September. Now this time around, when you look at the September data, you have to also watch out for last year. Because of the GST rate cuts, a lot of the sales were also incrementally slower in the first half. But the only expectation of El Nino starts from the September time onwards, while for July it's weak to moderate, and a similar one for August as well. What you are now looking out for, more importantly, Nomura has pointed out to monitor the way El Nino is of course progressing. Also watch out for the most important part is expected that for the whole of monsoon, the El Nino impact is expected to be weaker to moderate at this point of time. So hence more of a back-ended impact. And finally, India has experienced one of its driest Junes. You have to watch out for the auto sales numbers. Some of them we are already seeing a very strong traction coming in, especially on the commercial vehicle and the tractor side of things. But as I mentioned, a very important thing to note is that the 40% of sales happen in the first 4 months. Watch out for impact in July through going forward. The other factor that the projections have largely been at this point of time holding on, but M&M June sales for tractors were slightly lower than estimates as well. So you're seeing already the impact of driest June, and H2 will have that high base effect. But M&M's guidance currently is a mid to single digit growth. Last year it was 20%, but this year, because of the high base of last year, it's something to watch out for.
Right, so clearly the monsoons continue to be an important factor for the markets. But moving on, the Union Cabinet has approved 2 major highway infrastructure projects worth over 14,100 crore rupees. Now, the first is a 6,970 crore rupees 6-lane tunnel in Delhi that will connect Dwarka Expressway to on NH8 to Vasant Kunj. The project aims to ease congestion and improve connectivity to the airport and South Delhi. The cabinet also cleared a 7,145 rupee crore 4-lane access-controlled highway connecting Kanpur and Kabrai in Uttar Pradesh. Listen into Union Minister Ashwini Vaishnav's comments on this.
पहला प्रोजेक्ट 6-लेन द्वारका टनल, ये दिल्ली के लिए एक बहुत बड़ा वरदान साबित होगी. 8 किलोमीटर्स की ये टनल एक तरीके से बहुत लंबे समय से जो डिमांड थी, आप सब जानते हैं एयरपोर्ट के पास में जो शिवजी की मूर्ति है, शिवजी की मूर्ति वाला इंटरचेंज है, उस इंटरचेंज से टनल नीचे चालू होगी और वहां से सीधा वसंत कुंज के पास आएगी. आगे आके फिर ये जुड़ेगी एम्स के पास. ये शिव मूर्ति देख रहे हैं आप, शिव मूर्ति लिखा हुआ है इंदिरा, अपना जो एयरपोर्ट है, एयरपोर्ट से नेशनल हाईवे पे, वहां से सीधा वसंत कुंज और उसके आगे नेल्सन मंडेला मार्ग और आगे जाके फिर जो बारापुला का जो ब्रिज है, उस ब्रिज तक पूरा कनेक्ट हो जाती है.
Indigo has introduced a new economy fare category called Indigo Light. The new option is meant for passengers traveling with cabin baggage only and will be available exclusively through the airline's direct booking channels. Bookings open from today, while the new fare will be available for travel starting from July 15th. And Japan's Prime Minister Sanae Takaichi will visit New Delhi for her first official visit to India, with both sides set to unveil an ambitious roadmap for the next decade of bilateral cooperation. From strengthening semiconductor supply chains and rare earth partnerships to expanding maritime security and boosting investment, the summit is expected to deepen one of Asia's most significant strategic relationships. Let's take a look at this report on this.
Japan's Prime Minister Sanae Takaichi touches down in New Delhi in the next few hours, initiating her first official state visit to India. Tight security around Japan's ongoing parliamentary diet session shifted the entire 3-day itinerary exclusively to the capital, removing a previously planned leg in Assam's Guwahati. The core bilateral meetings unfold on the 2nd of July featuring intensive strategic talks and high-level economic forums, followed by her departure back to Tokyo on the 3rd of July. At the very center of this whirlwind itinerary sits the Japan-India joint vision for the next decade. As both leaders convene at Hyderabad House, 5 distinct strategic pillars dominate this summit landscape. Both nations will sign a landmark joint declaration to actively resist regional economic coercion. Leaders will formalize deep industrial cooperation to secure critical semiconductor manufacturing pipelines. New agreements will diversify and secure the supply of essential rare earth minerals. The summit will expand joint naval drills to safeguard vital Indo-Pacific shipping lines. A massive 50-member business delegation aims to aggressively bridge the bilateral trade gap. The 50-member corporate delegation accompanies Prime Minister Takaichi, bringing executives from Suzuki Motors, Toyota Shusho, and Itochu Corporation to New Delhi. This heavily commercialized presence builds directly upon decades of foundational history. Official diplomatic ties established back in 1952 have anchored Asian geopolitical stability for generations. Japanese bullet train technology and metro funding have completely revolutionized Indian public infrastructure. A deep ancient Buddhist connect forms the unbreakable civilizational foundation between both the nations. Modern defense cooperation has evolved rapidly through the powerful 4-nation Quad security framework. As New Delhi opens its doors, the summit looks to cement a special strategic and global partnership that balances commercial trade with a unified regional security front.
Right, and during their con call, Maruti Suzuki's management responded to NDTV Profit's question on sales. Let's have a listen to that.
So your small car momentum is seen visibly continuing in this particular month as well. So just wanted to understand what is the current feedback on the ground, because you've seen some fuel price hike, but is that seeing that there's no constraint on demand as of now?
First of all, you're coming to, I think what you're talking about is the production part of it. As I told you, you have seen that we have done the ever highest number in this quarter. If we see the number domestic, OEM plus exports, that clearly shows that we have ramped up our production capacity. However, at the same time, I'd like to bring your notice that in the month of June, we used to always have a block shutdown, maintenance shutdown for 1 week. So obviously for 1 week, we didn't have any productions with us. And after the production, the lines start, it takes some time to ramp up also. So which will not be the problem in the next month for the month of July. But despite that also, we have done 150,000 in the month of June.
That's all the time we've had on this edition of Profit 360. But stay tuned to NDTV Profit for more news and updates.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। PMark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, where I get you very interesting companies, interesting stories, and maybe interesting alpha as well. But today there's also a very interesting company, but try to guess it. I'm sure you'll try to guess it by the end of the hints. It's a Thane-based EPC player. I'll give you more hints. Try to guess it. The stock is up 47% from March lows itself. Third hint I would like to give you, and that is they recently won a 3,500 crore order from Maharashtra state government. Last important one is of course the listing on September 3, 2025, and it's of course backed by market legends Mukul Agarwal and Ashish Kacholia. I'm sure you must be guessing it by now which company I'm talking about. The company in focus is Vikran Engineering, and yes, the company is coming for the second time in KYC after 7 odd months. So we need to see how much of that change has happened since the last time the company came, and why are we calling this company? Of course, the major reason for this is almost a 3,500 crore order coming in. Remember, the overall book is only around 5,000, 6,000 crores without this order. So this becomes very important to start our conversation with. The growth outlook, especially on the data center front, what new things the company is trying, we need to figure that out. Also important questions would be the revenue and the EBITDA outlook for the longer term. The new order win, how much incremental benefit starts coming in, order book guidance across the key verticals. They have 3 to 4 important verticals, which I'll explain you in some time. And also the execution and the raw material costing. Does that hamper the Q1 numbers? We have seen that in the industry. It's happening. Asset light model versus pure. What's the story here? We need to understand that, and the company has of course recently listed, so we need to figure that out as well. Rakesh Markhedkar, he's the CMD at Vikran Engineering. He will be answering all the questions. But let's try to understand about the company. ये company करती क्या है? EPC player, so it's definitely there. They are diversified, play in that. But which segments do they work in? That's what we need to understand. But before we start, EPC means engineering, procurement, construction. This is for the folks who are tracking the sector for the first time. You can note it down and you make it most simplified version for you so that you understand the entire story. Now the areas they work in, there is power, water, rail, electrification, solar EPC and smart metering. I explained you about data center angle also. I'll come to that in some while. They've completed 45 projects across 14 states. And the next important thing is their supply chain. They have of 3,500 plus vendors. They have stressed about the asset light business also, and having their in-house engineering and design facility. Current order book, including this larger order book, stands at 9,000 crore rupees, and that's a big jump coming in from the last time they had put in the exchange filings. Currently active in 16 states with 190 plus projects and store locations are there. So this is the entire story we are getting about the company, but it's backed by large and big investors in the market. This includes, of course, Ashish Kacholia and Mukul Agrawal as well. So there's a good backing coming in. The order announcement, that is very much important. This is almost 3,520 crore worth of order coming in. It's an EPC order, but of course solar module supply is also there. Let's get into more details about this order win. This is of course from Maharashtra state government, and there is a revenue potential also at play. We'd like to get in more details about this order, and that's there on your screen. The revenue potential, let's look at that number as well, as this is of course spread across the next 25 years. This is the 961 megawatt project which is there. And overall, let's just get in the final numbers and then we move ahead for the other segment as well. This is the number, 550 crores rupees. That's the projected revenue coming in, and it's a very high EBITDA margin product if you are tracking this theme as well. But moving on from the order announcements, let's understand how the segment-wise order book looks like. And largely, solar is 49% of that order book coming in. And I had mentioned you that there are other sectors also which the company follows. This includes the power T&D, which is transmission and distribution. There is water and railway, but of course these are on the lower side. This is how the segment looks if you do the order book breakup. But there is also the B2G element here. PSUs and government, I have separated that. That's what the company has given. PSUs have 18% of the order book coming in, and the government, that stands at roughly 31%. But they have stated that the private sector is still the majority, 51% odd. So that's decent kind of exposure, and it's evenly balanced, it seems like. But look at the key clienteles. Who are the key clienteles for it? We have NTPC, Power Grid, Indian Railways and SGV, and these are the key clients which the company has. Of course, they have other clients as well, so that means there is an esteemed client list as well. But what we work for the company, let's talk about that. Data center theme is in focus. That is what the street is looking at. Second important thing is the large order win announcements have started coming in post its listing, so this may augur well for the company. Also, they are moving towards the asset light model, which they had mentioned. The street needs some extra time for that, so we'll be focusing on that as well. Also, another important reason is the strong promoter experience, and I'll give you all the history about the promoter and his connections which are there in the ecosystem, and an esteemed client base. These are the reasons why Vikrant Engineering, it might work positively, factors playing in for the company. But what may not work, and the industry in which they are in, execution risk will always be there. Of course, there's a little bit of monsoon impact also. FIDI sell-off has been coming in post its IPO coming in, the lock-in expiry coming in. So sell-off is definitely there in the demand supply issues, and high working capital model is also there at times. If you just see the numbers, you'll understand it. But of course, pros are weighing over cons right now after the last 6 months. What has changed? But what has not changed are the KYC ratings where we judge a company, and a minor adjustment is definitely there, because instead of return ratios, it's good to actually get a company and capture them in the order book because of the inherent nature of the business. Also the usual, so the shareholding pattern, street cred, how much money has been made since IPO or during this period. Remember, the period is quite short, so take things with a pinch of salt. Valuations and outlook is also something which will get the company in. Let's start with the income statement. What's happening here in income statement? Largely 3-year CAGR numbers we have taken, and for a EPC company, this is a pretty decent number. Anything above 15-20% CAGR shows a little bit of stability, and they have actually put their concentration risk, which is there between government and private, on an evenly balanced space. So net, let's just pull out the margins also in the Q4 numbers to show you how things have moved. A little bit of dip is there in the margins, especially in the year-on-year basis, but most of the numbers, overall PAT and even revenue, seems to do a good job. Margins, you see, largely there was an uptick coming in, but now a little bit of, you could say an impact coming in. It's around 14% odd. We'll try to ask the management what would be the long-term average margins looking like, and is there any hit to be taken in the first quarter or not. But net prima facie on a long-term basis, it's a strong thumbs up as well. Balance sheet, let's get in that as well. And balance sheet, it has been managed properly. And remember the higher number of working capital which was there, that was reduced in the IPO. That's why the proceeds were also taken in, and you can see a decent capitalization is there. Cash flows of almost cash bank balance, sorry, is of 220 crore rupees, and it's evenly managed right now also. So balance sheet also seems strong, so I've given a thumbs up. Cash flow, remember the business model is such that there might be lumpiness also, especially if you're having a B2G exposure in this industry. तो कभी पैसा आता है तो कभी पैसा डिले होता है तो कभी प्रोजेक्ट्स ही नहीं आते हैं. These are the problems which are there, and that is why I want to keep this neutral, even though the net cash flows have improved, but we need to give it more time to judge this company and even the business model. So let's take things with a pinch of salt. I'm going to give this just a neutral rating. Order wins, this is important.